least of which is the announcement on infrastructure lending by non-banking financial companies and the risk weights expected to come down for good infrastructure projects. So the immediate impact is visible for something like a PFC, REC or IREDA. Of course, IREDA, if we can pull up those charts and just see how those stocks are doing, REC is up about 2.6%, PFC also up and about, and IREDA cooling off just a tad bit. But you see that spike around when the announcement was made. These three stocks would be in focus. By the way, IREDA also up and about because the numbers for the second quarter came through and they have a sanctioned loan increased of over 80% in the second quarter, which is quite the run rate that they have established. But let's not get into too many more details. Let's start with the questions that you have for us, and there are two ways in which you can get in touch with us. One is the number on the top of the screen and one is the number where you can call us. And the first question I will take today is from Nagaraju, who's writing about Sri Lotus Developers. It's a stock in focus on account of two projects that they have announced in Mumbai, in Vikhroli and in Andheri, a gross development value of 1,000 crore rupees, and they've got another project that they will launch in Bandra in the third quarter. We've got Nirav Ashar as well as Vaishali Parekh joining us today. Nirav, I'll come to you with the first question. Sri Lotus Developers, relatively new listing, and thanks so much to the both of you as always for taking the time. Nirav, what do you make of this? Would you buy into this right now?
Good morning and thank you for the invite. Yes, it's a very strong promoter group, a very strong reputation, and they have announced projects in very prestigious areas. So I think definitely it's a buy at this point of time.
And would you have any targets? Would you be comfortable with indicating what you think the prospects are?
I think one can easily expect a 20-25% upside in the next 1 year.
Okay, so that's the view on Sri Lotus Developers that we are looking at. The stock currently up around 1.4%. But with that, let's go to the first caller of the day. Udit from Mumbai calls us. Hi Udit, how can we help you today?
Udit, can you hear us? Okay, we've lost Udit, so let's take his question anyway.
Yeah,
hello.
Udit, yeah, please go ahead, Udit.
At the outset, Alex, wish you all festive greetings of the festive season. You all look gorgeous, I must say.
Thank you. That's very kind of you. Including me. I look gorgeous as well.
Yeah, you look gorgeous. All of you, I said. I think you lost out the all thing, I think. Not only you, I said all of you.
No, I was wondering whether you were including me in the all, because that's not normally something that happens. But Udit, please, festive greetings to you as well and your family.
You always do. So that's the reason maybe I left it all out of you and I did the same thing. But jokes apart, my question is on Polyplex Corporation. I have 50 shares, way too high price of 1750. I just need to know at 1050, can I average it out? How does it look fundamentally if I do that?
Okay, let me check if Nirav has a view on this one in the first place. Polyplex Corporation, Nirav, like he said, he's bought at 1750 elevated levels. What should he do right now?
Well, I think this is a kind of a cyclical business, and when the tide turns, then definitely one can expect a very strong up moves from the current levels. So the advice is to hold at this point of time and not add anything at this point of time.
Okay, so that's the view for Polyplex Corporation that we have for you. Now the next question is from Govind, writing to us from Hyderabad. He's asking whether this is the right time to enter Elecon Engineering, and this is for a longer term investment that he's considering, has a investment value of around 2 lakhs. So Nirav, let me come back to you on this one. If we are seeing in terms of what's happening with the stock price, it's down about 15% or so. So I'll take the technical as well as the fundamental view for this one.
Shall I start first?
Yeah, please go ahead.
Yeah, so I think it's an excellent company. A couple of divisions, gearboxes, they're doing very well in the gearbox segment and the material handling equipment. And I think last couple of quarters have been slightly disappointing as far as the gearbox segment is concerned. But I think they can make a strong comeback. So it's an ideal time to accumulate this stock with a medium to long term horizon.
Okay, and Vaishali, your view?
Very good morning. So I think my view definitely matches with Neerav's because technically also if I'm looking at the long-term chart, it is in a good trend and we've seen a good corrective move in the recent past. So this at this juncture, I think it definitely makes a good level to add more if one needs to, or probably a fresh buy also, because we've seen a good consolidation at 540 and from there on we are seeing a gradual up move coming in. So although going well, I think this can retest the levels of 640 to 800 in times to come. So it's a buy or a hold from my side.
Okay. All right. An interesting question, Vaishali, coming your way. And this is from Satyan. Satyan is festive greetings to all of you as well. He's writing in from Thrissur. He says that he's got a few stocks where stop loss is being hit or close to being hit. And so he expects that funds will be available to him for deployment for a period of 1 to 9 months. He's looking for 3 ideas where stocks might have been beaten down in the recent past, where a bottom might have been hit, which is providing a good opportunity for the short to medium term. Do you spot any like that?
So, well, there are a few stocks, according to me, which has come to a good support level. So, one of them is Max Health that I'm looking at, because I am seeing that this stock has already got a good past data, and right now, after a good corrective move, it is just consolidating at these levels. So, I would say, well, 1100 to 1080 would act as a good support level, and this can go towards, well, if in 1 to 9 months is the horizon, I can look at a target of 1350 to 1400. And the other stock to my liking from here on is Adani Port also, because that too has shown a good uptrend in the past, and right now it is just consolidating and also in the process of higher bottom formation, which implies that there is good strength at this level. So 1360, 1380 should be taken as a support and accumulate the stock for a target of 1550 to 1600.
Got it. Okay. All right, so a few interesting ideas with everybody tuning in can utilize. By the way, we spoke about Adani Ports, standard disclaimer. This is NDTV Profit, part of the NDTV group, which also belongs to the Adani group. Ramesh is calling us from Mumbai. Ramesh, hi, thanks so much for calling us. How can we help you today? Oh, we've lost him. But take a look at that, right? Ramesh has profits of 1.42 lakh in Mazagon Dock, and there's quite a bit that has emerged in the recent past on shipbuilding, infrastructure status, quite a bit with regard to the indigenization of this very crucial sector. I'll go to Neerav on this one. Neerav, if you bought at levels of 2525, which is an attractive level in retrospect, would you hold on? Would you double down?
I think it makes sense to hold on to the stock.
Okay. Anything that you want to say with regard to the recent developments? Are you at all concerned that the valuations might be a little bit pricey at this point?
No, I think most of these shipbuilding companies are trading at trailing 12 months price to earning multiples of 50 to 53 times, which if I were to take a growth of around 30%, comes down to around 34, 35 times FY27. So I think that should give some amount of comfort. It looks slightly expensive, but I think still considering the prospects does make sense.
Right. Okay. We've got a next caller. Rahul is calling us from Chandigarh. Rahul, very good morning to you. How can we help you today?
Yes, good morning, sir. I have 500 shares of Lumax Auto Technology.
Right.
And I have my buying price was 1190 rupees, 1190.
Okay.
So from a technical point of view, I just wanted to know whether I can remain in this trade for some more time.
Sure. And when did you buy in?
Hardly, I think 3-4 days back.
3-4 days back, and you've made quite substantial gains of 50,000 rupees. Did you have a target in mind, Rahul, when you bought?
Actually, I was just going with the ride, so I'm not sure that where to stop.
Okay.
So that's why.
The question is, are you planning to buy something tomorrow on Dussehra? All right, but let me get you an answer from Vaishali. Vaishali, And this is the story, right, of the recent times. There's counters which can give you absolutely stellar returns in a very short period of time. The question is, where do you book out? Because you can lose out a little bit of the rally and there's opportunity cost. But so therefore, can we suggest a target and a stop loss for him?
So I would say the stock is definitely in a very strong uptrend. The bias is still positive, but I think at this juncture, since I'm looking at the monthly chart also, it's too overbought. So keep 1200 as a stop loss, and I think one can look for a target of 1350 to 1380. That's how I would handle the stock.
Like I said at the start, it's a bit of a curtailed session today, but we'll try and fit as many questions as possible over the course of the next 2 minutes. It is time for the rapid fire round. The first question is on Praj Industries. A period of 1 year is being sought and the stock has been bought at 425, which is elevated levels. Vaishali, should Venkatramanan hold on?
I would say exit.
Okay, the next question is about Spandana Spurti. Ramesh is writing to us. He's bought about 500 shares at a price of 750. Nirav, your view?
Exit.
Urban Company. Giri wants to know, would you accumulate at this price? Nirav, any view?
Accumulate.
Now, the next question is regarding DLF. You know, with the current monetary policy in mind, he's bought the shares. Whether is it good to hold or accumulate? Vaishali, your view?
Hold with a stop loss of 700 for a target of 760 to start with.
Okay, Gem Aromatic. Allotment in IPO has been received by Bharat. Should he hold on? Nirav, any view?
Exit.
Next question is from KV Sasidharan. He's holding shares of Infosys, wants to understand whether he should continue to hold or sell. Nirav, your view?
Emphasis.
Infosys.
Hold.
Okay. Tata Motors, Tarun Agarwal wants to know whether to buy or not. Nirav, view on the fundamentals?
Tata Motors, buy.
Thomas holds about 1,000 shares of IRFC. This is at a price of 130. What should he do now? That's the question. Vaishali, your view?
Continue holding.
Cummins India. What is the best entry level if you've got a short-term view? Raju wants to know. Vaishali?
Well, wait for some more corrective move to take place and accumulate at around 3,800 to 3,750.
Vaishali, the next question for you again. Now, this is Raghu writing to us from Hyderabad, wants to understand whether it's a good time to hold ONGC.
ONGC hold.
Okay. Lotus Lab is the name of the counter. A view is being sought. Vaishali, would you buy at these levels?
Well, Lotus Lab 863, yes, not a bad deal. Buy with a stop loss of 820.
Okay, got it. Thank you so much to the both of you for taking the time, and wish you and your families and your teams a very, very happy Dussehra in advance, and see you soon.
The same.
All right, well, that brings us to the end of this edition of Ask Profit. Of course, our programming continues through the day, but until day after tomorrow, have a great Dussehra, and thanks so much for tuning in. From Anushi and myself and the team that put the show together, thank you so much for watching, and this is NDTV Profit.
सर, बिजली का बिल आया है। सोलर पैनल लगवाने के बाद भी
अमाउंट बोलना है
60 लाख।
60 लाख? अरे इतने में तो
लग्जरी कार आ जाती। शौक मत हो, सात्विक के सोलर पैनल लगाओ और करो हर शौक पूरा। चाहे तो नई फैक्ट्री लगा लेना। घर हो या फैक्ट्री, बोलता है कार्तिक, सोलर मतलब सात्विक। खराब मौसम में भी काम करता है।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
सर बिजली का बिल आया है। सोलर पैनल लगवाने के बाद भी
अमाउंट बोलना है यार।
60 लाख।
60 लाख? अरे इतने में तो
लग्जरी कार आ जाती, शौक मत हो। सात्विक के सोलर पैनल लगाओ और करो हर शौक पूरा। चाहे तो नई फैक्ट्री लगा लेना। हाँ? घर हो या फैक्ट्री, बोलता है कार्तिक, सोलर मतलब सात्विक। खराब मौसम में भी काम करता है।
Nikhil, first of all, thank you for coming in and answering to shareholders and investors. I think that's very, very positive because management doesn't usually want to come and talk about when these things happen. So I'm glad that you're doing that.
This was a legacy issue. It's been overhanging over the company for the last 10 years. And we are glad that it is, in whichever way it is completed and disposed of. Though there is no financial impact on the company, the shareholders it concerns, and that's why we are here to clarify and to give a clarification that it doesn't impact the company's day-to-day workings. It doesn't impact our growth plans. It is of the past of 2015 to 21. The compliance since then we have been up to date. We haven't got any compliance issues since 2021 till date.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी, सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Real estate has been the talk of the town, and the southern market especially taking into consideration what's happening with the IT sector, because the southern market, especially Bangalore, IT sector accounts for nearly 60% of the real estate sales. Welcome to KYC. Today we're going to talk about Brigade Enterprises I'm Hiral Dadia, and with me is Anushi Vakharia, and a happy Dussehra to all the viewers as well. First up, why are we talking to a Brigade Enterprises? Now, this is because it's coming in at a time where they're signing GDVs in the city of Bangalore. And what is that impact of the macro headwinds of the IT business going to be on their business? That's the first question that we ask the management. This other things that we want to know from them is the guidance that the company has given, which is around 15 to 20% in terms of the pre-sales growth in FY26. Will that be met, taking all of these hindrances into consideration? And the downside risks that you're talking about in FY26, if the guidance will not be met, if there are any risks that the management will be looking at.
Well, Hiral, real estate, residential has always been the focus, but let's also understand what's the kind of leasing trends that we are seeing in the commercial business, because that's one area that the company is also expanding strongly on. So that is another area that we are focusing on. Other than that, a plan for a potential REIT is something that we should be watching out for to monetize its commercial portfolio. So commercial is also the play that we are watching out for Brigade Enterprises. Apart from that, what we should be also seeing is how the new launches, collection growth, and the new geographic forays are also going for the business. Now, Bengaluru is the stronger market, but the company is also expanding its presence in other markets like Hyderabad as well. So that also remains as a key question.
Absolutely. Now let's understand all about the company. Brigade Enterprises, they are developers who've been established since 1986. They've actually constructed more than 300 plus buildings and 100 plus million square feet of space that has been delivered. In terms of the business segments as well, they are into multiple segments over here. We're talking about residential, commercial, hospitality and retail. Commercial is something which is really picking up in a strong way, Anushi, for the company.
Absolutely. In fact, if you look at about hospitality also, they just came out with an IPO a few months back. So that is another area of focus. But let's talk about the project pipeline, which is there. 26 million square feet is kind of the ongoing projects that are on the cards for Brigade Enterprises. This also includes about 16 million of upcoming launches as well. And the main key land bank, if you look at that, adds to about 587 acres of land bank, with Bengaluru having about 3/4 of it, about 363 acres is from Bengaluru that we are seeing. The next other destinations which are in focus includes the likes of Chennai, Hyderabad, Kochi as well. So, these are particular areas wherein we are seeing Brigade Enterprises focusing on more.
Right. Now, let's move on to the project area, which is the product mix that we're talking about. Between residential, commercial, hospitality and the mixed development, 75% of the revenues come in from residential. Commercial is 18%. Probably that is something that could pick up, but taking the headwinds into consideration when you talk about IT as a sector, whether that will expand or not at this current juncture is what we have to see. Hospitality and mixed development is in that range of almost around 4% and 3%, so less than 10% exposure to both these aspects. So that's what the project area and the product mix is looking like. But let's shift focus in terms of the rating parameters that we're going to talk about today. First up, the income statement check is what we will do. Balance sheet, cash flow, return ratios, the shareholding pattern, street credentials, valuation picture, and the street coverage along with the outlook is what NDTV Profit will be dissecting on KYC for a Brigade Enterprises. But first up, let's look at the income statement. Now, it's very interesting to see the kind of numbers that the company has posted and the kind of growth that they've seen in the key operational matrix as well. Let's start with the pre-sales number. You're talking about 4,100 odd crores, which did come in FY23. From there, it's nearly doubled to around 4,850 odd crores in FY25. So the pre-sales number is very strong. If you talk about growth, slight moderation in FY26 as compared to the previous 2 years. And if you talk about the first quarter, that is also slightly lower. Collections also have been very strong. The trajectory has been upwards. And if you talk about the overall growth in the collections aspect as well, it was down in FY24, but again it started to pick up in FY25, where we've seen a growth of around 23% that has come in there. If you talk about the operational trends as well, now in overall your realizations have been flat in the first year, which is FY23. but at 40% growth on realizations is what the company has seen in FY25. So that is very positive from a realizations aspect. Moving on, if you talk about the other matrix from the net area sales to your net sales, your net area sales actually on a sequential basis did see a degrowth of 17%. Net sales was absolutely kind of flat. Realizations saw good growth. In fact, the management has been very confident to maintain their average realization trend as well. And collection was decent at around 8%. Overall, if you talk about the income statement from FY24-25 and the 3-year CAGR, a 20 to 26% CAGR on revenue and EBITDA is pretty good. Margins, I mean, you don't really want to look at it, but 26-30 to 30% is the kind of range that you're looking at. So overall, the numbers are very strong in terms of past data. It was mainly the first quarter which did show a blip, and usually the trend is that the first quarter for a real estate company does come out to be slightly weak, and hence a thumbs up.
Right, it's the second half which is in focus in terms of how the upcoming launches are going to shape up for the business, and even in terms of income statement for most of these real estate companies. If you're looking at it, it's a longer term picture that you need to have in mind, considering the lumpiness of the business and recognizing their revenue, since the real estate businesses project their revenue in terms of percentage completion or project completion method. So do keep that on your mind as well. But moving to the second metric, balance sheet is something that you should be seeing. Now, if you are looking at the book value, now that has seen a significant uptick in terms of whether FY25 numbers are concerned. 5,638 crore is the kind of value that we are looking at, while borrowings in the last 2 fiscals have remained in the similar lines of around 5,000 crore or so. Cash in bank, a significant uptick in FY25 is what we are seeing in comparison with borrowing. That provides comfortable levels for the business going forward as well. Even the debt to equity levels, if we are seeing, has more or less remained under the company's guidance level that they have given so far. So we've given this one a thumbs up as well. But Hiral, cash flows.
Interesting numbers when you talk about where the cash flows go. Now, if you have to look at the cash flow from operations, clearly from a 966 crores, it's remained stable at 995 crores. There was a blip in FY24, but it's come up. EBITDA has seen a steady growth, and that is what is a positive. On the back of which, if you see in terms of the net cash flows, from a 1 crore number in FY23, it's actually gone to 4 digits, 1,265 odd crores. So that positioning with regards to the net cash flow is concerned is very positive, and that's the reason why we give it a thumbs up here.
Okay, now coming to the fourth metric is return ratios that we are looking at. Return on equity and ROC, if we see significant improvement in terms of where the numbers were from FY22 to FY25, from what was a 4% of a mark from in FY22 with both of these ratios that we are looking at. We've seen this moving to double digit for ROE in FY25. 13% is the kind of mark that we are looking at, while for ROC we are seeing this at 9% in comparison with FY22. From 24-25 also we've seen similar levels, not much of an uptick over here, but this is something that we should continue to keep a track of. So hence for now we have given this one a neutral rating, if considering that this does see above 15% of a weightage or so is something that we should be watching out for Brigade Enterprises. But shareholding pattern next.
Okay, so that's with regards to where the shareholding pattern goes. Now let's look at the promoters. Now promoters have slightly gone down. The public shareholding has gone down, but it's the FIs which have actually increased stake. Your DIIs have also seen a marginal blip, but on the back of that FI increase, which is nearly around 5 to 6% uptick that has come in, it's a thumbs up there because everything else has kind of remained pretty stable.
While for street cred, if you are looking at, after the shareholding, it's not done so well in terms of how the 1 year stock performance is concerned. In fact, we've seen correction of more than 37% or so in just this 1 year period. Even in the last 6 months, 1 month, if we take the investor performance in consideration, about 4 to 7% is the kind of downtick that we are looking at. Now, this is against the 5-year performance wherein the stock has seen about a 5 times of growth. But, in terms of what's happening with the real estate sector, last year also FY25, there were approval challenges, there were regulatory issues, launch pipeline slowing down is something that has weighed in investors' mind is also that is something that we are seeing. So in terms of stock performance, we have given this a thumbs down. But coming to the analyst recommendation, here is a positive view that we are looking at, right, Hiral? Considering that there are about 13 buy calls in this particular counter, while 0 hold and 1 sell rating now, which brings the overall return potential potential to about 45%. So despite the kind of correction that we've seen for this particular stock, analysts continue to remain bullish and are seeing a 45% of an uptick. So a thumbs up is something that we've given for this one.
And that's really encouraging, right? 13 buys, 45% upside from the current market price, and that probably tells you the story of what analysts are waiting out for. So let's look at the outlook from here on. A pretty neutral one, because if you're talking about FY26, the management is actually targeting a double-digit pre-sales growth. Yes, there could be hiccups that could be coming in the second part of the year or from the third quarter onwards as well. And if that happens, the guidance that they've given for pre-sales could be delayed. That's the concerning area that we should watch out for. Realizations are expected to stay at around 10,000 rupees per square feet. So that will be a slight downtick from the previous year if you have to actually look at what they got in FY25. In terms of upcoming launches, 13 million square feet is what they're planning to launch in the next 4 quarters. They have multiple projects in Bangalore, Chennai, Hyderabad and Mysore. And if you're talking about their capex plan, capex balance of 800 odd crores is what they're sitting on as of June 2025. So pretty neutral outlook is what we're looking at right now, and hence a neutral rating. So let's quickly look at the final performance. If you have to rate the company on 8, 3 parameters which are a thumbs up over here. Your return ratios is neutral. On the other side, if you have to look at shareholding valuations, again, it's a thumbs up. It's the street credentials, which is a down, and the coverage and outlook is neutral, which comes up to a 6 on 8, which is a very good rating, on a KYC for a Brigade Enterprises so far. But on the back of this, let's welcome in the management as well, who will be talking to us, what is in store from here on. We have Mr. Jaishankar, who joins in. Welcome to the show, Mr. Jaishankar. Always a pleasure. Who is the executive chairman at Brigade Group. First up, you've signed 2, joint development agreements in Bangalore. This is worth nearly 3,600 odd crores. What are the kind of timelines and other details that you have for us?
See, the first one is in Banashankari, Bangalore South, is in a very prime residential area. So where we intend building about 1 million square feet of residential space, somewhere in the range of anywhere between 12 to 13,000 or even more per square foot. And it should, right now, it should happen in FY27. FY27 it should happen. The other one is another joint development for about 10.5 acres in Bangalore East, which is again a prime area sought after by IT professionals. There we will be building up to 2.5 to 2.7 million square feet. So which will also have a GDV of 2,500 crores and upwards.
So Jaishankar, also want to understand, the timing is interesting across the top cities. Now, Bengaluru is one of the key cities which has seen highest dips in terms of whether units sold are there in H1. In Q1, you also recorded about a 17% dip. What is leading to this? Just want to understand that.
It is a combination of 2-3 reasons, I would say. A lot was to do with project launches, not just for Brigade, for across the sector. There was substantial delay in launch of new projects based on approvals due to a variety of reasons, change of government and the restructuring of Bangalore Brihat Mahanagara Palike, what is equivalent to BMC, and now it has been divided into 5 corporations under a new name called Greater Bangalore Authority. So with the result, there has been a disruption in approval status, and at the same time, FY25 saw a very good growth in real estate. In FY26, there is, I think, it is more of stability than for further growth. Primarily because the geopolitical situation is not that great. Particularly the last 7-8 months after the change of government change of president in United States, there is a lot of uncertainty, disruption, change of policies. with all that had some uncertainty and a bit of negativity.
Okay, so taking this aspect into consideration, is the headwind behind us? Because you're talking about headwinds that are coming in from IT companies as well, with the various macro issues they're facing. How are you looking at that aspect, and are you seeing concerns, or is there resilience?
No, it is certainly resilient, but probably clients may take a little bit longer for decision making. There is the situation is, as you rightly mentioned, it is a bit fluid, but there are various schools of thought on the impact of H1B policy changes or visa policy changes. So some people feel it can ultimately have a positive impact on Bangalore. In fact, every time there is a global crisis, the IT sector in India has always been the beneficiary. Whether it is Y2K, whether it is global financial crisis, or subsequently also the global capability centers, what is generally referred to as the GCCs. There are more of them are entering India and Bangalore in particular. And as far as AI is concerned, I think there is some amount of disruption can be expected. At the same time, the low-cost work has like call centers, etc., have almost disappeared from Bangalore and many parts of India. It is the shared services which are still there, but they are also more in the nature of GCCs in a lot of cases. So I don't expect, because of availability of huge talent, and also they're so well established here, it is impossible to think of any major impact.
Okay, management also targets a 15 to 20% of a pre-sales growth. Now, do you plan to sustain the sales guidance? Along with that, how realizations are expected to be?
So I think, all I can say at this point is our team is working hard. If some projects are launched as expected, if all the projects are launched as expected, we should reach. But if there is some delay, I think it can get into Q1 of next year. But the pricing should be fine. Pricing realization should be fine.
Everything should be fine. But if there are any risks, what should be the downside one should look at?
As I said, the team is always working hard. By and large, as a matter of policy, we don't give forward-looking statements, but that is the intention, I can say.
Jaishankar, can you also elaborate on your land bank strategy? Now, what are the key areas of new acquisitions, and what is the target gross development value that you have in mind?
See, we have recently added about GDV of about 10,000 crores in the last 6 to 8 months, and we will be adding another GDV in somewhat in the similar size in the next 6 to 9 months is what I expect. So we would like to, I would say, have this growth of 20 to 25% ideally.
Moving on, if you have to look at the leasing and the co-working space as well, this is something which is really picking up. How is the demand looking like, for a Brigade Enterprises?
See, our co-working business is quite small, nothing much to talk about now, but it is growing year on year. And, maybe in 3 to 4 years' time, it will reach some considerable size. And we have currently about 10 million square feet of annuity income yielding assets, where we are finalized properties, and in the process of approval, we intend adding another 8 to 10 million square feet of annuity assets before 2030.
Also, I want to understand, your strategy for exploring a potential REIT, and this is to monetize a commercial portfolio. I want to understand on that.
So as I mentioned a few minutes back, I think only when we reach about 20 million square feet of area, if not more, we will explore that. And at least in the next 4 years or so, we don't have immediate plans of, going for a REIT.
Okay. Any new geographic forays that you're looking at? Because we're seeing a lot of new entrants that are coming in the MMR region. What is your strategy going to be with regards to geographical expansion from here on?
So currently we are in the 3 metropolitan cities of Bangalore, Chennai, Hyderabad, and 2 to 3 tier 2 cities in Kochi, Mysore, Gift City, and bit of Trivandrum we are entering. So we would like to currently focus on these cities, and I'm sure and I hope the opportunities in MMR and NCR will always be there.
Okay, your pre-sales growth of 3% is lower than the overall guidance of double-digit for FY26. More launches are they expected in the second half? Key launches planned, if you can help us with that.
We are expecting about, I would say, about nearly 5.5 to 6 billion square feet of new launches, of which in Hyderabad, we are launching the second phase of Brigade Gateway, Hyderabad mixed-use development. That should happen by Diwali or so. And we are also expecting, one large project what I talked about earlier in Bangalore East, and also another large project of a high-end project in Chennai. These are the 3 larger size projects, which will have a, I would say GDV, gross development value of maybe nearly 3,500 to 4,000 crores. 4,000 crores.
Mr. Jaishankar, my last question coming to you is with collection growth. What is expected going forward? Any guidance for FY26?
I don't have the full ready figure, but collections are on track. There is no, reduction in the collections projected earlier.
Okay. Thank you so much, Mr. Jaishankar, for joining us on Know Your Company, a company that is rated almost 6 on 8, which is a very strong rating on the back of the performance. But very quickly, Anushi, the top takeaways from this conversation.
Well, while the management did say FY25 was marked with uncertainties related approval challenges, FY26 is expected to be stable. Now, if all the launches are launched, we should see, the company maintaining a double-digit growth guidance, or there might be some spillover in the first quarter that we are looking at. A 20 to 25% of growth in GDV is something also that we should be watching out for.
I think lots to watch out for, but completely out of time. That's all, folks. Thanks for tuning in to KYC only on NDTV Profit. For your profit. Lots more lined up on the other side. Please stay tuned.
सर, बिजली का बिल आया है। सोलर पैनल लगवाने के बाद भी
अमाउंट बोलना है
60 लाख।
60 लाख? अरे इतने में तो
लग्जरी कार आ जाती, शौक मत हो। सात्विक के सोलर पैनल लगाओ और करो हर शौक पूरा। चाहे तो नई फैक्ट्री लगा लेना। घर हो या फैक्ट्री, बोलता है कार्तिक, सोलर मतलब सात्विक। खराब मौसम में भी काम करता है।
The world's defining stage. Leaders, Visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
सर, बिजली का बिल आया है। सोलर पैनल लगवाने के बाद भी
अमाउंट बोलना है
60 लाख।
60 लाख? अरे इतने में तो
लग्जरी कार आ जाती, शौक मत हो। सात्विक के सोलर पैनल लगाओ और करो हर शौक पूरा। चाहे तो नई फैक्ट्री लगा लेना। घर हो या फैक्ट्री, बोलता है कार्तिक, सोलर मतलब सात्विक। खराब मौसम में भी काम करता है।
Nikhil, first of all, thank you for coming in and answering to shareholders and investors. I think that's very, very positive because management doesn't usually want to come and talk about when these things happen. So I'm glad that you're doing that.
This was a legacy issue. It's been overhanging over the company for the last 10 years. And we are glad that it is, in whichever way it is completed and disposed of. Though there is no financial impact on the company, the shareholders it concerns, and that's why we are here to clarify and to give a clarification that it doesn't impact the company's day-to-day workings. It doesn't impact our growth plans. It is of the past of 2015 to 21. The compliance since then we have been up to date. We haven't got any compliance issues since 2021 till date.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
और रहमान सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं। उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world.
We can begin. Yes, sir. Thank you, sir. Hello and good afternoon. Welcome to this post-policy press conference, fourth for the 25-26. Friends, we have with us Governor, Reserve Bank of India, Shri Sanjay Malhotra, Deputy Governors, Shri M. Rajeshwar Rao, Shri T. Ravi Shankar, Shri Swaminathan J, and Dr. Poonam Gupta. We also have with us Executive Directors, Dr. Ajit Joshi, and for the first time, Dr. Indraneel Bhattacharya. I also welcome my other colleagues from the Reserve Bank. As always, we'll have a few housekeeping announcements. Sir, there are around 23 participants from the media, and I request the media participants to please stick to one question so that everybody gets a chance. I'd also request everyone to switch on the mic when they are intervening so that the people listening to this transmission, they are able to listen clearly. And once you are done, please switch it off. Sir, so with your permission, I'll call out the names. I would ask Ms. Lata Venkatesh from CNBC to ask the first question. Lata, please.
Thank you, Puneet, and thank you, Governor, for the opportunity. You have said in the statement that the fall in inflation opens up space for further supporting growth. You have omitted the word limited, which was there previously when you said limited space. So should we understand there is space for more than one cut? And what are the trigger? If you had the space, why not now? What trigger are you waiting for? You also said that the transmission is broad-based. Are you okay with the way bond yields have moved? There doesn't seem to be transmission there.
Yes, there is a change, as you have noticed. I mean, inflation has reduced considerably since we met earlier in June by 1%. And so that does open up the space. At the same time, growth you have seen, while it has surprised us on the upside in Q1, Q3, Q4, and even next year, there is a downward revision slightly. And as mentioned, it is on account of the tariff, the 50% tariff that has come into play, offset to some extent by the GST. Why not a rate cut is again, given in our statement. Monetary policy transmission, while it has been good across sectors, it is still happening. And it's not only monetary policy transmission. There are other policies, for example, the government GST rate, and a number of other policies announced by the Honorable PM and the government. They are taking shape and their impact is still unfolding. At the same time, there are still a lot of uncertainties. We see developments every week, every day, and we also see responses there too. There is still, clarity on that account. And so that's why the MPC felt that we should pause. Insofar as transmission to government bonds is concerned, you are aware that there was a good transmission of about from 686 peaks or thereabout to 630, about 46 basis points. And after that, there has been a hardening. So the net impact thereof is only about 660, 659 today, so about 30 basis points, more than 30 basis points, about 30 or less than 30 basis points in the government yields. We are watchful and we'll see, how ultimately it is, of course, for the demand and supply. We'll see how all the needs of the economy are supported.
Speak about limited. Why did you drop that word?
I mentioned that inflation has dropped by 1% from our earlier forecast. It is now at 2.6% from our earlier forecast. So it has dropped down by 1%, and so that's the reason. And the growth at the same time, I did mention, has also been revised slightly downwards. Primarily, of course, as I mentioned, on account of trade-related, the higher tariff that has come into play. which is still negotiations going on, etc., still unfolding. But we have taken
Space
that.
to cut, not limited space.
Yes, we have made that change. Yes, and that's the reason. The changing growth inflation dynamics is the reason that we have changed the language.
Thank you, sir. For the next question, I'll ask Mr. Mayur Shetty from Times of India. Mayur, please.
Iraq, and the Commerce Secretary is also talking about the need to fix India. So, we made some adjustments to the growth forecast in first quarter, but what impact will it be on the financial markets? And will the GST reforms and the deregulation that you mentioned be enough to offset all the negative factors?
That's the attempt that whatever are the external headwinds, we try to counter them. Ours is primarily a domestic demand-driven economy, so the impact is limited. It's not as high as some of the other countries, as I had earlier mentioned. And the government, as well as the RBI, both fiscal, monetary, and other policies, will make all efforts to ensure that whatever are the headwinds, they can be countered. At the same time, you are aware that negotiations are still going on. Government is looking at other means, opening up other markets. There has already been a trade deal with the UK. Negotiations are on with so many other countries, including Oman, EU, etc., that will also open up markets for our exporters. And on the whole, the Indian growth has been quite resilient, and we are very hopeful that we will continue to maintain a very high growth trajectory while maintaining price stability.
Thank you, sir. Next, I'll have Mr. Manojit Saha from Business Standard. Manojit, please.
Yeah, thank you, Governor. The commentary is that inflation is coming down while there is softening of growth expected because of the trade uncertainties. I wanted to understand. So this clearly hints that going ahead, rates can probably come down. Rates going up is not an option. So is there a discussion to change the stance to accommodative?
Yes, there was a discussion. As you have already noted, 2 members wanted. You don't have a vote. It's more of a forward guidance. Let me again, clarify. This was clarified in one of the earlier policies. It has got nothing to do with liquidity. It is only as a measure of forward guidance as to where the rates can be going forward. So 2 members, Professor Ram Singh and Dr. Nagesh Kumar, have given their guidance as accommodative, while the others have maintained it at neutral.
Thank you, sir. Next, we'll have Ms. Hamsini from Money Control. Hamsini, please.
Thank you. Good afternoon, Governor. I'll move a little from macro aspects. One of the things in the policy speech which sort of caught my attention a lot was the limits for specified large corporates. That has been sort of done away with, and the reason in 2016 it was introduced, one of the reasons cited was to also develop a very vibrant bond market and de-risk the banking sector to some extent. So now that we've gone back on that, what is the inference that one should make, that credit growth for large corporates should once again come back or be fed by banks, or despite all efforts to create a little bit of vibrancy in bond markets, it's not yet picking up? How should we infer that particular change, sir? And as a continuation to that, a lot of changes have also come pro-banking sector in this particular speech, like for instance funding acquisitions, etc. What was the rationale in making or in opening the doors for ease of doing business for banks, granting a lot of their wants?
A lot of questions in one question only. First of all, my understanding is that the 2016 policy was more about mitigating risk and reducing, limiting exposure to large corporates at the banking system level, not at the bank level. For the bank level, I would like to clarify that the large exposure framework which was there continues. There is no change at the bank level, individual bank level, whatever is the large exposure framework continues. At the banking system level, any borrower which was having an exposure, a credit limit of 10,000 crore rupees or more from 2019 onwards, this limit was progressively reduced from 25 to 15 to 10,000 starting from 2016 to 2019. That has been done away because it is felt that that the large exposure framework is able to take care of the needs at the individual bank level and at the banking system level. If there is a need, we have the macroprudential tools already to take care of that. Thirdly, you have been seeing, that the share of corporates in the total banking exposure has in fact, come down over the years. I do not have the right numbers. I think last 10 years it has reduced by about 10% or so. So the risks are not so many. So that's the primary reason, why we have reduced, why we have proposed to remove this large exposure framework for specific borrowers at the banking system level. And then there are a number of other measures, ease of doing business. I think we announced 7 measures on top of some 5 measures, smaller measures, which we had announced couple of days ago. That's a continuous process. We need to continue looking at rationalizing our regulations so that the productive needs of the economy are met with the least of compliance burden, with the least of cost, while at the same time ensuring that wherever prudential measures are required, they are not compromised.
थैंक यू सर। अब मैं श्री अनुराग शाह ET Now स्वदेश से आग्रह करूंगा कि वे अपना प्रश्न पूछें। अनुराग जी।
थैंक यू सर। पुनीत सर, सर जिस तरह से आपने अपने संबोधन की शुरुआत में भी जीएसटी रिफॉर्म की बात करी, आखिर में भी जीएसटी रिफॉर्म की बात करी, तो सर जो ग्रोथ का टारगेट को रिवीजन किया गया है उसमें टैरिफ का कितना योगदान है और जीएसटी रिफॉर्म का कितना योगदान है? और क्योंकि सर 22 तारीख से ही ये रिफॉर्म की शुरुआत हुई है, तो आगे चल के इसमें और ज़्यादा जो ग्रोथ का आउटलुक है उसमें और बदलाव हो सकता है। और सर महंगाई को जो आपने 3.1 से 2.6 में लाया है, तो जो जीएसटी रिफॉर्म है एक सरकार की तरफ से बहुत बड़ा ऐलान किया गया और उससे पहले बजट में जो पर्सनल इनकम टैक्स में ऐलान किया गया था, इन दोनों के बाद से लोगों के हाथ में काफ़ी ज़्यादा पैसा रहेगा और वो कंजम्पशन में जाएगा, तो वो महंगाई पे कितना इम्पैक्ट डालेगा? और सर एक पिछली बार मैंने एक सवाल पूछा था लेकिन सर वो थोड़ा सा सही से नहीं पूछ पाया, तो अगर अनुमति हो तो बाद में पूछ सकता हूँ।
तो पहले ये जो आपने बोला है, ये सभी का जो प्रभाव है, चाहे वो जीएसटी हो, चाहे वो 50% टैरिफ हो, बेसलाइन में हम 50% टैरिफ को मानते हुए ही हमने सारे अपने अनुमान अब इसमें अनुमान में हमने उसको इंक्लूड किया है। तो लेकिन जैसा कि स्टेटमेंट में भी बताया गया कि जहाँ तक वृद्धि दर की बात है, तो जो टैरिफ है 50% का टैरिफ और साथ ही साथ जो अनसर्टेनिटी है, ग्लोबल डिमांड, इसके 2 इम्पैक्ट हैं। एक तो जो ग्लोबली डिमांड पे न केवल यूएस डिमांड बल्कि पूरी ग्लोबल डिमांड के ऊपर में जो कमी आएगी, एक वो इम्पैक्ट है जिसकी वजह से हमने, आपको मालूम है कि 20 बेसिस पॉइंट्स पहले अपनी वृद्धि दर 6.7 से 6.5 करी थी और अब एक 50% का जो इम्पैक्ट है वो डायरेक्ट एक्सपोर्ट्स यूएस के ऊपर में है, जो कि कम हो सकता है यदि जो अभी जो वार्ता चल रही है वो और सकारात्मक होती है। और जीएसटी का इसका जो प्रभाव है वो उससे कम रहेगा, हमारा अनुमान है, तो इसलिए वो पूरी तरह से ऑफसेट नहीं कर पाएगा। कुल मिलाकर के जैसा कि हमने कहा करीबन 20 बेसिस पॉइंट्स औसतन की कमी इन सभी इम्पैक्ट्स की लेते हुए हमने ये अनुमान अपना लगाया है। कुल मिलाकर हालांकि इस साल में चूँकि पहले 6 माह में अच्छा इकोनॉमिक एक्टिविटी हुई है और हमारे पास में नंबर्स ऑलरेडी आ चुके हैं, तो इस वजह से कुल मिलाकर के इस वर्ष का जो ग्रोथ फोरकास्ट है वो बढ़ा है।
धन्यवाद सर। अगर समय मिला तो बाद में पूछ लीजिएगा, बाकी सबको मौका मिल जाए। धन्यवाद सर। नेक्स्ट आई विल रिक्वेस्ट स्वाति भट्ट फ्रॉम रॉयटर्स। स्वाति प्लीज।
Thank you, sir. So, at the RBI for the last decade or so, largely the focus has been on reducing the banking sector risks. But now, by easing the large exposure framework, allowing banks to, fund acquisitions, IPO financing, more in shares, aren't you in some way, making, inviting possible risks here? I mean, and what are we trying to achieve through all this easing? Can you just throw some light on that? Thank you.
We have taken measures very balanced, calibrated, thought out, considered. Even though we'll be doing a public consultation, even pre the formal consultation, a number of consultations, and there are measures on both sides. There are at least a couple of them: ECL, credit risk related capital adequacy norms, which I won't say which put high requirement, I don't think so, but it will be better targeted. Those banks, depending on the risks, some of them may have to provide, and keep higher credit, it will be better targeted. And similarly, some of the other measures that we have taken to enhance the flow of credit, improve the competitiveness of the banks. It's not as if those measures were not there at all. For example, project finance, we were already allowing project finance. Project finance for infrastructure companies was already allowed. We have not seen, acquisition finance. For acquisition finance was already allowed for infrastructure companies, and now we have expanded it. Similarly, the loans against shares, etc., or for IPO financing, it was already there. It was not revised for a number of years. So it's but natural that, we revised them. I think on the whole, all these measures taken together, and we'll continue to take more measures, as and when required. Always the aim will be to promote the stability while at the same time improving competitiveness, encouraging and enhancing growth of the economy. You want to come in?
Sir, I think as Governor has already mentioned...
Because number of measures actually, these measures pertain to the regulation division. I'll request DG MRR to...
I think most of the measures have been well thought out and calibrated, one. Second, the banking system's ability to handle the risks has improved over the period, so there is some enough provisions. Third, most of the measures have enough guardrails built into them to safeguard the interests of the banks and the financial system. And speaking of the loans against shares, I think while the limit has gone from 20 to 1 crore, I think the limits were last revised in 1998. So inflation itself, if you factor it in, it's not really very significant increase. So overall, I think it has been a calibrated set of measures. And again, it's coming up for public consultation, so we will take the feedback and revise it if appropriately required.
Thank you, sirs. Next, we'll have Mr. Vishwanath Nair from NDTV Profit. Vishwanath.
Hi, good afternoon, Governor. I'll go back to your first speech as RBI Governor, where you spoke about the cost of regulation and the ease of regulation. Are we to see these 22 guidelines or whatever indications of guidelines that you've listed out in today's speech as a move towards that? Because while ECL is a very necessary and very delayed sort of framework that is coming in, a lot of others seem to be giving banks whatever they were asking for, some of it. Like, for example, acquisition financing was something that banks have been speaking very vocally about over the last few weeks. Is that how we should see these moves?
Yeah, see, circumstances change, times change, requirements change, and so nothing should be frozen in time. And so that's why we had earlier also said that we will be continuously reviewing our regulations. In fact, we have decided in the FSDC under the chairmanship of the finance minister, where all the finance sector regulators come together to review each and every regulation every 5 to 7 years. So while we are doing that, and while it will be a continuous process, as you are mentioning, some of these things which have come our way, we have thought it appropriate to revise them, and that's it's very important that we continuously revise, review, improve our whole regulatory ecosystem.
Thank you, sir. Next, we'll have Mr. Anup Roy from Bloomberg. Anup, please.
Thank you, sir. Sir, in the policy you mentioned about rupee reference rate with trading partners. Now with major trading partners, so far we have 4 rupee reference rate, and now it will be expanded. So what are those currencies? And also I wonder what will be the benchmark reference rate that you will use, and will that also increase rupees trading in the international market? Like what I mean is that earlier there used to be a cross currency like INR USD and then USD say CNI. How will you fix that?
Yeah, I think the objective is that you minimize the use of crossing currencies to get rates. That will help both our currency as well as the other currency. We are currently looking at a couple of currencies. We are looking at Indonesian rupiah as one. We are looking at AED for another. But there are a few others. We will gradually keep taking them up. About your question on how do we set the benchmark, we'll have to see. We'll have to see because there are not many active transactions to begin with. So the process FBIL has to work out what is the best way of initiating something. This is a case where the pricing, the reference has to be shown first, and the market has to pick up from there. So keeping that in mind, we'll have to work out ways of how do we arrive at what benchmarks do we use for these reference rates. Thank you.
Thank you, sir. अब मैं जी बिजनेस की एकता सूरी को आमंत्रित करूंगा कि वे अपना प्रश्न पूछें.
गुड आफ्टरनून सर. सर मेरा सवाल यहाँ पर आम लोगों से जुड़ा हुआ है, उनकी जेब से. मैं ये पूछना चाहूँगी कि पिछली पॉलिसी से लेकर इस पॉलिसी तक 2-3 खबरों ने बहुत तूल पकड़ा हुआ है. सबसे पहले तो ये कि क्या बैंकिंग सेक्टर का ये कहना है कि जिस तरह से यूपीआई ट्रांजैक्शंस बढ़ रही हैं, हमारे इंफ्रास्ट्रक्चर पर बहुत बड़ा एक तरह से बर्डन भी बढ़ता जा रहा है, लेकिन कॉस्ट उतनी हमारी रिकवर नहीं हो रही. तो क्या आने वाले दिनों में यूपीआई ज़्यादा बड़ी ट्रांजैक्शंस पर किस तरह की कोई फीस लग सकती है? और दूसरा एक खबर ये कि यहाँ पर बैंकिंग सेक्टर का ये कहना है कि हम होम लोन में हमारे पास घर गिरवी है या गोल्ड लोन में सोना गिरवी है, लेकिन जब हम स्मार्ट अप्लायंसेस की बात करते हैं जैसे स्मार्टफोन हो गया, तो यहाँ पर रिकवरी पॉसिबल नहीं है. तो क्या बैंक्स उसको रिकवर करने के लिए पुराने वाले तरीके पर जा सकता है कि जहाँ पर फ़ोन लॉक हो गया अगर आपने किस्त नहीं भरी? और जिस तरह आज सेबी का एक वैलिड हैंडल जो लॉन्च हो रहा है कि अगर मैं पैसे भर रही हूँ किसी को तो मुझे पता चल जाएगा कि ये फ्रॉड है, ये सेबी रजिस्टर्ड नहीं है. तो ऐसा ही कोई ऐसा प्लेटफॉर्म कि अगर मैं किसी को पैसे ट्रांसफर करूँ तो मुझे ये समझ में आ जाए कि ये एक फ्रॉड अकाउंट हो सकता है या मैं इसमें फंस रही हूँ.
3 प्रश्न. पहला, यूपीआई पे क्या कोई चार्ज लग रहा है? तो ऐसा कोई अभी हमारा सामने ऐसा कोई प्रस्ताव नहीं है. दूसरा, आपने कहा कि क्या मोबाइल फ़ोन को जो लोन दिया गया है मोबाइल फ़ोन खरीदने के लिए, क्या उसे लॉक करने की इजाज़त दी जा सकती है या नहीं दी जा सकती है, जिस प्रकार से अन्य गृह लोन के लिए या ऑटो लोन के लिए इजाज़त दी हुई है. ये मामला अभी परीक्षणाधीन है. हम इसको क्योंकि इसमें दोनों तरह से हमारे पास में तर्क और वितर्क आ रहे हैं, उनका हम अध्ययन कर रहे हैं. हमारा ये प्रयास है कि जो हमारे ग्राहक हैं, कंज्यूमर हैं, उनका जो अधिकार हैं, जो डेटा प्रिवेसी है, वो सुरक्षित रहे. कंज्यूमर इंटरेस्ट, ग्राहकों का इंटरेस्ट, हित वो सर्वोपरि है। साथ ही साथ जो लेंडर्स हैं उनका इंटरेस्ट भी किस प्रकार से सुरक्षित रखा जा सकता है, ये मैटर अभी अध्याधीन है। तीसरा आपका प्रश्न था फ्रॉड के बारे में शायद, राइट? उसके लिए कुछ कार्य हम लोग, ये एक गंभीर विषय है, इसके ऊपर में हमने कई कदम पहले भी उठाए हैं और निरंतर हमारा ये प्रयास रहेगा कि किस प्रकार से हम जो फ्रॉडुलेंट तरीके से एक अकाउंट से दूसरे अकाउंट में पैसा निकाल लिया जाता है उसको हम किस प्रकार से रोकें। उसी क्रम में पहले हमने आपको म्यूल हंटर के बारे में बताया था, उसी प्रकार से एक अन्य जो एक एक्सपेरिमेंट, ये अभी एक्सपेरिमेंट की स्टेज पे है, अभी इसको पूरी तरह से हमने लागू नहीं किया है। उसको हम अभी जो हमारा सॉफ्टवेयर है हम तैयार कर रहे हैं कि किस प्रकार से पूरी इंफॉर्मेशन लेते हुए पहले से ही यदि हम ग्राहक को ये सचेत कर दें कि ये एक रिस्की ट्रांजैक्शन है, आप इसको न करें, तो उसके लिए हम अभी प्रयास कर रहे हैं। अंग्रेजी में यही बात कहने के लिए मैं हमारे डीजी को निवेदन करूंगा, वो आपको अन्य सबके लिए, ये तीसरा वाला जो प्रश्न है अंग्रेजी में सबके लिए, और दूसरा वाला जो प्रश्न है ये मोबाइल फ़ोन के बारे में है, मैं डीजी MRR को बोलूँगा कि वो अंग्रेजी में इसी चीज़ को वो रूपांतरित करें। Yes.
Yeah. No, I will not try to translate what the governor said, but yeah, it's basically this, the digital payments intelligence platform. You would recall that RBI had set up a group, it had announced. We are now implementing it. As the governor said, the actual prototype is getting developed by our innovation hub. An entity is being set up to run this. The basic idea behind this platform is that you collect information from whatever sources are available, mule accounts, telecoms, geography, where the call is coming from, and whatever else, whatever information is available, and you have an AI system which is being trained on this information, and the idea is that this system will alert before a transaction by saying that this transaction is risky. Based on the alert, the customer will have to take a call or the bank will have to take a call. So we expect that this will have a significant impact in terms of reducing, the number of frauds that we see in the system. By no means, I'm saying that the number of frauds are high. The number of frauds are well under control. If you look at number of frauds per transactions in UPI and others, they're quite low. But these systems will further lower those transactions. Thank you.
The issue of digital locking, which I think it had referred to, I think the issue is under examination, as Governor has pointed out. And there are pros and cons on both sides in terms of balancing the customer rights and requirements, data privacy, and also the creditor's requirements. So we are examining the issue. We will evaluate the pros and cons and then take a view at a later point in time.
Thank you, sirs. Next, I'll ask Ms. Sangeeta Mehta from Economic Times. Sangeeta, please.
Thank you, sir. Thank you. Sir, my question is on forms of business. You all have relaxed the guidelines and you have said that the board of the banks will have the discretion to decide. Why has RBI chosen to relax the norms? And sir, on one more thing on this, what would be the specific macro-prudential tools that you would be using for large exposure framework?
So, first thing you are saying relaxation, let me first of all clarify that that was only a draft. So it was not a final kind of a guideline or a direction. So the other thing is, see, we don't want to micromanage. We believe that the banks will take a conscious, considered, balanced view, depending on their needs as to how they wish to conduct their own business. And so that's why, we have just left it to them. Second question was?
What would be the...
Macroprudential tools. A number of them.
No, we have
I'll leave it to the
tools which are available. Maybe we can look at, say, putting a cap on the exposure from all the banks, because I think the fundamental point which Governor mentioned was the concentration risk. All the banks' collective exposure to a single entity. So we could think of limits for that, but that is something which can be considered at a particular point in time, if appropriate.
And then we have supervision.
Yes.
Also. We can also put in supervisory measures in case required.
But this will be draft first.
Yes.
This is final now.
Forms of business is final.
Yeah. Forms of business is final.
No, the large credit...
that is draft. That is a draft circular.
Thank you, sirs. Next, we'll have Mr. Ashish Agashe from PTI. Ashish, please.
Thank you so much, sir. Sir, a quick quick follow-up to Vishwanathan's and Swati's questions. So earlier there was a perception that financial stability sort of foregrounds RBI's approach on things. Are we to now understand that it's a sort of turn towards being more pragmatic? And so second quick question, so how do you look at these adverse weather events right now? Since the last policy there have been more. So how do you look at this from an inflation and growth perspective?
I don't think, that you should see these measures as any kind of a relaxation or kind of letting go our sight, from financial stability. Stability is foremost for us. Whether it is price stability, whether it is financial stability, that is foremost not only for us, I think for the country as a whole, it's very, very important. Because if you do not have price stability, there are consequences. Similarly, financial stability, one episode of financial instability can take you, many years behind. So all of us need to be very conscious of that. At the same time, we have to be very careful. We have to ensure that we are not in any ways impeding growth or limiting whatever are the fulfillment of the genuine requirements of the various productive sectors of our economy. So financial stability, price stability will continue to be the primary focus of the Reserve Bank, as it is for all other central banks as well. Weather-related events, yes, they do have an impact on both growth and on inflation. There have been a number of them. At the same time, let's also keep in mind that the government has also put in place a number of measures now. The supply chain management is much better, and they are able to respond to them better. And so that's why we have seen that over the years, despite there being more weather-related events, as you mentioned, inflation has been much better behaved. It's been lower, last 10 years vis-a-vis earlier 10 years. So, and at the same time, we will also do whatever is required for the health of our banking system to be able to take care of any weather or climate-related risks.
Thank you, sir. Next question will be from Mr. Ankur Mishra from ET Now. Ankur, please.
Thank you so much for the opportunity. Hello, sir. I want to ask you regarding the rupee depreciation, which you have mentioned in the policy also, you will take measured as and when required. In the MPR, the revision of exchange rate has been there from 86 to 88 this time. I want to understand from you, is the current exchange rate comfortable for you? And also talking about MPR, you have made projections for inflation also 4.5%. In that context, keeping the neutral rates and talking about the real rates here, it is below the estimate. How much of the scope of then easing is there for you?
What is below the estimate?
Real rate. 4.5%, sir, is the projection which has been given in the MPR.
Okay. So, your first question was on?
Rupee.
Rupee. So, rupee, see, we do not, you asked me whether you're comfortable with this rate, etc. So, we do not target, any level or any price band. Our effort has been to manage any undue volatility, and we will continue to do so. Insofar as you are saying the real rate is concerned going forward, you are saying is 4.5%, that is in Q1. So there are a number of things which go into it, and it's not only inflation that we have to look at, we have to also look at growth in our overall macro, in our monetary policy. And so, based on that, we have continued to retain the policy repo rate at 5.5% and the stance at neutral.
All right, and that's the key takeaway coming in terms of lower inflation. They're talking about how this really opens up the space for a rate cut. Also highlighted that the inflation, in fact, surprised on the upside in the first quarter. Talked about loans related to mobile phones and added a bit of color there as well. Talked about rising number of financial frauds being a key cause of concern as well. And also are working on software to preempt fraudulent bank transactions. The key takeaway there in terms of the focus areas is that financial and price stability. Those are the two key focus areas for the RBI, but that's all the time that we have on the show. Thank you so much for tuning in. You don't go anywhere because Profit Buzzers takes all of the action forward.
सर, बिजली का बिल आया है। सोलर पैनल लगवाने के बाद भी अमाउंट बोलना है यार, 60 लाख।
60 लाख? अरे इतने में तो लग्जरी कार आ जाती। शौक मत हो, सात्विक के सोलर पैनल लगाओ और करो हर शौक पूरा। चाहे तो नई फैक्ट्री लगा लेना। घर हो या फैक्ट्री, बोलता है कार्तिक, सोलर मतलब सात्विक। खराब मौसम में भी काम करता है।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
सर, बिजली का बिल आया है। सोलर पैनल लगवाने के बाद भी अमाउंट बोलना है यार, 60 लाख।
60 लाख? अरे इतने में तो लग्जरी कार आ जाती। शौक मत हो, सात्विक के सोलर पैनल लगाओ और करो हर शौक पूरा। चाहे तो नई फैक्ट्री लगा लेना। घर हो या फैक्ट्री, बोलता है कार्तिक, सोलर मतलब सात्विक। खराब मौसम में भी काम करता है।
Nikhil, first of all, thank you for coming in and answering to shareholders and investors. I think that's very, very positive because management doesn't usually want to come and talk about when these things happen. So I'm glad that you're doing that.
This was a legacy issue. It's been overhanging over the company for the last 10 years. And we are glad that it is, in whichever way it is completed and disposed of. Though there is no financial impact on the company, the shareholders it concerns, and that's why we are here to clarify and to give a clarification that it doesn't impact the company's day-to-day workings. It doesn't impact our growth plans. It is of the past of 2015 to 21. The compliance since then we have been up to date. We haven't got any compliance issues since 2021 till date.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है। और रहमान
सोनू निगम के लिए जोरदार तालियां।
Hello and welcome back to NDTV Profit. We're now in conversation with the management of Mahindra and Mahindra, and to talk more about how the monthly sales have been for the month of September as well as what he's seeing on the ground. We're going to put the focus on the tractor business this time, and we're now joined by Mr. Vijay Nakra. He's the president of the farm equipment business at Mahindra and Mahindra. Mr. Nakra, very good afternoon to you. Thanks so much for joining in today. It's been a stellar month for you, to say the least. Over 66,000 vehicles sold in this particular month. It's almost a 50% jump that we are seeing on a YY basis as well. Just talk us through, what you're currently what led to actually this particular growth, because we had seen a GST reduction on tractors to 5% from 12% earlier. But did you also see that there were a lot of purchases that were delayed until September 22nd? And post that, we've seen the flurry of sales happening for you as well. Is that the trajectory that you've seen?
Puneet, firstly, good afternoon. Thank you for having me on your show. I think there are lots of factors that come together to answer that question, and let me kind of break it up in a couple of parts. So firstly, yes, definitely, the decision and the move by the Honorable Prime Minister to reduce GST on tractors has augured extremely well, and that's one of the key reasons for the offtake that we see at the start of the festive season. So that's one. Second, equally important, I think the way the season has played out in terms of the monsoon with 8% higher than long period average, whether we look at the reservoir levels at 90%, whether we look at the land under sowing for the Kharif season 2% higher than last year, whether we look at the MSP prices that the government declared a couple of months back to increase income in the hands of the farmer. I think all of these have come together as a second bucket of factors. The third one, which I think is very, very important, which also needs to be understood this year, is that this year, the festive period has been split between September and October. Last year, both Navratri as well as Diwali was in the month of October, except for the last 2 days of Diwali, which were in the month of November. This year we have 9 days of Navratri coming in September, Dashami and Diwali in the month of October, which means the festive demand or the performance of industry and companies needs to be understood at the end of October as the overall festive period performance. But having said that, even if I just look at the first 9 days of Navratri, which is the start to the festive season, the demand is strong, inquiries are high, and all these reasons we spoke about have augured well.
You mentioned a very important point that we should look at September as well as October together as well. So last year you did about 1,09,000 odd numbers for the both months combined. And you rightly said that the festive is split, so we could see a huge positive momentum in October as well for the industry. Is that something that you're also anticipating? Because given the strong momentum in September, you should easily be able to give, have that number essentially for both these months, surpass the 1,09,000 that you did last year. So is that you've seen as well, that going into October as well, a lot of deliveries are still yet to happen, which have been booked in these 9 days?
Obviously, we believe that the overall performance at the end of the festive period will be better than last year because demand continues to be strong. And like I said, there are multiple reasons that lead to the demand to continue to remain strong in the rest of the festive period. But again, when we compare, we should compare the figure, not just October separately. When we will see the October performance, we should then look at the clubbed figure of September plus October.
Also, Mr. Nakra, how do we, what are you currently seeing in terms of the growth essentially in inquiries and bookings? Because, we've seen for different segments as well as different companies, we're seeing that aspect. So for the passenger vehicle side of Mahindra, we've seen a double-digit increase in inquiries. What has that been for the tractor side of things and inquiries, bookings, if you can give us some perspective?
Yeah, I won't call out specific numbers to be shared, but they are strong. They have been strong at the start of the festive period. We have a strong and large number of deliveries planned for Dashami, which is a very, very big day in the tractor industry for deliveries. And like I mentioned, the pipeline of inquiries and bookings are strong as we get into October.
Ms. Nakra, the other aspect, what you said at the start of the year as well, that roughly for the tractor segment, you might see a 7% growth for FY26. Looking at the momentum for H1, you've done almost a 20% growth already in the first half. And second half, generally, we've still yet to see that momentum, as you mentioned, for what you could see in October as well as in first 3 months of the next year. Could this be a case that this guidance will be revised upwards? And while I know you can't give the numbers, does it seem to be the case that you could easily pass through these numbers? Because I was looking at the last year as well. Last year was an interesting year as well because H1 FY25 was 5% and the H2 was 21%. Even if you're able to maintain that number for this year with very nominal growth, you will easily surpass this guidance as well for this year.
No, I think that's a very interesting observation, and let me set a little bit of context on that. So the very fact that last year H1 was only 5% and this year H1, if you see our numbers are at 20%, or even if you see likewise, industry last year first half versus industry first half this year, it's pretty apparent that, last year, I think there was a lot of effort in terms of ensuring that the sort of stock corrections were done, across the industry in the front line. So there is a base effect of last year coming in the first half, where if you see the industry last year was, as you said, 5%, and in the second half, it is sitting at about 11.5%. So there is a base effect which has led to that 11.5% also for the first half. So we should not forget that 11.5% is not an indication that that's the same kind of strong double-digit or higher performance that will come in the second half for the industry. We should discount the factor of base effect. But having said that, I think second half will be strong because, like I said, monsoons have been good, and also the effect of the benefit of GST in the hands of in terms of the cost of a tractor, which is a significantly large portion of the input cost from a farmer's point of view will augur well for a good performance in the second half. And just to the best of my knowledge, I don't think we had put a percentage for industry growth. What, if I recollect, our standing or our statement has been is that the industry will see a high single-digit growth in FY26. I think that's what we had put out.
Fair point, Mr. Nakra. And just one final question from my side. Essentially, have you also seen consumers come in with the said product that they wanted to buy and purchase that in this particular point of time or book that product? Or have you also seen some kind of premiumization, addition of features within the said products? Because tractors is very different from passenger vehicles because there the upgradation is much quicker. So how should we look at this aspect to round off this discussion?
Yeah, very interesting question, and a little early days because I think you're right. A lot of customers are understanding that now, while the average price has come down by 44,000, that obviously is much lower in the lower horsepower category, and that value increases significantly to 60,000-70,000 rupees as you start moving to higher horsepower tractors. So I think the customers are still kind of settling in to understand the trade-offs that they would need to make, and whether they should buy tractors with more features or higher horsepower. But I think we will probably see, while that clearly could be one scenario that will play out and we'll need to wait and watch, let's also not forget that entry-level tractors prices also come down. So we would also see some demand in terms of first-time buyers coming in to now buy tractors, given that the overall mechanization level in India compared to many of the matured markets is still low.
Well, that was the management of Mahindra and Mahindra, and specifically the tractor segment discussion. We also had a discussion with the passenger vehicle side of the business, and that'll play out at 1:30, so stay tuned for that. But largely a very, very strong number from Mahindra, and there was the expectation built in, and hence we're seeing a mediocre reaction to say the least. But 50% growth in the tractor business is very strong to say the least. When you also look at the passenger vehicle side of the business, and the numbers have been very strong. The domestic SUV sales have come in at 56,000 roughly odd. 10% growth is what it is on the passenger vehicle side, and the domestic CV, which includes in the auto business as well, has also grown at 18% on a YY basis. That's come in at 26,728 odd units. Overall, exports also has seen a phenomenal growth of 43% on a YY basis. So Mahindra, definitely a key stock to watch on your radar. When you look at the other ones, also very quickly wrapping up the auto sales discussions, Escorts, which is its nearest peer in the tractor space, has also done phenomenally well. Sales are up overall at 47% on a YY basis. When you look at the domestic business of Escorts, that's up 17% in terms of the tractor sales, and largely that has driven the growth for the company. The exports up 17%, the domestic sales up 48%. So stellar numbers yet again, and it's beaten estimates handsomely. 13,800 was the estimate, and definitely the number at 18,267 has beaten estimates as well. Hyundai, on the other hand, 10% growth is what they've reported. 70,347 units is what the company had said. Has reported, and this is also beaten estimates in this particular point of time. We were penciling in a number between 68 to 69,000, so a beat there. And finally, Bajaj Auto, total sales of over 5.1 lakh units is what they've sold. The two-wheeler business was at 4.3 lakh overall sales. That includes a larger jump essentially in the export business of 18%, while the domestic business is up roughly about 4% as well. So we're still awaiting a lot more other numbers as well, but definitely beaten estimates is all four of these companies that have reported in as well. But let me go across to Gaurang Shah. He's the Senior Vice President at Georgette Investments. We're also being joined by Gaurav Sharma. He's the Associate VP at Globe Capital as well. But Gaurang, let me come to you. Season greetings to you. Thanks so much for joining in today and patiently waiting by. What do you make of the numbers that have just come in until now? Because it's been a stellar month and the expectations were largely built in. Any view on the same?
Well, thank you so much, Punit, for having me on the show. Greetings of Dashera and Mahanavami to all the viewers of NDTV Profit. And good afternoon to all of you. Also, a small disclaimer before I go any further. All recommendations that I'll be giving across will be a part of our research team recommendations. Our company, Geojit or I, we do not have any personal investment, no financial interest, no conflict of interest, but we give recommendations to our clients on similar lines. They might hold their investment interest. So talking about these numbers, I think, look, if you talk about the auto numbers overall, well, it is definitely heartening to see this kind of reaction and numbers, which is much more than what the polls had suggested. This could be because of 40 plus days of pent-up demand. What we need to understand, Puneet, is how is it that these numbers are going to pan out for two-wheeler, three-wheeler, four-wheeler, commercial trucks, EVs, as well as tractor and agri equipments. I think we should not expect too much out of this going forward into the months to come by, because this may be a little bit lower than what they have reported today. But overall, our sense as far as the entire auto sector is concerned, Puneet, I think first of all, there are a host of new launches lined up, not only for this year, whatever remains, but also for the coming up 2026. Export market is, according to us, a big opportunity for two-wheeler, three-wheeler, four-wheeler, commercial vehicle manufacturing companies and EVs, including, of course, tractors and agri equipment. We are positive on most of the stocks. Names like Bajaj Auto, TVS, Hero Moto, Eicher, Tata Motors, M&M, Maruti, Ashok Leyland, Escorts Kubota, which is a pure equipment play, if you actually go to see, and a pure EV play in terms of Electra Green Tech. Numbers should look better as we go.
Got the view, Gaurang, but Gaurav, let me come to you as well. Very quick view, if I can get on something like a Mahindra and Mahindra specifically, it's seen a very strong jump on the fundamental side. What do the charts suggest?
First of all, a disclaimer here, we have a buy recommendation on Mahindra, so our clients could have a position in this stock. So we are positive on this particular stock, and considering it is now a little bit of highs, I find this as a good opportunity with a medium-term outlook. Another 100 and 150 point slide somewhere close to 3,300 odd levels will be an attractive bet. So therefore, buy and dips would be a suggestion. Near-term targets would again be close to 3,700 to 4,000.
That's the overall take that we have on the auto sector. But let's, focus on some other stocks which are buzzing in trade today. I'll start off with Swan Defense. Now they have signed a MOU with Samsung Heavy Industries. This is to jointly explore maritime projects is what we are looking at, along with shipbuilding projects also that we are seeing. Other than that, Sri Lotus Developers, another stock in focus. Now this is a recent listing that we are looking at. It has launched 2 Mumbai projects. This is overall worth 1,000 crore. That's a gross development value that we are seeing. Apart from that, they're also planning to launch another project in the 3rd quarter. So that is also something that we should be watching out for. Apart from that, what is in focus is Seagull India. And now, a couple of order wins that we've already discussed over the course of this week for Seagull India. In fact, the management had also joined yesterday. Now here, the company has received a 225 crore of an order from a Himachal Pradesh body. And the overall execution period for this particular project is around 18 months. So these are the 3 stocks which are in focus. Gaurang, let me come to you on this one. Any of these, stocks which you particularly like?
Well, don't have very specific coverage, but my sense is that, in terms of the new listing and performance post-listing, some of these companies do deserve a lot of credit in terms of the business they are into, and of course the commentary in terms of earnings visibility. So you need to be a little bit careful in terms of with what time horizon you are looking at these kind of stocks. Short to medium term, difficult for me to comment.
Okay. Got that. Apart from that, what we are seeing is also a couple of business updates which are in focus. I'll start off with IREDA now. IREDA also in focus on the back of the RBI meeting outcome as well. Now, if you are looking at the stock reaction, currently up over 2%. Here, the company recorded about 86% of growth in terms of where the loan sanction number is. Even if you look at the loan disbursements, they saw about a 54% of an uptick at 15,000 crore, and loan book stood at 84,455 crore, and this is a 31% of an upside that we are seeing. Other than that, even Hutco, if you look at the second quarter's business update, loan disbursements were up over 43% at 13,000 crore, and disbursement trend, if you see, has been consistent with the recent quarters, up over 1.7% sequentially. Gaurang, let me come to you on this particular, sorry, I'll take this with Gaurav. Gaurav, let me come to you from Irida and Hutco. Any pick that you have?
If a choice has to be made between the two, I'll go with Hutco. Specifically because the chart formation and the current structure is pretty attractive. It has started participating pretty well, and a break above 240 will open the gates for a further up moves towards 260. So that's what really I would be eyeing at. As far as Irida is concerned, I'll be interested in taking a little longer view on Irida. Still, the stock is in a consolidation phase, and I think this may take a couple of months to actually come out of this phase and go past levels close to 180 will be crucial for this stock. Once that is taken out, it will head towards 240 odd level, but it's still a long way ahead.
Got that view, Gaurav. Gaurav, as well as Gaurang, stay on. We will be back. A very quick commercial break. More stocks on the other side.
सर, बिजली का बिल आया है। सोलर पैनल लगवाने के बाद भी अमाउंट बोलना है यार, 60 लाख।
60 लाख? अरे इतने में तो लग्जरी कार आ जाती। शौक मत हो, सात्विक के सोलर पैनल लगाओ और करो हर शौक पूरा। चाहे तो नई फैक्ट्री लगा लेना। घर हो या फैक्ट्री, बोलता है कार्तिक, सोलर मतलब सात्विक। खराब मौसम में भी काम करता है।
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
सर, बिजली का बिल आया है। सोलर पैनल लगवाने के बाद भी अमाउंट बोलना है यार, 60 लाख।
60 लाख? अरे इतने में तो लग्जरी कार आ जाती। शौक मत हो, सात्विक के सोलर पैनल लगाओ और करो हर शौक पूरा। चाहे तो नई फैक्ट्री लगा लेना। घर हो या फैक्ट्री, बोलता है कार्तिक, सोलर मतलब सात्विक। खराब मौसम में भी काम करता है।
Nikhil, first of all, thank you for coming in and answering to shareholders and investors. I think that's very, very positive because management doesn't usually want to come and talk about when these things happen. So I'm glad that you're doing that.
This was a legacy issue. It's been overhanging over the company for the last 10 years. And we are glad that it is, in whichever way it is completed and disposed of. Though there is no financial impact on the company, the shareholders it concerns, and that's why we are here to clarify and to give a clarification that it doesn't impact the company's day-to-day workings. It doesn't impact our growth plans. It is of the past of 2015 to 21. The compliance since then we have been up to date. We haven't got any compliance issues since 2021 till date.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
और रहमान
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
Welcome back to Profit Buzzers right here on NDTV Profit. Let's first look at how the markets are doing, because just when the press conference was happening, we saw the market effectively move to 24,800. We breached that mark. Just seen some selling again, but we're very strong, almost 140 points up on the Nifty 50. Let's look at the contributors, and I'm guessing there will be some key banks which will be driving the Nifty 50 momentum today. HDFC, ICICI, Kotak, Axis. That's the top four driving the strong positive momentum. We did see the RBI come out with some measures that have benefited the larger institutions, and definitely all of these banks are some key ones that are seeing that benefit. On the losing side, very marginal, but not enough to drag the Nifty down today. But overall, a very strong momentum that we've seen on the Nifty post 7 to 8 days of consistent pressure on the benchmarks. When you look at the advanced decline ratio, that's the other one I want to just highlight. It has been, crisscross over the last few days. Today, it was, coming just before the RBI meet and the announcements. It was getting together, and then we've seen a straight run of positive gains of advances essentially on NSE. 1,600 stocks, 2:1 essentially on the gains for the NSE stats that we can see. Mid cap, small cap is the other one. Very quickly before we go on to Varsha, there are some key stocks that have been reacting on the same today. Mid cap 150 is up almost 0.3%. The small cap 250 as well is up 0.4%. BSE 500 shows you some individual movers that are there today. Tata Investment Corp has been one which has been raging through because of their stake in Tata Capital. But apart from that, Sun TV is up 7%. Aegis Logistics has been continuing its positive momentum, is up almost 4.8%, as well as something like Shriram Finance, which is up 4.5% as well. But time now to look at some of the key top stock buzzers essentially in trade at this hour. Lupin, Allied Blenders are buzzing in trade today. Varsha joining in to give us some key details on these stocks. Varsha.
Well, thank you so much for that. Let me start with Lupin, wherein US FDA has approved their drug which treats or prevents blood clots. Now, this drug will be manufactured in their Sambhaji Nagar facility, and if you see the estimated market size for this drug stand at around $11 million. Well, next on the list is Allied Blenders and Distillers, wherein they've inaugurated a PET bottle plant in Telangana with 600 million annual capacity. And this is a part of their 525 backward integration program, and the margins are expected to rise almost 300 basis points by FY28. Last on the list is Ola Electric Mobility, wherein ARM is expected to raise 877.64 crore. Now this is a preferential issue of rupees 10 each.
Varsha, Gaurang, let me come to you. Any view that you have on Lupin as well as on Allied Blenders?
So on Lupin, we do have a positive coverage. Our research team does have a positive coverage. And my sense is that the aftershock of tariff on pharma, which is being implemented from today, 1st October onwards, I think it's a thing of the past. We've had a lot of clarity in terms of, specifics in terms of which company will get or which geography will get affected. So if you've been invested in Lupin from a long-term point of view, continue to hold on. On Allied, we don't have coverage, so I won't be able to give a specific comment.
Gaurav, let me just ask you quickly on what do you make of Ola Electric, because it had that strong reaction post hitting the low of about 39 to 40 rupees. What do the charts suggest for this one?
Yes, it has performed really well in the past, and still these are attractive levels to even consider this stock. Although it has corrected, and this gives an opportunity for re-entry. I'll prefer to buy the stock somewhere around 58, 59, which is a resistance mark here. And once that is taken out, a smooth run up towards 62, 65 can be expected in the immediate near term. Thereafter, a level close to 70 is possible.
But Varsha is still with us to give us some perspective on Pfizer, which is inked a deal with the Trump administration that will of course benefit that company. But Sun Pharma is also in focus. Why is that? Let's get in Varsha to give us a roundabout of both these aspects. Varsha, what do you?
Yeah, well, as we all know that Pfizer has signed a deal with Trump administration. Now this is to cut Medicaid drug prices, which will give a relief to Pfizer from tariff for next 3 years. Now this Medicaid covers about 8 to 10% of the US drug spending, and majority of Pfizer sales are protected. Now this is with respect to Pfizer. Now why Sun Pharma is in focus and why it is positive for Sun Pharma? Because the MFN, that is most favored nation policy overhang that was there, now that overhang is gone because the deal does not impact Medicare and commercial segments wherein Sun Pharma's Illumia product covers, which is a specialty drug. And the specialty portfolio of Sun Pharma contributes almost 19% to the overall revenue. So now deal doesn't cover Medicare and commercial segments wherein Sun Pharma's Illumia operates, and now both major risks, that is tariffs plus MFN policies agreement, is now substantially reduced, and hence Sun Pharma is in focus. And because of that, because of this deal, if you see the global innovator stock prices yesterday were up, showing no pricing pressure because of this agreement.
Well, thanks so much for that, Varsha. But Gaurang, you gave your view on Lupin. Any specific view that you have on Sun Pharma as well, because it was expected to be a tough year for the company? What do you make of this new information and your view on the stock?
So I think as days goes by, we are getting more and more clarity. I hope this comes from the beginning rather than keeping things in the dark or puzzling people around the world. So on Sun Pharma specifically, we do have a buy recommendation on Sun Pharma. Our targets are in somewhere close to about 1830, keeping in mind the earnings that we've seen so far. If earnings which are going to be announced in the future are something that pleases us or are beyond our numbers that we had penciled down, we would definitely revise these targets accordingly. But currently, we do have a buy recommendation on Sun Pharma, and I think we will get more clarity as we go into the next week and possibly in the next couple of weeks as far as this tariff is concerned, specifically with pharma.
And fair point, Gaurang, because we are seeing new information, new sectors are largely getting impacted day by day as well. So that's the other one to watch. But let's pull up RateGain and see what that stock is doing, because while it was a bleak start, it did race up and is up over 6% right now, and that's because the company has actually done a very critical acquisition of Sojourn, and that's roughly about $250 million in terms of this particular acquisition. Is also important because it's very close to its market cap of about 7,000 to 8,000 crores as well. So it's a leading AI-led MarTech company which is focused on the hospitality sector, and this has been, it has 13,000 clients across the world. was also important is that, roughly 125 million of this acquisition will be funded by the QIP that RateGain did about a couple of years ago to fund inorganic acquisitions, and they'll take us the debt of a similar amount as well. So we have to see how that shapes up and has an impact on profits, but a huge acquisition nonetheless. In terms of Sojourn, it's also headquartered in US, has other presence in UK, Europe as well as Asia Pacific, and what's important is that they had revenue of roughly about $172 million for calendar year of FY24. The gross revenue per employee is at $470,000, and 85% of the company's revenue comes from US as well as Europe. They do operate two key verticals. The first one's property, which is 40% of the company's revenue. This includes services to independent as well as boutique hotels and larger group clients as well. The other aspect is that the increase in revenue and profitability is largely driven by the increase in traffic, which is AI led, and that's one of the key aspects. And the destination and corporate is 60% of the revenue for Sojourn. That is serving as a destination for marketing organizations, attractions, hotel, airlines, amongst others as well. But Gaurav, on RateGain, what is your view on the stock? Because we've already seen a 6% up move. Does this rally have more legs to go?
Yeah, RateGain has been a phenomenal performer in the recent past. It has posted a stage run up from 450 to 680 plus levels. I think this particular move has some more steam left, and 720 to 730 is the level where the stock can extend in this particular up move itself.
Gaurang, do you have any view by any chance on RateGain?
Puneet, no specific coverage, but I think these acquisitions, my only concern is 80% plus revenues coming in from Europe and US. Any kind of disturbances over there could be a little bit of problematic, but I think acquisitions like this always contributes to the growth of the company.
Fair point, Gaurang. But let's look at the three IPOs that listed on the bourses today, and we also spoke to EPAC Prefab, but that one was under pressure today. Let's pull up all the three stocks on screen right now. You're seeing roughly companies continuing to be down 8%, but BMW Ventures have taken a hammering today. The stock's down 25% on listing day, while Jain Resources, the recycling company, is up almost 22%. So we've seen a flurry of IPOs this week, the previous week as well, and we're seeing a lot of new companies coming into the fray as well. But Gaurang, let me get a quick view from you. If you had coverage on either of these IPOs which listed today, as well as what we've seen in the last couple of weeks, anything that you like?
Some of the names surprises me, BMW Ventures, to be very honest. But Puneet, we don't cover these names. And I know last week itself, and even before that, I had made it very clear to the viewers that please be very, very careful when it comes to investing in IPOs, because most of them, Puneet, as we all know, look at listing gains. And that's the only thumb rule that they go by. That's not the right approach to go in for an IPO. We have to look at the company, product, services, management, valuation. There are lots of parameters. Again, no specific comments on either of them because we did not cover them.
Got that, Gaurang as well as Gaurav. Thank you so much for joining in today, giving us perspective across a bunch of spaces as well as stocks. We look forward to our next conversation. But viewers, before we go into the break, we actually spoke to Sanjay Singhania, the MD and CEO, as well as Nikhil Bothra, the Executive Director of EPAC Prefab Technologies. And we spoke to them earlier about what's the outlook of the company. The company operates in the prefabricated building space as well. Listeners, as we wrap this show, thanks so much for watching in, but a very interesting conversation going out. Let me just take the first point with you, Mrs. Singhania. We spoke a little bit about the IPO at the time of the launch, and the prefab industry has been growing leaps and bounds at this particular point of time. What are you seeing essentially in the steel structure business as well as the entity? What is the growth that you're expecting in the medium term? So just to take the conversation forward, because I think the last time we spoke, you mentioned that since 2019 is when the business really just took off in the prefab space. So talk to us about the opportunity for EPAC Prefab at this point of time.
Yeah, thank you so much for giving us an opportunity on this momentous day of listing of our company EPAC Prefab. And this company EPAC Prefab has grown at a CAGR of almost 55% 5 to 6 times of the industry growth in the last 4 years. Going forward, the kind of tailwinds which we see in our industry, in the prefab industry, the kind of replacement that is happening over the conventional construction because of prefab technology adoption in this country, I think the market at this time is growing at around 15%. And now we are used to beating the market, we are used to beating the industry growth. So as per our past records, we continue to grow, at a rapid scale in future as well. Yeah.
Within sectors, if you can give us some perspective as well, because we have limited players in this space that's listed as well, but from what we can gather, sectors like automotive is taking a huge leap towards this space as well. Could you give us some outlook on what you're seeing currently on the ground?
Yes, basically because of the capex cycle in the country right now, we cater to 3 different segments of the market. The first one is the new factories which come up, so they are our customers. So as you rightly said, auto, because of the EV and the revolution in the battery, and then right now this solar renewable energy, FMCG has been consistent, capex cycle they have been always. So these are the sectors which are our primary business coming for the new factories. Then we have the warehousing and logistics. So there also the uptake is fantastic right now. A lot of new warehousing opportunities are there, and there are most of the good companies, big companies, which are already a part of the REIT, are already our customers. And the third big opportunity right now for us is the high-rise buildings. So high-rise buildings in commercial, institutional, data centers, these are the kind of opportunities which we are working on right now.
Well, the next question was largely on the use of funds, because you have roughly about a 504 crore issue, 300 was for fresh issue. Could you talk to us a little bit about what this would mean for the capacity addition in the prefab business, because you have a new plant coming in Rajasthan as well as some for the existing plant as well. So what would that take your capacity to in the near future post this expansion?
Yeah. So this 300 crores of primary is going into 3 buckets right now. 160 is going into capex, 70 crores is for debt repayment, and 70 crores is for general corporate purposes and gearing of the working capital. So out of this 160 crores capex, we are doing a capex of 58 crores in our Mambatu, Andhra Pradesh plant. There we are ramping up our structural steel fabrication facility from 1,33,000 tons to 1,70,000 tons. And the second facility, which is a greenfield coming up in Ghiloth, Rajasthan, is for insulated sandwich panels. There we are putting up a capacity for 8 lakh square meters of insulated sandwich panels, and it will take up the total capacity to 21.1 lakh square meters. As far as the timelines are concerned, while the Mambatu expansion will happen during this financial year, the Rajasthan expansion, the new greenfield expansion will happen in the first quarter of next financial year.
And Mr. Singhani, if you can just give us some perspective as well, roughly about 200,000 MTPA will be your capacity post that, and just rough numbers here. How much would that be compared to the whole industry, and if you can give us some perspective on that as well?
Yeah, I think in terms of industry, in terms of capacity, post this expansion, we should be number 2 player in terms of capacity, and the overall market in terms of tonnage is around I would say 20 to 22 lakh tons at this moment, and it is growing at a CAGR of minimum 12 to 15%.
सर, बिजली का बिल आया है। सोलर पैनल लगवाने के बाद भी अमाउंट बोलना है यार। 60 लाख।
60 लाख? अरे इतने में तो
लग्जरी कार आ जाती, सात्विक के सोलर पैनल लगाओ और करो हर शौक पूरा। चाहे तो नई फैक्ट्री लगा लेना। हाँ? घर हो या फैक्ट्री, बोलता है कार्तिक, सोलर मतलब सात्विक। खराब मौसम में भी काम करता है।
सर, बिजली का बिल आया है। सोलर पैनल लगवाने के बाद भी अमाउंट बोलना है यार। 60 लाख।
60 लाख? अरे इतने में तो
लग्जरी कार आ जाती, शौक मत हो। सात्विक के सोलर पैनल लगाओ और करो हर शौक पूरा। चाहे तो नई फैक्ट्री लगा लेना। हाँ? घर हो या फैक्ट्री, बोलता है कार्तिक, सोलर मतलब सात्विक। खराब मौसम में भी काम करता है।
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी, सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
Nikhil, first of all, thank you for coming in and answering to shareholders and investors. I think that's very, very positive because management doesn't usually want to come and talk about when these things happen. So I'm glad that you're doing that.
This was a legacy issue. It's been overhanging over the company for the last 10 years. And we are glad that it is, in whichever way it is completed and disposed of. Though there is no financial impact on the company, the shareholders it concerns, and that's why we are here to clarify and to give a clarification that it doesn't impact the company's day-to-day workings. It doesn't impact our growth plans. It is of the past of 2015 to 21. The compliance since then we have been up to date. We haven't got any compliance issues since 2021 till date.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
अरे और रहमान,
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं। उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy
ICICI CDSL for the long term? Buy, sell or hold.
The answers you need, straight from the experts.
Hello and welcome back to NDTV Profit. We're now in conversation with the management of Mahindra & Mahindra post reporting their numbers essentially for the month of September, and it's going to be a bumper month to say the least. Apart from the numbers, we'll also get to know what's the current demand environment like on the ground and what the management is seeing as well. But to do a lot more of this conversation, I'm now being joined by Mr. Nalinikant Golagunta. He's the CEO of the automotive division at Mahindra & Mahindra and looks at the passenger vehicle side of the business. Mr. Golagunta, very good afternoon to you. Thanks so much for joining in. Let me first ask you on the numbers as a whole. They've seen a 10% growth in this particular month, over 56,000 vehicles sold. So many congratulations for that. But it was a different kind of a month than what we've seen in FY26, because largely first 21 days sales were largely absent because of Shraddh as well as the GST cuts that have started from September 22nd. What have you actually seen on the ground since last Monday? If you can give us some perspective of what is happening on the ground for Mahindra & Mahindra.
Yeah, absolutely. Thank you for having me on the show. So I think there's two different pieces. You captured the situation very well before 22nd. Significant amount of pent-up demand in some sense, and all of that kind of came into fruition post 22nd. And you see that in the customer retails, which are being reported by our dealers at this point in time. So we see significant growth happening on that front. On the SUV front, in the first 9 days from Navratra, we see 60% growth in dealer-reported customer retails. And on the commercial vehicle side, we see 70% plus in terms of growth of customer retails as well. Now, of course, some of it is pent-up demand from the earlier days in the month, but definitely there's a significant momentum which has come with the GST 2.0 reforms and the demand it has triggered.
Mr. Golagunta, you mentioned that 60% growth is what you're seeing essentially in terms of retails. That will be from September 22nd till the end of the month versus the same time last year. Is it on the month-on-month you're also seeing that impact?
Yeah, just to be careful, what I was referring to is the first 9 days of Navratra retails that I'm talking about. What we put, of course, the sales numbers I put out is month-on-month, that's 10% growth.
Yeah.
But I'm just seeing in terms of the customer retails on the ground, which our dealers are reporting, that for the first 9 days is showing significant momentum.
What's also been the momentum in terms of inquiries also, and that essentially translating into bookings as well, because you might have seen a lot of inquiries even during the Shraddh period as well. So essentially, is there any kind of percentage number over a 40% growth, something like that you're seeing currently on the ground in terms of inquiries before as well as during Navratri at this particular point of time? Because from what we're gathering from the dealers as well, there are a lot of consumers actually came in to check the prices of certain models they wanted to capture before 21st and then post what's happened as well. Is that something that you have seen? What's the kind of growth that you've seen in inquiries and bookings at this time?
Yeah, significant double-digit growth we see across both inquiries and bookings. But at the end of the day, the hard truth comes from customer retails, and that's the number we're tracking very closely with through our dealers.
The other thing was, because of the festive period as well, you pulled back a lot of inventory in the last month, and you reported a 10% fall in sales, and that largely was because of post 15th August we saw the customers largely being away from the dealerships. The number this month has been strong as well, but do you feel that you're still building in that inventory before the whole festive period that you will see in the next whole month? So still a lot of that will get captured in the next month rather than all of that getting captured in the numbers that we are seeing currently?
Yeah, so there's significant demand still out there in the market. The challenge as an industry we're facing at this point in time is a lot of that dispatch has got bunched in the last 8-9 days of September. And the constraints in terms of the trailers we have to transport these vehicles as well. So I'd rather say that that's the constraint in that sense, and some of that will play into October as well. But the demand is quite robust, and we are all working very closely to ensure that the vehicles get to the customers, get to the dealers, and so that they can be retailed next month as well.
Well, definitely, it's not a bad concern to have. Still a concern that'll get solved in the next month, I'm sure. In terms of models, though, because there are some key models like the 3XO, which has seen a huge price cut, and compared to the other models versus in the competition, it seems to be getting that benefit as well. So, have you seen that as a model that's seen the highest interest in this particular point of time, or anything else that you can give us perspective of which model actually has seen the huge interest, and you're seeing that getting translated into bookings in this time?
Yeah, it's a great question. So we actually are seeing demand across the board. You're right, 3XO is seeing significant uptick in demand and inquiries with the Revex, which is the new variants we put out as well. But we are seeing similar kind of interest in our Scorpio N. It's a very strong traction in the market on that front. So the affordability curve is being improved across the board. And for some of these models like in Scorpio N, you have price cuts in the excess of 1.2, 1.3 lakhs. So we see that showing interest out there as well. So very strong data from Scorpio and very strong numbers from 700 coming in as well. So it's not just on the low end of the spectrum. We are seeing it across the board.
And currently, you also have the Bolero New as a model that's seen reduction of GST from roughly about 31% to 18% as well. Are you seeing increased demand for that product as well? And if you can just capture if you've seen essentially between rural and urban markets, because the urban market was largely depressed for the industry as a whole over the last 3 to 4 months. This boost seems to be one of the key ones to revive that as well. Have you seen that translate into higher rural growth as well? Because that seemed to be doing well for you as well as for the industry over the past 3 to 4 months.
Yeah, so rural has been a good story for the last 4-5 months, and that continues with the GST cuts as well. So Bolero, to your question, both the Bolero Classic as well as the Bolero Neo, both of them have seen a significant jump in growth. And we continue to see interest going into October as well. So we are quite optimistic on the Bolero numbers going into October.
Just one final question from my side. Going into the next month, would it largely be continuation of the strategy that we've seen from your side, educating a lot of more consumers that are coming in essentially? And have you seen essentially the consumer largely sticking to what they'd essentially inquired about, or are you also seeing them moving a step up essentially in terms of the other models? Because while their preferred model might see a price cut, some others in your portfolio as well has seen other cuts as well, as you mentioned. As of now as well. So are you seeing any kind of premiumization by the consumers versus what they thought earlier to get at this time?
Yeah, we're seeing two different trends. Hard to say which of it is going to be a dominant trend, but one of them is what you mentioned, which is people upgrading themselves in terms of the models. The other interesting trend is people going up in terms of the variants itself, right? So you're looking for a mid variant, but now with the budget you have, you can potentially go by a higher end variant as well. So within the model, we're seeing that trend play out as well. So it's both of these, and we'll see how it plays out going into the festive.
Also, just one question on EVs and the momentum there as well, because that GST has remained similar at 5%. But just in terms of versus the gap, what it had versus ICE vehicles, and I know there is not a direct comparison for you versus what we see of the peers in terms of ICE versus EVs, even though the EVs have lower GST. How have you seen that momentum continue in this particular point of time? Because for XCV90, that's a whole separate consumer as a whole, but within the BE6, it does have a price point with other models as well. So what has been the momentum there to wrap up this conversation?
Yeah, very, very steady demand for both our models, B6 as well as 9E. One of the things you got to note is we have now launched all the different packs that we had initially announced. So we started with pack 3 availability, then pack 2. Now we have pack 1 available as well. So in that sense, we are now covering the entire price spectrum, and we continue to see good amount of traction for both these models across all the different packs.
Okay, well, that was the management of M&M, but with that, let's carry on with our regular programming. And this is in small cap. You're watching small cap buzzers right now. Before we talk about the companies and managements in focus, let's do a quick market check. Now, in terms of what's happening with the benchmark indices, now you're looking at about gains of around 0.7%, of course, favorable outcome in terms of the RBI policy meet that we are looking at. In fact, let's take a quick check at Nifty Bank also, what's happening over there. Nifty Bank also, if you're looking at, about 1.3% is kind of the uptick that we have seen. But the focus remains on the broader markets, Nifty, mid-cap and small-cap 250. That's where the story is at. Now, even those indices, 0.4% of an uptick in terms of mid-cap 150. Small-cap 250, we are seeing gains of around 0.6%, strong pickup from the last half an hour or 1 hour or so. In fact, also, let's see some stocks which are in focus. So, right at the top, the small cap 250 gainers, if we are seeing today, we have the likes of Jyoti CNC in focus. Along with that, we have a couple of other names also which are standing out. Advances, of course, in favor of what the declines are today. In what we are also looking at in terms of strong volume buzzers, which we'll also be discussing, is Suryodaya Small Finance Bank, Dynacon System, as well as Borosil Scientific, all buzzing in trade today. But before we go to the management, let's talk about an interesting stock which is in focus. This is Atlanta that I'm talking about, and it has backed a major 2,485 crore of an order express project with Elecon International, sending the stock up 20% today. It's locked in an upper circuit. One joins us with more details on why this is a significant kind of a project that we are looking for Atlanta.
Well, yes, thank you for that. So as you rightly mentioned, now the company has entered into a contract with Elecon International, and the contract is valued about 2480 odd crores. Now the contract is for the Bhandara Gadchiroli Expressway project in Maharashtra, and now what's really interesting is the market cap of the company is just 380 odd crores. So what we are seeing is the value of the contract, which is of almost 6 times the market cap of this particular counter, is what we are looking at. In terms of if we talk about the details of the company is engaged in the construction business, and they basically deals in infrastructure development activities, EPC contracts, and they're also engaged in PPP models as well. If I talk about the Q1 FY26 financials, the financials look quite disappointing, where we saw a decline of 5% in terms of revenue and a net loss of about 1.71 crores versus a net profit of 13 odd crores on a YOY basis. So this is how the overall picture is panning out for this particular counter.
Okay, well, thank you so much, Vansh, for those key details. Let me welcome in our guest for today to discuss the various counters that we're talking about. Mahesh Oja joins us, in fact. So, Mahesh, coming to you, first of all, Atlanta, we are seeing a 20% of an up move today, and this is on the back of the significant JV that it has signed, JV project that it has signed with Elecon International. Just want to take your understanding on this. Now, considering that this is a 2,000 crore plus project that we are looking at, Atlanta's market cap being around 300 crore or so, what is your view on this?
Good afternoon. Thanks for having me in this. So definitely it's a good news for a company like Atlanta, and I think still company can do well in upcoming time, as order size is very big compared to if you're comparing market cap of Atlanta. So I think 60 in near term we can see for Atlanta. After that word slow and steady, we can see some more upside, and we have to watch out quarter on quarter result follow. So I think this is a very positive news for Atlanta.
Thank you for that, Mahesh. Now coming to the management and focus is specialty restaurants. The stock has seen an uptick today, in fact, and it has been in focus. But to talk to us about it more, Mahima joins us with more details. Mahima, talk to us about the first quarter. What's the kind of outlook that we have before we bring the management on board?
Right. So just to give you as a perspective of what the company does, it's basically into QSR chains, right? Different brands it operates. It includes brands like Mainland China, O Calcutta, Asia Kitchen, Sigri, Riyasat, Sweet Bengal, Hopipola, etc. In terms of where the financials stand for Q1 FY26, standalone income grew by around 3% YOY basis. The withdrawal of service charge by the Delhi High Court has been, kind of a reason as to why the top line was impacted. Gross margins improved, quite significantly. EBITDA margins also improved in this particular quarter, and largely driven by expense management and contribution from new restaurants as well. In terms of aggregator platform spends, that remains significant at 5% of revenue. So that's a bit of concern as to where the online sales are concerned. In terms of cash position, that's around 163 crores. The management has said that capex will largely be done from internal accruals and the cash position. Geographical expansion, the company has been, keeping that in mind and doing that as well. Expansion into Hyderabad, as well as in Maharashtra and Eastern India is something that they are looking at. Lastly, in terms of same-store sales growth, this particular quarter was muted, but they're expecting a recovery from August onwards is what the management had said in the Q1 con call. Lastly, in terms of upcoming projects, that includes the kind of Siciliana expansion that they're looking at, Walter Burgers, even in terms of 7 new Asian restaurants and 2 Italian restaurants to open this year is something that the management has already guided for. they're working hard is something that they've said towards sustaining last quarter's 10 to 15% growth is something that the management has guided for. So key questions would be as to how the service charge largely has impacted the aggregator fee, how is that impacting, and of course, what's the outlook for same-store sales growth?
Okay, well, thank you so much, Mahima, for joining in. In fact, let's start on that note with the management joining us. Anjan Chatterjee, the CMD of Specialty Restaurants, joins us. Mr. Chatterjee, I want to start off the conversation by asking about, the post-service charge impact that we are looking at. In the first quarter, we did see impact in terms of where the top line is concerned. But, as you have said, the tone remains optimistic for the upcoming quarters. So just want to get your perspective in terms of FY26. What's the kind of outlook that you built in terms of, how, you're doing after this decision that has come from Delhi Court?
Service charge withdrawal, which was a compulsive one because of the Delhi High Court decision, I think a 10% of the top line chopped off from any company is a big one. In spite of that, I think we have been able to recover. I mean, maybe, quarter on quarter, we don't run a company quarter tak, because we are a long-term company, 32 odd years. We've been there, we're a debt-free company. So we look at it, the vision is slightly long-term throughout. And at this point of time, as we're talking, in spite of that 10% chop off of the chunk of the service charge, in spite of the fact that we have to continue to pay partially some part of our own income to the staff because, there are reasons we have to keep them going. In spite of that, I think the numbers that you see are not necessarily be the best ones, but surely looking forward to better times. Now, I can only talk about the growth which we have planned. I think the lady concerned has already expressed that we are looking at the domination that we have in the Oriental space in the form of mainland China Asia Kitchen. As we talk, Chandigarh is rolling out today. Then we have another Asia Kitchen coming up in Phoenix Mall in Bangalore. Then besides that, there's also the growth of the brand called Siciliana, which is the pure Italian form, which Avik, who's my son, who's actually taking this forward. So we've already got a Siciliana, which was a pilot project in Calcutta. Now the second one is going to be in Palladium, Bombay. Third one in Viviana Mall. Then we go to Bangalore, Mall of Asia. And also on the front of the Oriental, there is one part which is mainland China Asia Kitchen. But for the new generation, we have given birth to Gong, which is more, it's in terms of a high energy balanced with the wet-led and the food-led and being run by a Chinese and an Oriental chef, which will be a Pan-Asian restaurant, which is already piloted in Pune for a long, long time. So we're doing one in Bandra, then we're doing another one in Pune, there's one in Delhi. So these are the kind of structures on which we are working. And you will see some growth again also in Calcutta because there's a Phoenix Mall coming. We are very closely associated with all the work with Mr. Atul Luria does. So all malls of his, we have been a part of it. So I think as we talk about, in spite of the fact that the 10% which was chopped off, we have been able to stabilize, get our costs in place. Yeah, there have been inflation factors which have come in and out, but we have a great relationship with our suppliers we're going in. And I think that this is the time to look at a factor of profitable growth. Furthermore, what you saw last quarter onwards, I think we are on the right track to get things done and things are getting under control.
Right, Mr. Chatterjee, just on that, want to understand about the same-store sales growth as well. Even, that was slightly negative. So considering, all of these moves which are in picture for the business in the upcoming quarters or also, what do you see, this number by the end of FY26 and also again? And even in terms of the revenue growth guidance, does that stand at 10-15% with more of these growth coming back to the picture?
You see, as I told you, 10% service charge itself flattens everything. Everything, the revenue, the top line and SSG. So that 10% is chopped off. So from then, even in spite of that, we've been able to recover and get into that. But going forward, this quarter is the best quarter in this season, in the whole of calendar year. So I'm sure this quarter is going to be exceptionally good. We can see a lot of euphoria coming in and lots of, new things which have been done for our festive season. As we talk about the fact that we are on a Durga Puja time, so we will have to ensure that as we talk, things are becoming better and better in the festivities, which keep on coming from here to Diwali to, end of the year, December. So this quarter anyway historically has been the best. This will be better. And also we are looking forward to a few strategic, alliances, which we've been waiting for a long time. And one important brand, which again, Avik, who's not here, unfortunately, Walters, which is a burger. We've never ventured out into QSR, but this is a gourmet burger. Like you must have heard of the Louis burger and the gourmet market burgers like the Good Flipping burger. So it is in the same space, but has a complete differentiated offering. And we've nurtured, piloted 2 stores. 3rd, 4th, 5th, 6th, you'll have around 15 stores in this year. That's yet another area which is a vertical where we have got a chief business officer who's ex-McDonald's, going to be driving that whole thing in a completely different kind of a grammar, because, the DNA of that kind of business is not...
Mr. Chatterjee, sorry to interrupt you. With more of these restaurants coming in picture, you spoke about Walter, even Siciliana, the expansion over there. Just want to understand the overall capex for that, and would you require more funds outside for the same, or do you have internal accruals in place?
Madam, at this point of time, again, I say that we've kept it very debt-free and internal accruals are good enough. 160-70 crores are lying in the treasury at this point of time. So I don't think we need to borrow any funds till the time we have another 22 of these, restaurants coming in. Anyway, the international expansion in UAE, we are doing 2 of them, Dubai, one in city center and one in Ibn Battuta Mall, plus one in Abu Dhabi. That fortunately is a master franchise given to Resolute, and we don't have to fund anything in Dubai. So that's a different call altogether. But in India, the kind of growth of around at least 25 restaurants, bare minimum, is absolutely with us. Till then, again, we'll have cash thrown into the balance sheet coming in from the internal accruals.
Okay, well, thank you so much, Mr. Chatterjee, for joining and sharing that perspective on the company for FY26 and the years ahead as well. Another stock that we want to speak about today is Suryodaya Small Finance Bank, and it's roaring in trade. In fact, it's up over 13%. Vansh joins us with more details on what's leading to this kind of an up move today.
Well, yes, Anushi. Also, if we look at the 1-year performance of the stock is down 16% in the last 1 year, and it's up 8% on a year-to-date basis. Now, if we talk about the reasons for the underperformance for this particular counter, if we talk about their metrics, what we have seen is the NIMs that have been continuously declining since Q1 FY25. We have seen an increase in the GNP and NNPA for the bank as well. And also, if I talk about the return of assets, now we have seen a consistent decline in the return of assets from 2.3% in Q1 FY25 to 0.9% in Q1 FY26. So largely, if I talk about the reasons for underperformance, these are the shrinking margins, loan yields, and the asset quality pressures on the bank, which is leading to this kind of underperformance on a year-to-date basis as well.
Okay, well, thank you so much, Vansh, for joining in and sharing that outlook in terms of what's happening with Suryodaya Small Finance Bank. Mahesh, coming to you, quick view on this counter.
I think stock has a valuation, but already mentioned the pressure, what we have seen in last few months and a year, stock has underperformed. So I think any downside nearby 135, 134, 40 level could be ideally can be accumulated in lower level. In upper side, I think a 180, 185 range could be kept for a 6 to 9 month horizon. So yes, if any dip, we can consider for buying for a longer term horizon.
Okay, thank you so much, Mahesh, for joining and sharing those perspective on various of the counters that we have discussed. But that's all the time that we had on this edition of Small Cap Bazaar. Stay tuned to NDTV Profit and keep watching India Market Close coming up next.
सर, बिजली का बिल आया है। सोलर पैनल लगवाने के बाद भी अमाउंट बोलना है यार। 60 लाख।
60 लाख? अरे इतने में तो
लग्जरी कार आ जाती, शौक मत हो। सात्विक के सोलर पैनल लगाओ और करो हर शौक पूरा। चाहे तो नई फैक्ट्री लगा लेना। हाँ? घर हो या फैक्ट्री, बोलता है कार्तिक, सोलर मतलब सात्विक। खराब मौसम में भी काम करता है।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं। उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
सर, बिजली का बिल आया है। सोलर पैनल लगवाने के बाद भी अमाउंट बोलना है यार। 60 लाख।
60 लाख? अरे इतने में तो
लग्जरी कार आ जाती, शौक मत हो। सात्विक के सोलर पैनल लगाओ और करो हर शौक पूरा। चाहे तो नई फैक्ट्री लगा लेना। हाँ? घर हो या फैक्ट्री, बोलता है कार्तिक, सोलर मतलब सात्विक। खराब मौसम में भी काम करता है।
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
Nikhil, first of all, thank you for coming in and answering to shareholders and investors. I think that's very, very positive because management doesn't usually want to come and talk about when these things happen. So I'm glad that you're doing that.
This was a legacy issue. It's been overhanging over the company for the last 10 years. And we are glad that it is, in whichever way it is completed and disposed of. Though there is no financial impact on the company, the shareholders it concerns, and that's why we are here to clarify and to give a clarification that it doesn't impact the company's day-to-day workings. It doesn't impact our growth plans. It is of the past of 2015 to 21. The compliance since then we have been up to date. We haven't got any compliance issues since 2021 till date.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
जिसके हम ना हो जान रहे दिल ये तो जान दी है तू।
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
और रहमान
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock. Electronics is set to open its IPO from 7th of October till 9th of October, and this is probably, in 25 years now that a consumer durable company is coming out with its IPO. It's 11,600 crore IPO, and of course, investors who are looking to probably subscribe for the IPO have a lot of questions in mind, and to exactly, clear their questions and in fact get some answers from the management itself, we are joined by Sanjay Chidkara, the Chief Sales Officer of LG Electronics, and Atul Khanna, Chief Accounts Officer of LG Electronics, joining us now. Welcome to both of you, gentlemen, and thank you so much for taking out the time and speaking with us at NDTV Profit. Atul, my first question is to you. This is the first probably consumer durable IPO in the past 25 years is what we are seeing. What makes this the right time to list LG in India? Just want to get a sense there.
See, LG Electronics India is a 28 years old footprint in India, and we are having two large setup manufacturing plants, and we have particularly this time with respect to IPO, I believe this is a very right time that we are bringing in our IPO, and this listing will be giving us a great advantage to share our LG India's growth story to our public at large, including investors. And in particular, we say in going forward period, we are also having plans to expand our business in terms of domestic business as well as exports. As India still is having underserved penetration market for our size of products, and we are having all set of products in terms of premium as well as products for our mass as well as mid segment consumers. So we are very much excited for this upcoming IPO, and we will share this, and our endeavor is to create a long-term value for our investors.
Right. Mr. Khanna, the other question that I had was that the IPO is completely offer for sale right now. Just want to get a sense, because your parent company will be divesting around 15% stake in the company. Why not raise a fresh capital for growth? And why go for OFS only?
So, as you know that we are having a cash generative business as well. Though this offer for sale by our parent entity, LG Electronics Inc., is they are getting this offers for sale money, where they are investing a lot on our R&D activities, including providing us a technical know-how since last 28 years. And they are, for each and every product technology, we are getting it from our parent, and they are developing those products based on our Indian consumer insights, which we are bringing in for our selling these products in India, and producing those products almost to the range of 95% plus in our two production facilities. So, and we are highly cash generative business, and we are generating our cash in-house, and we are also reinvesting that cash into our business in the past as well as going forward period as well.
Understood. Sanjay, my next question is to you. As per the market data that's available right now, you're the second largest player in the consumer durable space after Samsung. Just want to understand as to where do you see the biggest headroom of growth in terms of where the market share is concerned?
So, see, I want to correct here. If we exclude mobile phones, we are the largest player for consumer durables and appliances. If I talk about our market shares, in washing machine, we hold market share of 33.5%, and that's the highest. For television, we are the market leader, 27.5% market share. Refrigerator again, 29.5% market share, which is again, we are the leader. We are the leader for aircon also. Inverters, ACs, our market shares are 20.6%, and microwave touching 48%. So, I mean, we are the market leader in individual categories. Our leadership is consistent more than a decade in India. And our leadership is across all price points. So, we are not only leader in volume zone, we are a very strong player in the premium zone segment also. If I talk about our premium shares, in OLED TV, we are touching as high as 62.3% market share. Our side-by-side shares are 44%. And for 5-star ACs, we are roughly around 27% market shares. So I mean, that way, our leadership is across all the products. And we feel, as Atul has also mentioned, India, the penetration for our consumer durables are relatively less if we talk about compare with the other major economies like China and USA. The product like microwave is just 4% households have, AC just 11%. And our products are just basics. I mean, it's not no more luxuries. It's needed for making daily life easy. So we believe all the categories will grow. And we are sitting on a tip of iceberg of massive growth in India, and premiumization will happen. Currently, the premium market is around 17%. It will grow up to 25 to 27% as per RedShare report by financial year 2029. And LG being a strong premium player, we believe that we will be biggest beneficiary of this premium drive.
So that's the management of LG India talking to NDTV Profit, and the first consumer durable company listing almost after 25 years. Welcome to India Market Close, and clearly the RBI governor has enthused the streets, and that is what is evident. 0.8% higher. We've actually scaled that 24,800 mark in intraday trading session, cooled off slightly, but major gains coming in with regards to Bank Nifty 1.3% higher. If you see the PSU Bank Index as well, it's a very interesting move between Bank Nifty, that's the private banking space, as well as the PSU banking space. If you can get those charts up on the screens, that will tell you, what's happening on that end. But a strong move there. The PSU Bank Index, which was up and about all these trading sessions, has actually slipped in trade today. That also has tried to see a recovery, but still trading in the negative with cuts of 0.1%. If you pull up the private bank index, that's where the pressure was all this while, and all the announcements that the RBI governor has made do benefit your larger banks, and that's where the action is. 2% up move coming in on the Nifty private bank index. Let's look at the sectoral heat map, and then we'll look at the Nifty 50 heat map as well to give us an idea of what's happening. In terms of individual sectors, apart from MNC and the PSU bank index, everything is in the green. Media, last couple of trading sessions were weak, has become the top gainer today. The private bank index is seeing buying interest. India Defense seeing some good moves. Healthcare, pharma, real estate, auto. Your rate sensitives also are still firing on in today's session. Consumer durables has also seen a pickup today. So FMCG, consumer durables and consumption seeing gains in that range of around 0.4% to 0.6%. Let's quickly look at the contributors of Nifty 50 or even a heat map of Nifty 50 to look at what that is indicating. You do have some greens, but you are seeing pressure on the Bajaj Finance. In fact, yesterday's session you had a pressure built up which was happening on the Bajaj Finserv. Ultratech Cement, Maruti, Tata Steel, Asian Paints are the ones which are trading under pressure. Auto is interesting. Maruti, auto sales numbers are trickling in, but on the way the stock has run up, the stock is down around 0.8% today. Tata Motors, the top gainer today, 5.5% up move there. Shriram Finance also smart moves. Kotak Mahindra Bank, Trent. In fact, Mahima did do a deep dive yesterday as to why Trent was a darling, and still analysts are expecting a target price little over 4,000 or I think about 6,000 on this counter, and that's picked up in trade today. Axis Bank, Sun Pharma, Geo Financial Services, Adani Enterprises, Dr. Reddy's are a few of the other names. IndusInd Bank also could be one of the beneficiaries, which is seeing some smart moves from auto. iSure again in the positive. So that's the trend that we're picking up. Your rate sensitives also are in the positive. Your private banks, Mahima, have picked up, and PSU is seeing profit booking today.
Absolutely, and even in the broader end of spectrum, right, a lot of names are buzzing on the back of the kind of commentary that's come in after the RBI meet, and that's reflected in how the mid caps and the small caps are also performing. The mid cap 150 has seen an uptick of around 0.6% as we speak. The small cap 250 is also up around 0.8%. So good recovery with regards to where the broader markets are also concerned. In terms of some specific names that are fairly doing well in trade today, a lot of media names doing well today, and that includes counters like Nazara Tech, probably on the back of the meet that's going to happen today, and consider the online gaming bill. There are counters like NetWeb Tech, Green Panel, Optimus, Sirma, SGS, RateGain, Sterlite Technologies that are fairly doing well in trade today and up around 6 to 12% in that range. But some counters that are seeing pressure includes your JSW Holdings, which is down 5%, locked in lower circuit, delivery down 3.4%, Metro Brands is seeing some kind of profit booking down by about 3%, NLC India, KC International, BKG Foods, V-Guard are some of the counters that are facing a tad bit of pressure in trade today. So that's with regards to some counters on the BSE 500 that are kind of buzzing in trade today. But there's one counter that we've been talking about, and that's KPIT Tech. Two brokerages note with starking different views. In fact, we've seen during the day today, and there is a talk of the town that after two big brokerages have kind of put out a note on the counter with a mixed view, despite the kind of stock performance that we've seen in September. It's a downtick that we've seen on this counter. Puneet joins us with a bull versus bear case on KPIT Tech.
Well, thank you for that. It's definitely one of the key stocks because yesterday it was down almost 10% in the trade today, and that largely happened in the last hour or so with no particular information coming in from the company as well. So that was one of the key aspects. That's what JP Morgan's view is. There was no fundamental reason for this correction, and hence they continue to maintain their positive view on the stock. On the other hand, Goldman Sachs in a view today came out saying that they are expecting the organic constant currency revenue to largely decline 2% in Q2, and hence that could be one of the potential reasons for the correction on the stock yesterday as well. They're also anticipating in the second bull versus bear queue, we're continuing with what both the brokerages have mentioned, that they've actually cut FY26 to 28 estimates in terms of earnings per share by almost 16%. And that's a stark, contrast to what something like a JP Morgan feels, because they are saying that because of this particular correction, it's a yes and a time to buy KPIT Tech as of now. When you finally look at the valuation, that's the third bull and bear case. We're looking at 37 times price to earnings for FY26. That remains expensive to say the least. But the consensus EPS estimates also suggest largely not much growth, essentially flat growth in FY26 as well. So that's the bull and bear case for KPIT Tech. There are a lot of uncertainties, but yesterday's price action, according to Goldman Sachs, is based on uncertainty that the company will see in this particular quarter.
It's a very interesting case, an opportunity for investors to nimble in. And I think that's what you're seeing, buying interest that has come back after the kind of knee-jerk reaction that we saw in yesterday's session. Today, the stock is up nearly 3.5%. Kishore Patil, co-founder and CEO and MD at KPIT, joins in. Kishore, welcome to the show. Always a pleasure to speak to you at NDTV Profit. My first question coming to you is, with regards to the expectation that the second quarter could be weak, where the organic revenue could decline on a sequential basis, versus an earlier expectation that was one of the reasons why the markets reacted the way they did. Yes, a potential knee-jerk reaction because the quantum that the stock slid was really high as compared to the expectation. Your initial comments?
So first, I would like to reiterate that we are in a blackout period. I will not make any statement about any numbers or anything, but I would reiterate that what we have given in terms of how the year will pan out, what we will be actually at the end of the last quarter, and we stick with that. So there is nothing which has happened differently than what we have said.
Okay, so anything that you've heard from your investors as to why this kind of a knee-jerk reaction in yesterday's session?
I mean, I guess there was a selling buy on some counter. We don't know any. Even I'm traveling currently, but anyway, otherwise also we don't know. Our team also doesn't know. Must be some of the institutional investor have exited. I think that might have put the pressure in terms of in terms of buying, selling.
Mr. Patil, in the past couple of quarters, hi, of course, Mahima also joining in. In the past couple of quarters, we've seen the kind of pressure that has been there on a lot of IT names, right? Just want to understand as to whether you're seeing early signs of demand recovery, and if yes, is that across clients and verticals, or are there specific segments where you're seeing demand recovery in?
I think I can only reiterate what I mentioned. I think we believe there will be shoots of growth going forward in Q3 and later is what we have said, and I think that's what we do believe that that's how it will be, and that's how it. I am not very authentically can talk about the industry, but probably may be true.
Okay. Kishore, the other question I have for you is, a couple of brokerage notes. I'm sure you've gone through what a JP Morgan has come out and said, what a Goldman Sachs has come out and said on the back of the fall, where everyone is of the opinion that probably this is an opportunity to lap up and buy a KPIT Technologies. But a clear commentary that comes out from them is that investors will have to be patient to generate returns, and there's a potential for FY26 to be a washout year. Though they believe the stock from here will be a show-me stock. That's very interesting commentary that brokerages have put out. What would you have to say on it?
There is one comment I have is if you look at KPIT, I mean, there are many ups and downs almost last 20 years. You look at it, different part. Our stock performance has been pretty good over 3 to 4 years, if not outstanding in some cases. So it's always a question of time. We always say that don't look at anything short term. So I would say that the way company is positioned overall and is, anything in the medium term, looking at the position in the market, what we can do to the mobility industry, I think they have to take a view on that.
Last and final question to you. They mentioned that, KPIT will need to really prove it, that they can do it on a sequential basis by giving out the revenue growth and closing large deal wins. In your first answer, you mentioned that you're not deviating from the guidance that you've given. So if everything is on track, will KPIT be able to prove to the investors?
I mean, we have said what we have said, and I think from the fundamentally, we believe our fundamentals are good. Industries are uncertain, but for now, we have said what we have said. We will be in a position to deliver on what we have said recently.
Got it. All right, Ms. Kishore. Thank you so much for joining us at NDTV. Always a pleasure to speak to you, and I think we should connect with you immediately as soon as the numbers are out to understand what is in store and what KPIT has promised. They're saying they would deliver. It's very interesting because if you see the stock as well, Mahima, it's actually turned negative for the month of September. 4 consecutive sessions of decline that we saw in terms of KPIT, and positive monthly returns have come in only in 2 months. That's the month of March and the month of May. If you have to look at 2025 as a year, it's the worst single day fall that KPIT saw in yesterday's session in the last 12 months as well. And it's down over 14% in October 2024. So that was the last time when it saw a 14% single day fall. The highest one that did come in yesterday's session, which is nearly exactly after kind of a year. So interesting dynamics when you talk about a KPIT Tech, and taking the way KPIT Tech's business is into consideration, there could be green shoots coming in because of the revival that we are seeing in the auto demand. The kind of work that KPIT does with OEMs, that is the crux and majority of the revenue potential as well. So probably this is something that we should consider from here on. So that's with regards to KPIT.
And I think brokerages are also kind of saying that, right? That if the kind of growth guidance that the management gives and, KPIT is able to do that, it'll be one of the stocks to for sure, have in your portfolio. 12 to 17%, to 16% growth by FY27 is something that the brokerages are penciling in. Plus the Caresoft deal that has also kind of strengthened KPIT's presence in terms of strategy and growth as well. So these are, some of the points to most certainly keep in mind where KPIT is concerned. Of course, yesterday's selling pressure, management did mention probably some kind of selling pressure was there in the counter, and that is why we saw the kind of downtick in trade. But today we're seeing good
and strong moves in the stock coming in. 3.8% is the kind of move that we've seen. In fact, as we speak, it is at its day's highest point
level.
as we
speak.
And
I think the conversation and the commentary from the management also has made some bit of a difference to the investors, because that aspect of giving the confidence has come back. So that's the NDTV Profit impact that you're seeing on a KPIT Technologies. But moving on, auto sales numbers are out for the month of September, and this was something which is actually awaited by the investors as well, because the kind of euphoria that the festive season, the GST boost has created, whether that has translated to even some extent or not, Puneet will tell us what the numbers are indicating so far. Puneet, over to you.
Well, thank you for that. So definitely let's start with Mahindra and Mahindra first. Both on the passenger vehicle as well on the tractor side was a stellar growth, to say the least. They've done roughly about 56,000 units, a growth of 10%, and a lot more is to come is what the management estimates, because it is an extended period going into the month of October as well till Diwali. So that's going to be one of the key ones. When you look at the other key aspects, the export growth was also very strong in this particular month. Of course, the passenger sales at 56,000 units, but export growth of over 43% is what Mahindra done in the passenger vehicle space. The domestic CV on the other side, which includes the light commercial vehicles, has also shown a very impressive growth of 18%. So overall, we were working with a 10% growth that has now come in as well. So overall sales of 1 lakh units, a key feat for the company. When you look at the second key aspect, that's Escorts Kubota. It's the tractor peer as well. Another very strong performer here has beaten estimates very handsomely in this particular month. Almost 18,000 units is what the company has sold on an overall basis, with the tractor exports, of course, being a very small component. But the domestic tractor segment for the company has shown a very impressive growth of over 48% to 17,803. We were going with an estimate of about 13,800 units versus the overall that's coming at 18,200. So handsomely beating estimates again by Escorts Kubota. Finally, the other key ones, because we're still awaiting numbers from a lot of other players. So Hyundai is the other one that they've come out with the units of about 70,347, up 10%. The domestic as well as the export growth has been quite decent in this particular month, but the domestic still needs some leg up, and possibly some white spaces and launches will need to be addressed. That'll be the other aspect, but a decent performance nonetheless. Finally, Bajaj Auto is the last one that I want to just highlight very quickly. It's a 9% growth that the company has recovered. Of 5.1 lakh units is what they've sold. Overall, the two-wheeler space specifically has seen an 8% growth, but that's largely again led by the export market. A 18% growth in the exports, domestics up only 4%. So this will be a correction phase for the company, and that's why you've not seen the stock price largely, come perform versus the other auto players. But we're still waiting for numbers for a lot of other players as well, and that'll be something to watch. But overall, out of the 4 that have come out till now, it's a 4-on-4 which is beaten estimates.
All right, Puneet, thank you so much for bringing us those details. 4-on-4 is what he is rating the auto sales number in September. And, let's take that up with Ashwin Patil, who is the head of research at LKP Securities, joining us now. Ashwin, hi. Good afternoon to you. What Puneet was indicating is that the 4 numbers that have already come out are kind of showing that strength that has been seen probably in the last week of September with GST 2.0 kicking in. And passenger vehicle sales is something that has been on a stronger foot in September. Your first reading with regards to all the numbers that have come out so far?
Actually, only 4 companies have come out. 4 to 5 companies have come out with the numbers. We are awaiting numbers from many big companies yet. But just prima facie, looking at these numbers, those who have come out, they are fantastic numbers posted by Mahindra and Mahindra, Escorts, even VST Tillers, a small company which is manufacturing tillers and tractors. Even they have reported kind of 50% kind of growth. Even Mahindra on the tractor side, Mahindra, Escorts and VST, all the 3 have posted 50% kind of growth on a YY basis. Because the tractor GST rate has come down from 12% to about 5%, and the monsoons were quite good. They were above normal. The monsoon the actual formal or the official monsoon period has just ended yesterday, and we believe that the numbers are above normal. and the reservoir levels are also quite full, and the kharif output is expected to be very good. So overall, I mean, there is a zeal in the tractor segment, and we continue this. We expect to continue this kind of growth in the coming months, also the festive season, and because of this level, I think the rabi crops also should be good. So all the tractor makers are in a very sweet spot at this point in time. Then talking about the commercial vehicle segment of Mahindra and Mahindra, that has also performed really very well. Though the SUV segment, most of their Mahindra's portfolio lies in the above segment where the GST reform has not actually impacted. So Mahindra has reported about 10% kind of growth on the SUV side, which is quite moderate as such, we believe. But speaking on the commercial vehicles and the tractors performance, Mahindra has actually excelled. Then talking about Bajaj Auto, I think the domestic growth has been not that very positive as it was expected because of the GST cut and all. But considering that Bajaj is primarily a company which is operating in the premium segment, the GST reforms may have not impacted that much for Bajaj. But we are awaiting Hero's numbers, whose majority sales comes from the mass segment. And over there, the GST impact will be quite strong, I guess. So, but nevertheless, like Bajaj's exports have actually fantastically performed as usual. We have seen them like performing very well over the past few months at least. And on the three-wheeler exports also, the company has performed really very well. So actually the lever that Bajaj Auto's numbers have got are from the exports, that we would say.
Ashwin, afternoon, Hiral on this side. Bajaj Auto that you mentioned as well, it's going to be exports that will be driving the company's numbers. But one of the interesting aspects that we pick up on a Bajaj Auto is the way the EPS has performed on a Bajaj Auto. That's, I think, the only company in the two-wheeler space or in the auto space which has seen a downgrade on its EPS lately. Any reasons for that you can pick up? And secondly, do you see a turnaround on that aspect?
EPS downgrades, definitely. I mean, it is happening because of the volume competition that the company is seeing in the domestic markets. And the companies like TVS, if you see Hero also, they are actually performing well now. But the real competition is coming from TVS, who is gaining a lot of market share from them. And also on the EV front, like Bajaj, Chetak is number one or number two. There's stiff competition over there from the likes of Ola and TVS over there. So also on the margins front, we believe that the margins will be quite flattish at these levels at 20%, and the extra lever which we believe that were from the exports is already in the price, I guess, and three-wheeler growth is also quite expected on the expected lines. So I guess the next kicker which Bajaj Auto should get from the domestic market share wins. And after that happens, we can see again, EPS upgrade. But at this point in time, we believe that there's a lot of competition for Bajaj, especially in the executive segment where they are quite strong. So also in the premium segment, there is a lot of competition coming up from the likes of somewhere like Hero and TVS, etc., and Harley Davidson, etc. But we believe that the main reason for Bajaj is the degrowth or the small or the modest growth, I would say, in the domestic front.
So Ashwin, with everything said and done, the way September numbers have panned out so far, the commentary that we've heard from multiple managements after the GST and the anticipation of Diwali as well from here on, if you have to advise investors, which would that one stock be that you would put your bets on?
Yeah, actually the two-wheeler sector is actually performing really very well. So I guess Hero or TVS can be the two stocks which can definitely, be my top picks for the Diwali or the festive season coming up.
Interesting. TVS Motors and Hero Moto, two topics coming in from Ashwin Patel as a Diwali gift to all the investors as well. Thank you so much for joining us on the show and sharing your views. We'll quickly slip into a short break. On the other side, we'll bring you the chatter behind the dealing room in our segment Heard on Street. I think that's something which we will not have today because Samit is on leave, but lots more lined up on the other side. Please stay tuned to NDTV Profit.
सर, बिजली का बिल आया है। सोलर पैनल लगवाने के बाद भी अमाउंट बोलना है यार, 60 लाख।
60 लाख? अरे इतने में तो लग्जरी कार आ जाती। शौक मत हो, सात्विक के सोलर पैनल लगाओ और करो हर शौक पूरा। चाहे तो नई फैक्ट्री लगा लेना। हाँ? घर हो या फैक्ट्री, बोलता है कार्तिक, सोलर मतलब सात्विक। खराब मौसम में भी काम करता है।
सर, बिजली का बिल आया है। सोलर पैनल लगवाने के बाद भी अमाउंट बोलना है यार, 60 लाख।
60 लाख? अरे इतने में तो लग्जरी कार आ जाती। शौक मत हो, सात्विक के सोलर पैनल लगाओ और करो हर शौक पूरा। चाहे तो नई फैक्ट्री लगा लेना। हाँ? घर हो या फैक्ट्री, बोलता है कार्तिक, सोलर मतलब सात्विक। खराब मौसम में भी काम करता है।
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
Nikhil, first of all, thank you for coming in and answering to shareholders and investors. I think that's very, very positive because management doesn't usually want to come and talk about when these things happen. So I'm glad that you're doing that.
This was a legacy issue. It's been overhanging over the company for the last 10 years. And we are glad that it is, in whichever way it is completed and disposed of. Though there is no financial impact on the company, the shareholders it concerns, and that's why we are here to clarify and to give a clarification that it doesn't impact the company's day-to-day workings. It doesn't impact our growth plans. It is of the past of 2015 to 21. The compliance since then we have been up to date. We haven't got any compliance issues since 2021 till date.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
और रहमान
सोनू निगम के लिए जोरदार तालियां।
Welcome back. You're watching India Market Close, and one stock that is been in focus, PTC India Financial Services. Now, the board has expressed a surprise over the sudden exit of 3 independent directors, citing corporate governance issues. In fact, we have the Managing Director and CEO of PTC India Financial Services in the studio, Mr. R. Balaji, to help us clear the air on this issue. Mr. Balaji, welcome to the show, and a pleasure to speak to you at NDTV. Your first take in terms of the entire turmoil that we've heard with regards to governance issues right now, the resignation of 3 independent directors, which you also stated as the member of the board that it has come in as a surprise. Your initial comments.
Well, first of all, thanks for having me. First of all, I'd like to tell you and all your viewers, there's no turmoil at all. Okay. This was a surprise to all of us. And at the outset, I would like to thank the 3 directors who spent a majority of their tenure on the board. They joined the company's board in November 22, and they helped the company come out a lot of the issues it was plagued in the past. And that's vindicated by the fact that our ratings have improved, business is on track, and we're also having no regulatory overhang. So that's something that's happened. But this was a surprise. And as we all know, life is full of surprises.
Okay. Has the company sought to engage with independent directors on their concerns now?
See, I do not want to get into the realm of conjectures. They have given a letter. They haven't mentioned any specific reason. But if you look at it, all I can say is they never raised any their concerns either with me individually or at the board level. This has been a surprise for all of us, and just a couple of weeks back our ratings, CRISIL changed our outlook from negative to stable, and our business was going well. So this is something it is there. But one key takeaway, at least for me personally, has been possibly if there were any concerns, they never shared with me, and I think that's the task I have set out for myself, that possibly they did not, I could have done more to ensure that there's even some small latent concerns which have been surfaced out. That's something for us to work on together.
Mr. Balaji, some directors have, kind of alleged, and this is something that was there in the filing as well, stating that objections were met with warning of consequences. How do you kind of address this kind of perception?
I'm not aware at all. I'm not sure where did they say. It's not in their letter. I'm not sure. So I think normally when some things happen, right, we need to sift between fact and fiction, news versus perceived news per se. All I would like each of you to take a step back and say, where is the company now compared to what it was a year back? So I joined this company in July of 24. So if you look at the financial year of 24, there were a lot of qualifications on the balance sheet, and NPAs were there, and there was leadership vacuum per se. The board selected me. They also helped in hiring, instrumental in getting 2 other senior directors on the board. Now if you come fast forward to FY25, all the qualifications have gone, and in fact even in the independent directors meeting held in June this year, they expressed their appreciation for the improvement in systems and processes. So all these things have improved. NPAs have come down, business is growing, more importantly new management has come in. So all this has happened. So therefore, coming back specifically to your question, right, they never said anything either in their letter or something, so possibly I cannot react to conjectures.
So you're absolutely denying the fact that, the allegation that the chairman warned of consequences to the opposing directors is something which is baseless.
See, I'm not sure. We should just keep on. We can't get into whatsoever is happening out there. What we need to discuss, right? See, we need to understand business is serious. And while even news channels are a sort of entertainment, we should be ensure that we focus on the facts. And what I'm saying at this point of time, just hear me out for a minute. We need to be focused on what's happening. What we need to see is 2 very specific things. One, the company has transitioned successfully, and for that these independent directors have been a part of the transformation journey. So a big part of the success is also attributable to them. Something has happened recently, I'm not sure what was the thing. So we will find out what their concerns were to ensure that, because as everybody is aware, financial services is heavily regulated. The Reserve Bank is there, and even we are a listed company, SEBI is there. So we'll be doing everything to find out what were the reasons, if any, that this happened, and subsequently move forward onto it.
Okay. But I take your point, you're saying TV channels are a source of entertainment, absolutely, but not a business news channel, because heavy money is being traded, invested on the back of commentary that viewers listen to on a business news channel. So, 2, The allegation that appointment of Mini Ipe was being done in an ad hoc manner as well was something that we picked up. Will you also look into this allegation?
See, let me put it. What we would do, like especially as a member of the board and more importantly as a leader of the organization, there'll be focus would be on two specific things. One, there could be lot of hearsay, but whenever we take decisions, whenever we take actions or we do analysis, it should be based on solid facts.
Right.
So therefore, we should sift away from the hearsay and focus on what's tangibly happening. Secondly, more importantly, right, we need to understand that this as a company, even those directors are eminent, and even individually as an organization, we believe in laying down good processes and procedures. So whatever is the right process, that's what we would follow. And we need to steer away. And coming back to your query which you mentioned, which is very, very relevant, investors' money is involved.
Yeah.
Now, if you look, the proof of the pudding is in the eating. So if you look into it, this issue came about possibly after the market hours on Friday. And if you look after that, the stock has not reacted adversely. So I can only tell you what we as the management, my team and I have personally done. We have reached out to the various rating agencies, to the various investors, key stakeholders, to the regulators everywhere. And that's something which we will continue to do so. For us, the most important thing is to ensure that the transformation plan which we have put to ensure that the company's revival is on track continues unhindered. That's the most important thing.
Okay, you mentioned about the regulator as well, that you've reached out to the regulator as well as few of the other stakeholders. Has the regulator, may it be RBI or SEBI, sought any clarification from the company yet?
If it is there, we'll get in touch with you. So therefore, basically...
No, because you've reached out to them, have they come back to you that, you need to, as a board, clarify to the regulator as to what have been the lapses?
Nothing at this point of time.
Nothing,
Nothing at this point of time. See, it's very, very important. See, at the end of the day, right, compared to other sectors, where you're an auto company, electronics company, in financial services, we call institutions. Trust and credibility is built across generations. That's what we are doing. We'll continue to do so. We have come a significantly long way in the last 14, 15 months. We are still not up there with regard to some of the most hallowed names, but that's our destination that we are going to do. Improve consistently, ensure that we become a preferred financial services player.
A quick outlook in terms of the company. We have 30 seconds for that for the investors.
See, very simple. We are transforming, that's one. And our intent is to build a low volatility, high quality business which generates consistent return on asset of close to 3%. That's what we are doing, and we're focusing on small granular business, distributed infrastructure and sustainable finance.
So 3% ROA is what the company is focusing on. Thank you, Mr. Balaji, so much for joining us on the show.
Thank you.
At NDTV Profit, always a pleasure to speak to you. So that's the management of PTC India Financial Services. No major reaction in terms of the stock today as well, trading absolutely flat. Let's just pull up a 1 week chart and see what's happened in terms of the counter, and then we'll get in Kush Bora of kushbora.com and Aditya Shah, the stock down nearly 5.5% there. We have Kush Bora and Aditya Shah, founder of Hercules Advisor, joining in. Welcome to the show, gentlemen, and always a pleasure to speak to all of you. Aditya, my first question coming to you is, we were just talking to the management of PTC India Financial Services and you heard the entire conversation. I'm sure your view.
The entire saga around this stock does not bode too well. So for the time being, I try to avoid the stock, wait and watch the developments, and then take it forward from there. There are many other companies available within the sector, within the NBFC infrastructure lending space that look much more attractive to me. For example, the microfinance space does look attractive to me. So I tend to avoid companies where a little bit of corporate governance issues are there, and wait and watch as to how these are sorted to then take a call.
Your view with regards to where charts are concerned for something like a PTC India, would you be a buyer right now?
Hi, first of all, very good afternoon. No, I wouldn't be a buyer. The stock, not only, in the recent past, that is the last week or so, for the last, about 6 months or so, hasn't really done well, has seen constant selling pressure Even today's uptick that you're seeing is very mild on the back of hardly noticeable volumes. So I don't think this is a stock where you would want to take an adventurous trade just yet. So for me, right now, it remains on the avoid list.
Interesting move in the markets today as well. After that 8 consecutive sessions of decline, you're seeing some relief. The RBI governor has probably provided that cushion, and especially to the banking names right now. What would your advice be in terms of trading on the Nifty and Bank Nifty? And with that, your topics.
Sure, Hiran. So let's start with a couple of positives. I think what's happened is that the lower high, lower low formation, that we were seeing for the last 8 sessions, which was a bigger concern for me, honestly, rather than just the 8 negative closings, that's been broken. And how? We're also starting to see some sector rotation. So if you see the sectoral indices today, most of the sectors are in the green, and the only one that's in the red is PSU banks. I don't take that as a negative sign, at least even for PSU banks, which suggests that the sector that was doing well is seeing profit booking only so that the money can be shifted to the other sectors. So that's also a positive. Now let's come to a few areas of caution. Mild resistance at the 50 DMA, but going the way we are, we might just cross that and probably even close above that. PCR already with this 1 days of sharp up move close to 1.22, 1.23, so fairly close to overheated territories in near term. So there is a hint of caution, but with the kind of positives that we just mentioned, sector rotation, the kind of jump that we are seeing, I think a mild or a small long position can be created on the Nifty. Here the positional targets will be 25,000 and 25,200. The recent low of 24,600, which we tested 4 times in the last 4 days, should act as the stop loss. So that's the word on Nifty. As far as stocks go, a couple of names stand out. TD Power Systems. Here we've seen a very good move in the last 10-15 odd sessions, despite whatever the market has done. Volumes fairly healthy today. Also, you're seeing the stock gain ground. So 605, 620 are your targets on the upside. 575 is where you keep that stop loss. From the metal pack, while a lot of names have seen profit booking, the one name that has seen profit booking and is rebounding smartly is JSW Steel. So constructive on JSW Steel for targets of 1160 and 1180. 1120 is where you keep that stop loss.
Okay, so that's with regards to where, your top picks go from Akush Bora. But moving on, the banking space has been in focus, and this is on the back of the RBI MPC meet outcome. To start off with, clearly, they've kept the repo rate unchanged at 5.5% and maintained that neutral stance as well. And in fact, the stance has been absolutely unanimous, which is very interesting. FY26 CPI inflation estimated at 2.6% versus a 3.1% earlier, and growth projected slightly higher at 6.8% versus a 6.5%. The bank credit growth that has remained healthy is what they have indicated, and the new norms will cut banks' capital need for MSME and home loans, and they're proposing to bring in risk-based insurance premium. A couple of comments that came in from the RBI governor is something that has boosted, the space as a whole. HDFC and HDB Bank are 2 of the companies which are beneficiaries as well, and this is with the slew of other proposals where they've said that the RBI has dropped the limits on business overlaps between banks and NBFCs, easing pressure on entities like HDB Financial. It also cut the risk weights for infrastructure loans, reducing financing costs for NBFCs like PFC and REC. Vansh joins us to tell us more. Vansh, over to you.
Yes, thank you for that. So yes, the RBI has removed the proposed restrictions on overlap in businesses undertaken by the banks and group entities. So clearly the RBI's draft paper So the RBI's draft circular from October 2024 proposed some limits on excessive overlap between businesses and businesses done by banks and their respective NBFCs. Now clearly this is a positive for banks promoted NBFCs like HDB Financial, PNB Housing and Canfin Homes. Now this removes any overhang of forced stake sale by promoter or any change in the business mix at the NBFC as well. Now also if you look at the second proposal, we have seen a reduction in the risk weights. Now the RBI proposes to reduce the risk weights on NBFCs lending to operational high quality infra projects. Now this will further aid the NBFC. This will reduce the cost of funds for these particular NBFCs as well. Moving on, let's also look at the reduced cost will also reduce the amount of regulatory capital that the banks and NBFCs must set aside. So clearly this will be positive for infra lending NBFCs like REC, REC, IRDA and PFC as well. Moving on to HDFC Bank and HDFC Financial. Now this will be a big relief for both of them, as the allocation of business teams among entities would be decided by the bank boards. Now HDB had some of its operations which were in common to the HDFC Bank. Now this release allows the HDB Financials to continue and offer products common to the HDFC Bank. Now the common products include HDFC Sales and HDFC Securities as well. So clearly this will be a positive, as the proposed norms were a key overhang for the HDB Financials as well. So this is how the overall picture is shaping up for this particular account as well.
Thanks much for that as well. In fact, Aditya, you track this space pretty closely. With the two sets of announcements that have come in, on the back of which, in fact, HDB Bank has been able to come out of that IPO price band already in today's session, and a couple of other names from likes of an Axis, Kotak Mahindra Bank do stand to benefit with the kind of joint portfolios or similar portfolios that they have. Now, your views, and would you then say that this is a major overhang that is out of the picture, and this would prompt you to buy any of these stocks?
Over the last one and a half year, large private sector banks have done pretty well. You name ICICI Bank, even for that matter, HDFC Bank over a period of last 6 months has also done pretty well. So from my perspective, this is a minor positive for the banks. However, major positive for companies like HDFC Bank will be the margin pressures that they continue to face, or for a Kotak, the NPA problems that they really face. So from my perspective, that's a small positive. However, asset quality will continue to be the dominant force as this quarter results start to come in. Asset quality will be the major focus. So from my perspective, larger private sector banks should continue to remain 60 to 70% of your banking portfolio. 30 to 40% can go to smaller private sector banks and NBFCs, where you could play something like a Federal Bank or something like an IDFC First Bank, or a micro lender such as Ujjivan or an Arman. So these are all highly risky companies, but as the cycle turns, these stocks will continue to do really.
Okay. And Aditya, with regards to where reduction in risk weight goes on NBFC lending to operational and high quality infra products, likes of PFC, REC, IRDA, the ones which potentially are beneficiaries, these stocks did see a spike at the time of the commentary. Your view in terms of evaluations are stacking up currently, the way it has moved, and with this comment, does it augur a buy?
So the reduction in risk weight is positive for the infrastructure lenders. IRDA reported its numbers today, and those numbers were really very good. The loan growth is spectacular for IRDA as well. However, for companies like IRDA, asset quality continues to remain a challenge amidst Gensol's bankruptcy per se. So from my perspective, you have to be very careful on the valuation side of it, because growth is now starting to come in, but asset quality needs to be checked properly. So positive for all of these infrastructure companies per se, but I'm not too interested in companies like IRDA. They are going too fast, but asset quality continues to remain a major challenge. So one can look at PFC, REC, but not IRDA per se, due to the expensive valuations that they have got.
Okay, so PFC, REC, IRDA should be on the avoid list. Stay with us, gentlemen. We'll quickly slip into a short break. Lots more lined up on the other side. We'll get to the BTST calls as well. Please stay tuned.
Nikhil, first of all, thank you for coming in and answering to shareholders and investors. I think that's very, very positive, because management doesn't usually want to come and talk about when these things happen. So I'm glad that you're doing that.
This was a legacy issue. It's been overhanging over the company for the last 10 years. And we are glad that it is, in whichever way it is completed and disposed of. Though there is no financial impact on the company, the shareholders it concerns, and that's why we are here to clarify and to give a clarification that it doesn't impact the company's day-to-day workings. It doesn't impact our growth plans. It is of the past of 2015 to 21. The compliance since then we have been up to date. We haven't got any compliance issues since 2021 till date.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं। उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hi, welcome back to India Market Close. But you know, it's the first of the month and we get the GST collection number as well. And the gross GST collection for the month of September stands at a whopping 1.89 lakh crore rupees. It's seen a jump of over 9.1% on a YY basis. Let's get in my colleague Shrimi Chaudhary, who's tracking the space very closely, to give us more details. Shrimi, over to you.
Yeah, so the collection remained, robust in September with the gross GST mop-up standing at 1.89 lakh crore, 9.1% up according to the government data released, a couple of minutes back. And, just a quick breakup here that after adjusting for refunds, net GST revenue came in 1.6 lakh crore, reflecting 5% YOY growth, and refunds during the month actually surged 40% to 28,000 odd crore, which is somewhere reflecting both higher export activity and faster processing of claims. And in fact, this is interesting that this September figure marks yet another month for strong collection. If you see collection in July and August, it's at 1.86 lakh crore and 1.96 lakh crore respectively. But it's also showing a kind of volatile trend. But the range remains steady between 1.8 and 2 lakh crore of the GST monthly numbers, underlining the fact that resilience continue in the consumption and tax compliance. However, the tax experts do noted at this point that gross collections showing solid momentum, but net revenue growth has been moderated by a sharp rise in refunds. If you remember that the GST collection reflect the previous month economic activity, which means that whatever the activity happened in August, it's reflecting now in the September collection numbers. So all the GST cut, etc., what happened after September 22nd will actually reflect in the October numbers is what the trend has been. And there we will see perhaps the mixed trend coming in. Back to you.
That's Shrimi, but Aditya, let me come back to you because we've seen GST collections come in very strong between 1.8 to 2 lakh crore as Shrimi highlighted, and probably the government is expecting that it'll go above that with the boost in consumption. What are the pockets that you are liking currently in the consumption space? Because within discretionary staples as well as something like auto, those all are getting that benefit of the GST rate cuts. Any top picks that for the short term at least that we could see that benefit coming in?
See, this increasing GST, we cannot judge this properly because there was a lot of pent-up demand because people knew that GST cut would come in, and that's why those auto numbers for Mahindra or Maruti or even for Hyundai or Tata Motors are really very strong. Over a period of next 3 to 4 months, we will be able to judge how has the decrease in GST benefited all of these companies. However, in the longer term, this will be a positive. So you could look at autos, companies like a Mahindra and Mahindra or a TVS Motors. They continue to be really very strong within their own domain. If you look at the insurance companies like HDFC Life and LIC are the other ones who are going to benefit out of it. So insurance and autos are two sectors where I think maximum benefit of GST cut will come in because the government has significantly reduced the GST rates there.
Got the view, Aditya. Kush, very quickly, we've spoken to you actually about the auto pack quite a bit over the last few weeks. Just give us some perspective on anything that you're seeing on the charts, because those stocks currently which have come out with numbers barring Tata Motors isn't seeing too much action. Your view on some of the names like Mahindra, Hyundai amongst others, and get your view on Tata Motors as well. Today's 5 to 6% move, does it warrant a look back at this particular stock?
Hi, Puneet. No, I'm afraid not, because this still doesn't make it a good trading buy. It's still a good positional bet if you want, with a favorable risk-reward ratio. But despite the move that it's made today, if you look at it from a slightly medium-term perspective, 725, even 740, these have been some resistance levels that the stock's not been able to cross. So you could see some supply pressure going forward on some of these names, or rather in particular Tata Motors. What I would be more keen on is a Mahindra and Mahindra. The stock had a fantastic run. It's also had a round of profit booking. Now with the support around the 3,400 mark, the 50-day moving average close to that level, the stock's now starting to bounce back. So I would be more keen on something like, on Mahindra and Mahindra. Positional stop comes close to the 3,400 mark where it's rebounded from. And on the way up, you could have a rally, which is close to 3,530. And once that is taken out, 3,600 as well.
So that's for the auto pack. The stock of the day, stock of the month, probably I should call it, Netweb Technologies. 85% is the kind of upside that we've seen on this counter in the last 1 month. One of the top gainers in today's session as well. Anushi joins us as to what's really working for this counter. Anushi, over to you.
Well, thanks to that, Hiral, 85% or 80% plus is the kind of up move that we've just seen in the first month itself. In fact, even if you look at the last 6 months or the year-to-date period, we are looking at gains of over 160%. So strong performer, but let's understand what's leading to this kind of excitement on the street in terms of NetWeb Technologies. But before we do that, just a bit about the company. Now, the company provides high-end computing solutions. Along with that, it deals in fully integrated design and manufacturing capabilities as well. Now, in terms of couple of recent order wins have been in focus for the company. Since then, the stock has been buzzing strongly. It had received a 450 crore of an order as well, and this was to order for supply of Tyron AI GPU accelerated systems is what we are looking at. So 450 crore order that it had just received a few days back is what we are seeing. This is for deployment of AI infrastructure as well that we are seeing in picture. If we take the industry-wide breakdown as well, IT is the top contributor here. About 37% is the kind of mix that we are looking at. Space and defense, the next highest mix is what we are seeing, 28% coming from there as well. In terms of other data points also, if we see for the first quarter of FY26, now revenue from repeat customers has been up at around 72.7%, while the company did add about 23 new clients in the first quarter itself as well. Order book value stands at around 4,000 crore or 229 crore or so is the picture that we are seeing. In terms of outlook also going forward, what we are seeing is FY26 revenue growth guidance of around 35 to 40%. Do note that the management has maintained this 40% of a CAGR since its listing period as well. EBITDA margins also are expected to be in the range of 14%, with PAT margins being at 10 to 10.5%. In terms of the analyst coverage, not much of coverage on this particular counter, with about 3 buy calls and 0 hold and sell calls is what we are seeing. But strong performer, with over 100% gains in the last 6 months. So that's the overall picture that we are seeing for NetWeb Technologies as of now.
Thank you so much for that. In fact, Kush, 84% up move already in the last 1 month. Would you have a sell call on this one, or you're seeing further potential?
Becomes very difficult to give a sell call, because despite the kind of run, you look at the volumes today, the volumes are staggering, and so is the price action. While yes, it is not advisable to buy at the current level because of the risk reward ratio not being favorable, sell call is a different ball game altogether. So yes, I wouldn't suggest a sell call. Yeah, I would suggest if you have a position, continue to hold, keep a positional stop near the 3900 mark. But fresh positions, I'm afraid that the risk reward ratio is just not favorable. So hold with a trailing stop loss at 3900 for whoever's got it at lower levels.
We had the company recently on KYC as well. So do you have any view with the stock? Because they've managed to secure, the GPUs from NVIDIA as well. And it's largely, not a lot of competition essentially in the listed space for the company. Do you have any view on this one?
So from my perspective, before going into the company, I just want to say the company has done phenomenally well over the period of last 2 years. However, the stock valuation today is at about more than 100x multiple. Any slowdown in growth will then see the valuation multiple derate and the stock price will tank. So from my perspective, the company is in the GCPU space, which looks really very interesting. However, valuations leave no margin for safety, so the stock would be a clear avoid at this stage.
Got the view, Aditya, and as mentioned, this week I had this company on KYC just last Friday as well, and I do urge you viewers to watch it, because it's a very interesting episode, because we also had an analyst as well as the management in that particular episode. So do try and catch it, a very interesting one, NetWeb Technologies as well. But let's talk about some more stocks that are buzzing in trade today and must make it to your watch list. My colleague Varsha is now joining in to give us all of those perspectives. Varsha, over to you.
Well, thank you so much for that. Let me start with Sun TV Network, wherein Diageo may sell RCB at $2 billion. Now, this is a positive for United Spirits, but over here the upside is limited. The key trigger or the max potential is the bigger potential is for Sun TV. Now, why? Because SRH, that is the Sunrisers Hyderabad, could be valued at $1 to $1.5 billion US, and SRH forms almost 45% of Sun TV's market cap, which implies 40 to 50% of upside potential. So keep this on your radar. Then we have Shriram Finance, wherein the shares are up after reports of Japan's largest bank, set to acquire 20% of stake in the company. Well, they may raise stake further in future, but Shriram Finance came to the exchange and they said that they denied awareness of any stake sale and said that investors should ignore misleading media reports. Last on the list is Nazara Tech, wherein if you see the stock snaps 3 days losing streak, volumes are up at 8x of its 30-day average. But the interesting point over here is CLSA today downgraded the stock with 35% of downside potential from the last closing price, and stock recently began trading after bonus and stock split.
Thank you so much, Varsha, for that. Aditya, anything on your radar from a Nazara to a Shriram Finance to a Sun TV? Different news and interesting pegs.
Definitely. So Nazara Tech, as the new gaming regulations do come in, things are very, very difficult for Nazara Tech. So I would say the stock is a clear avoid. Shriram looks really very interesting to me. That is one of the stocks that I clearly have on the radar. And the third stock, I don't follow, so will not be able to comment on it.
Kush, either of these stocks that you have on your view, because the Sun TV was definitely one which was very interesting to say the least, as well, a move that is anticipated because of other corporate actions. But do you have any view on the stock, or are you just sticking with any preferred IPL teams as well at this point of time?
As far as the preference goes, I prefer Mumbai Indians. So if you've got anything there, let me know. I'd be keen. But no, not on Sun TV. The stock's actually not performed, right? And it just gives you those spurts. So I would actually take these, rebounds as an opportunity to exit rather than perhaps, ride the momentum and, make fresh positions. I do agree with Aditya. The one stock among the three that even I find interesting is Shriram Finance. It's had a good recovery. Today, on the back of good volumes, it's taken out a few resistance levels. I'm generally bullish on the NBFC and banking space. I think Shriram Finance has had a round of underperformance. I think it's now time for a catch-up rally. I won't be surprised to see the stock head towards 675, perhaps even 710 kind of levels, from a medium-term perspective. So constructive on Shriram Finance.
The stock is at the day's highest levels. Another counter or another space that is buzzing on the Pfizer deal with the US government is Sun Pharma. So both these counters, strong moves where Pfizer will be cutting the Medicaid drug prices. They're offering discounts under the MFN pricing and direct selling offering. And in return, they're getting a 3-year relief when it comes to tariffs. Medicaid covers almost about 8 to 10% of the drug spending, and majority of Pfizer sales are then protected. On the back of which both the counters are buzzing in trade. The impact on Sun Pharma is that the MFN overhang is removed with the Pfizer deal, and it does not actually impact Medicare and commercial segments, and earlier concerns of US tariffs on the patented drugs are already resolved. Global innovator stocks are up, showing no pricing pressure. Aditya, any comments on both these names, Pfizer as well as Sun Pharma, because of the relief that does come in for the next 3 years?
So from my perspective, generic companies like Sun Pharma have rallied a lot owing to the easing of pricing pressure. So those stocks are not really cheap. So from my perspective, within the pharma space, I am looking at CRAMS, CDMO space, or the API space. Having said that, Sun Pharma is doing pretty well. The stock is too expensive. So right now, I would avoid the entire generic pack and focus on the other areas for the pharma space.
Got the view, Aditya. But the historic India-Europe free trade agreement comes into effect today, which is expected to bring in trade with $100 billion investment and create roughly 1 million jobs. My colleague Rishabh Bhatnagar joins in with more details on the same. Rishabh.
Right, another FTA that has been signed and delivered. You have the free trade agreement with the European Free Trade Association that has been signed, and this is essentially India's free trade agreement with 4 countries, that is Switzerland, Liechtenstein, Norway, as well as Iceland. So it is these 4 countries that have a grouping called EFTA, the EFTA, and this is the grouping that has signed an FTA with India. Now, this is the first FTA, the first free trade agreement that has an FDI clause baked right into the FTA. That means that these 4 countries together over the next 15 years
will be investing in India about a sum of about $100 billion. And these countries are legally mandated to do so, given the fact that this is baked right into the free trade agreement. So what we're also seeing is that 1 million jobs or about 10 lakh jobs are also baked into this agreement. So these are all firsts as we go by. What we're also picking up is that this EFTA is offering 100% tariff elimination on certain non-agricultural goods. These will be a big boost for Indian exporters, especially who are exporting these four geographies within the European Union. Remember, an EU FTA separately is being negotiated is currently being negotiated, and this is a separate FTA that has come in with these European countries as well. Again, as the top leadership in India constantly says, the rights of farmers, of livestock holders, of fishermen have been safeguarded in this one as well. Dairy, pharma, processed food, and coal. These are sectors that have been kept off limits. What we're seeing is that in the services sector, you have better access that has been enabled for Indian IT professionals, Indian creative industries, as well as the educational sector. What we're seeing is that there is a mutual recognition is also being signed, a mutual recognition agreement is also being signed in professions like nursing, chartered accountancy, as well as architecture. What we're seeing is that we've seen that these tariff cuts that Indian goods will be enjoying now, this will mean that Indian goods will have certain tariff-free access to very large markets like Switzerland as well as Norway. Remember, Iceland and Liechtenstein are still smaller markets, but Switzerland and Norway are very, very large economies with very, very high per capita income as well. What we're seeing is that most that the sectors will gain will be marine, will be textiles, engineering goods, as well as chemical exporters. These are the top four sectors that will stand to gain, given the sort of deals that have been made. What we can also expect is a bunch of companies that will be investing in India, setting up manufacturing bases in India as part of this FTA that is set to take effect starting October 1st.
This is going to be deeper outreach when it comes to the European Union in terms of the EFTA. Thank you so much for getting us all the information, Rishabh. But before we move forward very quickly in terms of the Union Cabinet decisions that have come in today, MSP for Rabi season has been announced at around 84,263 odd crores. On the back of it, there could be some bit of positive momentum that could come in terms of fertilizer companies in trade today, your crop protection companies that could be in focus as well on the back of this news. There you go. You are seeing that spike that is coming in. Coromandel International, Deepak Fertilizers. You name any of these companies, smart moves coming in all of these names, NFL as well, all of these trading at the day's highest levels. Apart from that, you're talking even about the 4-laning of Kalibor, Numaligarh section of NH 715. That is worth almost around 7,000 to 8,000 odd crores. So there could be some moves coming in terms of your infra names as well. So clearly, the Union Cabinet decision having some bit of an impact in terms of the allocations that have been made, and the MSP for Rabi, that is the bigger one, 84,600 odd crores is what the Union Cabinet has announced. Apart from that, an interesting visitor to India. We are talking about Russian President Putin likely to visit India, and the timing, the dates have been around 5th or the 6th of December, and the focus over here is going to be strengthening the defense trade ties amid Trump tariffs. In fact, the major preparations are underway in New Delhi to welcome President Putin. This would be, this could actually, Puneet, be a defining moment for the future of India-Russia ties, because the visit is with an agenda. You're talking about defense cooperation, and that is going to be something that will dominate the overall agenda between the meeting as well. There were a lot of conversations that were happening with regards to where the Su-57 offer to India goes, and this was an answer to America's F-35 as well. So, interesting move, and I think it's going to be something which will probably lead the defense sector. We'll have to watch out for these dates when the defense sector would start moving.
And definitely, it was one of the most anticipated meets. I think the date has now been confirmed, but even when Prime Minister Modi and President Putin did meet in China essentially for the SCO, it was one of the most talked about events. They did actually have a car ride together as well, and the picture did break the internet, but that was one of the key ones. The defense talks will be in focus, but a key date to say the least as well. Just want to mention we're getting Eicher Motor numbers as well. It's up 43% and at 1.24 lakh units. Estimate was of roughly about over 50% growth. So that'll be the other one to watch, but really strong auto sales numbers coming in as well. But today on our special segment, we put the spotlight on Lloyd's Metal. Now this is under the profit intelligence segment, and the counter has rather underperformed the Nifty Metals in September. Is Lloyd Metals a re-rating candidate basis based on its outlook? My colleague Vansh now joining in with his analysis on the same. Vansh, over to you.
Yes, Puneet, as you rightly mentioned, now the company has significantly underperformed the Nifty Metal Index. In fact, if we look at the 1 month performance, we have seen a decline of about 8% on the Lloyd Metals front, and we have seen a gains of about 8% on the Nifty Metals front as well. Now, let's also look at the reasons for the outperformance of Nifty Metal. It has already gained 8% in the past 1 month. Firstly is the investor optimism that is building up for the potential recovery that can come in from the China. And also we are seeing a strong resilient demand in terms of the domestic outlook for steel as well. Also, we have the Chinese steel spreads, which stands at multi-quarter lows. We have Indian steel prices which are trading below the import parity. And lastly, what we have is this safeguard duty which is in place. The 3-year safeguard duty remains in place, and also the LME copper and zinc prices are already up 4 to 7% in the past 1 month as well. Now let's also look at the reasons for the underperformance for Lloyd. Now there has been a slight delay in the environmental clearance. The clearance was expected around March 2025. However, they received the environmental clearance in June 2025. Also, there has been the company expects the pressure in sponge iron. Margins to persist for future as well, and they are also looking for the exports. Now the exports are currently unviable from the Mandovi pellets, which they have recently acquired a 19% stake in, and also there is pessimism about the business risk in terms of the expansion of the planned expansion into steel manufacturing from the current mining business as well. Now let's also look at the outlook for the company. The outlook for the company remains strong. They are targeting a top line of about 40,000 odd crores in the next 4-5 years, which represents about 43% CAGR in terms of revenue. Also, we have the annual capex. Now they are planning annual capex of about 7,500 to 8,000 crore for the next 3 years versus the capex of about 3,600 odd crores in FY25. Next, what we have is the EBITDA per ton. They are expecting it to be around $2,700 to $2,800 a ton in the coming quarters versus 2,200 rupees in Q1 FY26 as well. We have it. If we talk about their capacity, they are targeting a 22 million tons of iron ore production in FY26 versus 10 million tons in FY25. Next, we have is the environmental clearance that the company has gotten, which will further enables the company to expand their capacity to 55 million tons per annum as well. Now let's also look at the analyst recommendations. What we have seen, the 6 analysts are covering the stock, and all 6 of them have a buy rating with a return potential of about 32.9%. So this is how the overall picture is panning out for Lloyd Metals.
Well, thanks so much for that, Vansh, getting us key perspective on Lloyd's Metal. Aditya, by any chance, you track Lloyd's Metal, and if you have a view there as well, because definitely a key underperformer to a rather goring Nifty Metals space as well. Is there any view on the stock as well as your preference in the Nifty Metal, if any?
No, so I don't track the stock, so will not be able to comment on them.
And anything on the metal side, do you have a preference for the larger players going forward?
Yes, definitely. Within the metals pack, I think within the larger players, those are the stocks that I would really concentrate on. Something like a JSPL or JSW or APL Apollo for that matter. Those companies look really very interesting.
Okay, so that's with regards to metal names. Kush, your BTST, STBT calls, which one would you go for?
Yeah, given the market sentiment, hard to go for an STBT, right? So yes, I will go for a BTST trade, and surprise, it's on the FMCG name rather. Yeah, because the only standout performer in this space, as I've mentioned, a couple of times already, is Tata Consumer. Yet again, you're seeing a big move on this one. Once again, very smart moves while the rest of the sector is not performing. So any allocations, you would fairly safely assume that if they come to the FMCG sector, would come to Tata Consumer. Anyway, it's got good momentum. Volume action also fairly decent in the last 3 sessions. So for targets of 1160 and 1175 with a stop loss near the 1130 mark, you could consider Tata Consumer Products.
Okay. In fact, a few of the other names that are buzzing in trade from the small cap space, we will just do a quick mention of them. One of the stocks is a Suryodaya Small Finance Bank. The stock is up 13% in trade. Strong moves there, and the trading volumes are also pretty strong, 200 times. Apart from that, if you talk about a few of the other names, you have Atlanta that has bagged an order worth almost 380 crores, on the back of which the stock was up nearly 20%, and the trading volumes were up nearly 28%. And very lastly, you have another one, which is Borosel Scientific, which is up in terms of volumes 25 times its 30-day average, and that stock also seeing some smart moves. Aditya, anything that you would want to advise investors on out of the three?
On Suryodaya Small Finance Bank, I think the company is a clear avoid. A lot of non-performing assets are really boiling up for the company, and because of that, the stock price has really taken a beating over the last 1.5 years. So this rally is just a relief rally. Investors should be really very careful when they invest in this stock.
Got the view, Aditya. Kush, very quickly on a couple of names. Lupin, it was up in trade today as well. Let's pull that up stock up if that momentum is continued. It's up 3.5%. And we just spoke about Sun Pharma as well. Either of the names that has some momentum going forward as well, Kush?
No, I'm afraid not. Sun Pharma, if you see, there's been a very near-term resistance around the 1160 mark on the upside, and on the lower level, it's got support at the 1580 mark. Right now, it's in the middle of the range, closer to the upper end. Risk-reward ratio not favorable for any kind of a trade on this one. Lupin also has spent a good part of the last 4 months, just under that 2000 mark. It briefly went above that, but then quickly sold out. So yes, close to resistance levels, and with everything that's going on in this sector, you wouldn't want to take a preemptive trade that a breakout will appear. As in when it does appear and the momentum still holds on, you could consider. But at the moment, I would say this is more of a wait and watch kind of a approach that is more prudent on Lupin and Sun Pharma.
Okay, so that's with regards to where Lupin and Sun Pharma go. Let's quickly pull up a Brigade Enterprises. We did speak to the management on KYC. What is interesting is that they've said that there has been a disruption in approvals which has impacted the sales, and there has been uncertainty on the back of this. They're expected to maintain their 15 to 20% of pre-sales guidance for FY26. But if anything goes wrong, that guidance will actually move to the first quarter of FY27. And they're not actually expecting a major spillover there. If they reach above 20 million square feet, then they will explore a REIT. But this could not be in the near term right now, but this is a potential that they are considering as well, and expecting almost 5.5 to 6 billion rupees worth of launches in areas like Hyderabad. So that's Brigade Enterprises that was on KYC. In fact, you can catch the management and the entire conversation today at 4:30 p.m. as well on NDTV Profit. Aditya, anything with Brigade Enterprises or any of the other real estate names?
So within the real estate pack, I think there's strong momentum for all of these companies. My topic continues to remain Godrej Properties. Their expansion in Delhi and Bangalore continues to provide the next fillip for growth. And that's where the only pick within the real estate sector really is. Then you can look at lenders within the housing finance space that look really very interesting. If you can look at something known as Bazaar Housing Finance, for that matter, which really looks interesting. So from my work perspective, the larger players is the place where you should look at within the real estate.
So that's with real estate. Kush, just before a minute that we close, any recommendation that you have for the investors that come on your screens for a Friday?
Yeah, well, I'll continue with whatever we discussed. So TD Power Systems and Tata Consumers, these are the two stocks you can still consider.
Okay, so Tata Consumer is what Kush Bora is going to go with. But very quickly, towards the closing that we are seeing right now, almost a 750 points up move on the Sensex. And if you see Nifty 50 as well, that is going to be interesting. We are ending towards that 24,850 mark near the day's highest levels. What's really, working out is what actually Puneet is going to tell us shortly. But smart day of trade, Puneet.
Well, definitely, and we've seen Tata Motors actually being one of the biggest gainers today on the Nifty 50, and that's largely been, multiple news flows essentially on that stock. We saw that, across the board, roughly about 240 point gain on the Nifty 50, and we're closing above the 24,800 mark. That's a key positive. There'll be something to look forward to on Friday's opening as well. Very quickly, when you look at the Nifty Bank as well, again a positive momentum, and that's largely where the comments made by the Reserve Bank of India in the press meet as well, that was clarified. So all the large banks did contribute very well to that. And when you look at the heat map for the Nifty 50, you will be looking at that visibly as well. While Tata Motors is one of the biggest gainers, up almost 5.6% today in trade. The demerger, the date has come now, October 14th is something you have to watch. But also the sales number was quite positive for the company, beating analyst estimates as well. When you look at some of the other key gainers, Shriram Finance, Kotak Mahindra Bank is there. Axis Bank also up 2.5%, while ICICI has given up some of its key gains as well. HDFC also at roughly about 1.5% was one of the top contributors of the Nifty 50, but still in the green today. So you're seeing all that positivity on the green. On the loser side, some pressure also seen on a couple of banking names, but largely a good session to say the least. When you look at the advanced decline ratio is the other one, because again today we started the day with a very strong up move on advances. Tried to converge that in the middle of the day, but then again a very strong bullish momentum across the board, roughly 1800 advances to almost 567 declines today. The mid cap and the small cap is the other one where we've seen largely today a slight underperformance compared to the benchmark, but still a positive momentum in the last in the second half of the day. Currently on the small cap as well, it's up over 1.08% as well. Finally, let's look at the BSE 500 to close off today's trading session. We discussed about Sun TV up almost 12.6% in trade today, while something like a Granules and Sterlite as well were up about 8.6% and 5.8% respectively. KPIT Tech, and you saw that NDTV Profit impact coming in. Stock was up almost 2.5-3%. Post that conversation, we've seen an up move on that one as well. While on the losing side, some pressure seen on a couple of stocks like Delivery as well as NLC, but largely a very, very positive day. We will see reactions on the auto pack continuing on the 3rd, which is Friday, because a lot of names are still yet to come in on those, but largely a very strong trading session to say the least. And tomorrow is a market holiday, so we'll see you on Friday. But thanks so much for joining in. From myself, Hiral, everybody who put the show together, thanks so much for watching, and have a good off tomorrow essentially. See you on Friday.
Nikhil, first of all, thank you for coming in and answering to shareholders and investors. I think that's very, very positive, because management doesn't usually want to come and talk about when these things happen. So I'm glad that you're doing that.
This was a legacy issue. It's been overhanging over the company for the last 10 years. And we are glad that it is, in whichever way it is completed and disposed of. Though there is no financial impact on the company, the shareholders it concerns, and that's why we are here to clarify and to give a clarification that it doesn't impact the company's day-to-day workings. It doesn't impact our growth plans. It is of the past of 2015 to 21. The compliance since then we have been up to date. We haven't got any compliance issues since 2021 till date.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show. So viewers, let's see how the markets have fared today. Benchmark indices ended in the green, buoyed by RBI status quo monetary policy outcome. While the Nifty has climbed through the day to settle above 24,800 levels, the Sensex gained over 700 points to wrap just above 80,000. Now, broader markets have traded almost in tandem with the frontline indices, with the strong gaining momentum seen in the small cap universe as compared to the mid cap stocks. Now, heavyweight banking counters like HDFC, ICICI, Kotak Mahindra and also Axis contributed the most to the Nifty's upward swing. Now on the sectoral front, except the Nifty PSU Bank Index, all other sectors ended in the green. Nifty Media, Defence and Finance have led the sectoral rally. The market breadth ended heavily skewed in favour of the bears, with almost 3/4 of the listed companies ending in the green. The RBI's Monetary Policy Committee unanimously decided to keep the repo rate steady at 5.5%, maintaining a neutral stance. Now, the marginal standing facility and the bank rates remain at 5.75%. And also the standing deposit facility rate is at 5.25%. Now, the RBI is closely monitoring the liquidity with daily surplus averaging 2.1 lakh crore rupees since August. Now, short-term rates will be managed through two-way liquidity operations to ensure the stability in the financial system. The RBI also noted a shift in the growth inflation dynamics since August due to a fast-changing global economy. While the global resilience exceeds the expectations, tariffs and trade uncertainties may actually dampen the demand and also the exports. Now, India's robust services exports in July-August are also expected to keep the current account deficit sustainable in FY26. Government policies may help offset some global economic challenges. India's forex reserves stood at $702 billion as of September 26, sufficient to cover over 11 months of imports. Now, the RBI is vigilant about rupee depreciation and will also take necessary steps to stabilize it. Now, to promote the rupee, internationalization measures will be introduced. Now, exporters now have 3 months instead of 1 for forex account repatriation, and also the merchant trade forex outlay periods are extended to 6 months. The RBI is implementing the expected credit loss framework for banks effective April 1st of 2027 with a 5-year glide path. Now, Basel III capital adequacy norms will also take effect on the same date. Now, new norms will reduce the capital requirements from MSME and also the home loans. Lending limits against shares are increased to 1 crore rupees from 20 lakh rupees, and restrictions on the group entity activities are also being removed. The RBI also proposes introducing a risk-based deposit insurance premium framework for banks. Now, this will replace the current flat
rate system aligning premiums with the risk profile of individual banks. Higher risk banks may face increased premiums, while safer ones could actually benefit from the lower cost. Now, the move aims to enhance financial stability and also the incentive prudent banking practices, with details to be finalized soon. The RBI is taking steps to simplify regulations, consolidating 9,000 rules into a draft set to be released soon. Restrictions on collections account will also be lifted, and also lending ceilings against the listed debt securities will be removed. Risk weights for high-quality NBFC infrastructure lending will be reduced. A discussion paper on licensing new urban cooperative banks is also planned to enhance the banking ecosystem. The RBI raised its FY26 GDP growth projection to 6.8% from 6.5%. Now, this is reflecting optimism about the India's economy. For quarter 2 of FY26, growth is now projected at 7%, which is up from 6.7%. However, the projections for quarter 3 of FY26 were trimmed to 6.4% from 6.6%, and quarter 4 of FY26 to 6.2% from 6.3%, and quarter 1 of FY27 to 6.4% from 6.6%. Now, this is indicating caution due to the global uncertainties. The RBI lowered its FY26 CPI inflation estimate to 2.6% from 3.1%, signaling controlled price pressures. Now, quarter 2 of FY26 inflation is now projected at 1.8%, which is down from 2.1%, and also quarter 3 of FY26 at 1.8%, which is down from 3.1%. Quarter 4 of FY26 is also revised to 4% from 4.4%, and quarter 1 of FY27 to 4.5% from 4.9%. Now, this is also reflecting expectations of a stable inflation. RateGain Travel signs a pact to acquire Sojourn Nivea for $250 million through its arm. Now, RateGain merger, the board has approved the investment in RateGain UK to actually fund the deal and a corporate guarantee of up to $150 million. Now, Sojourn posted $172.2 million in gross revenue in calendar year of 2024. Now, making this a strategic buy. Avendus Spark retains a buy on RateGain with a target of 790 rupees. Now, the firm raised 600 crore rupees via QIP in 2023. Analysts see strong cross-selling and upselling potential, with RateGain well placed to ride growth and also stay resilient despite the sectoral headwinds. Now, they build in 4.6% revenue growth for Sojourn in calendar year of 2025. Swan Defence and Heavy Industries has signed a major memorandum of understanding with global giant Samsung Heavy Industries to actually jointly pursue shipbuilding projects across domestic and international markets. Now, this strategic tie-up combines India's largest shipyard capacity with Samsung's global expertise, focusing on a wide array of commercial vessels, including tankers, gas carriers, and also container ships, marking a significant step in India's push to become a world leader in maritime construction. Now, on to another counter that was buzzing away in trade. Sri Lotus Developers has launched 2 new Mumbai projects worth a combined 1,000 crore rupees, reporting strong initial sales despite the high valuation. Now, the Juhu project, the Arcadian secured 92 crore rupees in the first week, while the Versova project, Amalfi, booked 38 crore rupees. Seagull India has been awarded a letter of intent worth 225 crore rupees from Himachal Pradesh body for the initial development of the crucial bulk drug park at Una district. Now, the infrastructure company will execute the project over the next 18 months, with the scope including key works like internal roads, stormwater drains, and boundary fencing for the state's major pharmaceutical hub. Next up, we have High-Tech Pipes, which has achieved a major milestone with its highest ever sales volume in quarter 2 and H1 of FY26. Now, despite the challenges like an extended monsoon, quarter 2 sales hit 1.25 lakh metric tons, Now, this resilience underscores strong market demand for steel tubes, structural products, and also value-added items. Chairman Ajay Kumar Bansal highlighted that the company's market strength, noting that value-added products now make up 31% of sales, with plans to exceed 50% by FY26 end. IRDA reported blockbuster H1 FY26 results as of September 30 of 2025. Now, loan sanctions skyrocketed 86% year-on-year to 33,148 crore rupees, which is fueling renewable projects and also, amid this India's clean energy push. Now, disbursements surged 54% to 15,043 crore rupees, which is accelerating the project implementations. Now, the outstanding loan book has expanded 31% to 84,445 crore rupees, and also this is also reflecting robust demand for solar, wind, and efficiency initiatives. On the other hand, HUDCO has posted a solid Q2 of FY26 performance. Loan disbursements jumped 43% year-on-year to 13,000 crore rupees. Sequentially, disbursement edged up 1.7%. Now, this is also signaling steady momentum. Pfizer seals a major deal with the Trump administration. Now, it agrees to cut Medicaid drug prices via MFN pricing and also direct sales. Now, in return, Pfizer gets a 3-year break from pharma tariffs. Most of its sales remain unaffected. The move has actually eased the pressure on the global pharma stocks, including Sun Pharma. Lupin receives US FDA approval for its Rivaroxaban oral suspension used to prevent and treat blood clots. Now, the drug will be manufactured at its Chhatrapati Sambhajinagar facility. Now, with the US market pegged at $11 million, this marks a strategic addition to Lupin's growing portfolio in the US generic space. Allied Blenders and Distilleries has inaugurated a new plant in Telangana, marking a major step in its 525 crore backward integration strategy. Now, the new facility introduces a PET bottle manufacturing line with an annual capacity of 600 million units, which is a move the company actually projects will boost its margins by approximately 300 basis points by FY28. Next up, we have Ola Electric, and its fundraise is in focus as its arm plans to raise 877 crore rupees. Now, the capital will be raised through the issue of 87 crore preference shares, which is each priced at 10 rupees. Now, this move is actually expected to support expansion and also strengthen its EV push. Tesla has raised lease prices for all its vehicles in the US after a $7,500 of federal tax credit that has helped boost the electric vehicle sales expired, according to the company's website on Wednesday. Now, the change follows the end of tax incentives under sweeping legislation passed by the Congress, which has eliminated the $7,500 credit for new EV leases and also purchases, as well as a $4,000 credit for used EVs effective September 30. From one auto major to another, now BMW is also recalling over 145,000 vehicles in the US. Now, this is an overheated starter, could actually increase the risk of a fire. That's the alert raised by the US National Highway Traffic Safety Administration. Now, the issue affects vehicles across 2020, 340i, X7 and also X5 models. Oil major ExxonMobil expects to cut the number of its employees in Singapore by 10% to 15% and also move its office to the site of its Jurong plant from downtown by the end of 2027. Now, in global restructuring efforts, the company said on Wednesday. Now, the plans for Exxon Singapore operations come after the US major announced on Tuesday that it will lay off 2,000 workers globally, particularly in Canada and across the European Union, as part of a long-term restructuring plan that will affect about 3% to 4% of the company's workforce. Oil marketing companies have also raised aviation turbine fuel prices. by an average of 3,052.5 rupee per kiloliter for October 2025. Now, this price hike would actually, impact the airline operating costs across India. In Delhi, ATF now costs 93,766 rupees per kiloliter, while in Kolkata, the price is 96,816 rupees. Now, in Mumbai, the figure is around 87,714, and in Chennai, it is 97,302. Now, the hike, which is driven by global crude oil price fluctuations, may actually lead to higher airfares and also airlines pass on cost. Multiple Indian firms, including heavyweights like Larsen & Toubro, Bharat Earth Movers and also HAL, have submitted their bids to collaborate with DRDO's Aeronautical Development Agency on the 15,000 crore rupee of advanced medium combat aircraft design and development. Now, the deadline was September 30, following an expression of interest from ADA. Now, a committee that was led by former BrahMos Aerospace chief who is Sivathanu Pillai, will actually evaluate the proposals and also recommend partners to the Defence Ministry. Now, Defence Secretary's oversight will actually ensure timely progress toward the induction into the Indian Air Force by 2034 to 35. The selected partner could actually also handle production of at least 125 health fighters across 7 squadrons, valued at 2 lakh crore rupees. India's gross GST collection for September 2025 has reached 1.89 lakh crore, which is a robust 9.1% increase year-on-year. Now, this reflected strong economic activity. Net GST revenue after 28,657 crore rupees in refunds is stood at 1.6 lakh crore rupees. Now, this is up 5% from the last year. Despite month-to-month volatility, collections have consistently exceeded 1.8 lakh crore rupees. Since January, the steady range of 1.8 to 2 lakh crore rupees underscores the resilient consumption and compliance, which is boosting the fiscal optimism. Indonesia expects to sign a deal with Freeport-McMoRan soon regarding a plan for the firm to sell a 12% stake in its Indonesian unit, Freeport Indonesia, to a local partner. Now, the Phoenix-based Freeport also said that it remains in discussions with the Indonesian government regarding the rights to operate the Grasberg copper and gold mine past 2041. Now, Minister Rosen said that Freeport has basically agreed on a number of points during the talks. The Union Cabinet approved over 1.2 lakh crore rupees in initiatives, including a 10,084 crore hike in dearness allowance and relief for central government employees. About 5,800 crore rupees has been greenlit for 57 new Kendra Vidyalayas. Now, this adds to the already existing 1,288 KVs, educating over 14 lakh students pan-India. Now, apart from this, close to 11,500 crores has been dedicated for self-reliance in pulses. Additionally, over 84,200 crore rupees has been allocated for Rabi season MSP. Approximately 1,500 crore rupees has been allocated for a biomedical research career program. Now, the cabinet also celebrated 150 years of Vande Mataram, aligning education reforms with National Education Program 2020. The US government shut down much of its operations as deep partisan divisions prevented Congress and the White House from reaching a funding deal. Now, the standoff that could actually lead to the loss of thousands of federal jobs, this comes just a day after US President J.D. Vance warned against the federal shutdown being imminent. Now, there was no clear path out of the impasse, while agencies warned that 15th government shutdown since 1981 would actually halt the release of a closely watched September employment report. Opens new tabs, slow air travel, suspend scientific research, withhold pay from US troops, and also lead to the furlough of 750,000 federal workers at a daily cost of $400 million. US President Donald Trump has withdrawn his nomination of conservative economist as head of the Bureau of Labor Statistics. Now, the nomination came shortly after Trump fired BLS Commissioner in August. Now, midway through her term, following a weak jobs report that raised concerns about the US economy Antony's nomination was actually praised by conservatives, but some independent economists said that he was not qualified for the job and that his confirmation could actually undermine the BLS credibility. At least 91 students, mostly teenage boys, are still trapped under massive concrete slabs after the Al-Khozani Islamic boarding school in East Java collapsed during afternoon prayers on Monday. Now, 3 have been confirmed dead and 99 others are hospitalized with injuries as rescuers race against time, piping in oxygen and water to the survivors. They've located by faint calls and movements. Now, the disaster struck amid unauthorized construction on upper floors, turning a place of worship into a nightmare of rubble. Now, officials have mobilized cranes and excavators cautiously. The death toll is expected to rise. Now on to a big development on the Asia Cup trophy and medal saga. Now reports now suggest that Asian Cricket Council Chief Mohsin Naqvi has handed over the Asia Cup 2025 trophy to the UAE Cricket Board. Now this after BCCI pushed for his impeachment amid a slew of accusations. Now central to the controversy is an incident in Dubai where Naqvi, who also serves as Pakistan's Interior Minister and Chairman of the Pakistan Cricket Board, reportedly took the Asia Cup trophy and medals without following established ceremonial protocols. Now, what an absolute roller coaster. Inter Miami fell 3-5 to the Chicago Fire in a chaotic 8-goal thriller that clinched the Fire's first MLS playoff spot since 2017. Now, Chicago struck first with Jonathan Dean doubling the lead early. Luis Suarez roared with a brace to level it at 3-3 in the second half, but the Fire's late magic sealed it. So, Justin Reynolds nodded in the winner in the 83rd minute, followed 3 minutes later by Bryant's unstoppable rocket. Messi's side now fights to salvage their, supporters' Shield dreams. History made in Guwahati. The ICC Women's Cricket World Cup 2025 kicked off with a bang as India crushed Sri Lanka by 59 runs in a rain-hit opener, which was powered by Dipti Sharma's all-round brilliance. Now, a roaring crowd of 22,843 at Barsapara Stadium, shattering the previous group stage record of 15,935 set during last year's India-Pakistan T20 World Cup thriller in Dubai. Triumph in Beijing for Jannik Sinner. The world #1 claimed his 21st career title with a commanding straight sets victory over American teen sensation Lerner Tien in the China Open final. Now, the 23-year-old Italian, fresh off a doping ban, dominated from the baseline with laser-like precision, firing 12 aces and converting 4 to 6 break points to dismantle the 19-year-old's bold challenge. Now, marking Tien's first ATP final as a stunning breakthrough, Sinner now eyes the Shanghai Masters next. With that, viewers, it's a wrap on this edition of Market Express, but please stay tuned to NDTV Profit and don't go anywhere.
Nikhil, first of all, thank you for coming in and answering to shareholders and investors. I think that's very, very positive because management doesn't usually want to come and talk about when these things happen. So I'm glad that you're doing that.
This was a legacy issue. It's been overhanging over the company for the last 10 years. And we are glad that it is, in whichever way it is completed and disposed of. Though there is no financial impact on the company, the shareholders it concerns, and that's why we are here to clarify and to give a clarification that it doesn't impact the company's day-to-day workings. It doesn't impact our growth plans. It is of the past of 2015 to 21. The compliance since then we have been up to date. We haven't got any compliance issues since 2021 till date.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
रहमान
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that.
The market snaps its 8-day losing streak as Nifty ends above 24,800 while the Sensex gains over 700 points. All sectors barring Nifty PSU Bank gain. The RBI removes the proposed regulatory restriction on business overlaps of bank and its group entities. The move is expected to bring in relief for the likes of HDFC Bank and HDB Financial. The RBI proposes a risk-based deposit insurance premium to incentivize sound risk management by banks. Better-rated banks will pay less premium. The RBI keeps repo rate unchanged but says there's room for more rate cuts, lowers inflation projections for FY26 to 2.6% from 3.1% and hikes real GDP growth expectations to 6.8% from the previous forecast of 6.5%. Gross GST collections for September grew 9% at 1.89 lakh crore rupees as monthly collections show volatility but remain strong above 1.8 lakh crore rupees. September auto sales beat estimates with Tata Motors reporting 47% growth in passenger vehicle sales compared to last year, while Hyundai Motors sales grow by 10% at over 70,000 units as GST cut, festive demand and strong consumer interest drive domestic sales. Russia's President Putin is likely to visit India on the 5th and 6th of December this year. The visit will focus on strengthening defense and trade ties amid Trump tariffs. Meanwhile, the US government shuts down after the Senate failed to pass a last-minute funding bill. Democrats say that they are ready to find a bipartisan path forward to reopen the government.
Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Over the next half an hour, I'm going to take you through the latest in markets as well as national and international news. So let's move on to our top focus this evening. The Reserve Bank of India has once again pressed pause on interest rates. Now, in its latest monetary policy review, the RBI kept the repo rate steady at 5.5%, with the Monetary Policy Committee voting unanimously to maintain a neutral stance. Now, the central bank pointed to the economy's resilience backed by strong domestic demand, rising investment and a more supportive global environment. At the same time, the RBI has raised India's growth outlook. The GDP forecast for FY26 now stands at 6.8%. That's higher than the earlier 6.5% projection. On inflation, the bank struck a cautious note, trimming its forecast to 2.6% from the previous 3.1%, while making it clear that price stability remains a priority. Beyond rates and forecasts, the RBI also rolled out a set of regulatory reforms for the financial sector. Now, these include easing rules for lending against shares and debt instruments, shifting deposit insurance premiums to a risk-based system, and boosting access to credit through digital channels. So alongside a steady hand on rates, the RBI looking to strengthen the financial system and widen credit flows, including risk-based deposit insurance premiums and expanding lending scopes. Let's now listen into RBI Governor Sanjay Malhotra's comment on the same.
It is further proposed to introduce risk-based deposit insurance premium. You are aware that today we are having a flat rate of premium for all banks, irrespective of size, irrespective of risk, at 12 paisa per 100 rupees of net deposits. We propose to bring in risk-based insurance premium. This will incentivize sound risk management by banks and reduce the premium to be paid by the better rated banks.
Meanwhile, RBI Governor Sanjay Malhotra also proposed new restrictions on overlaps between banks and their group entities. Now, this is a move that could ease pressure on lenders like HDFC Bank and HDB Financial. The central bank has also given inflation projections for FY26 that were lowered to 2.6%, while the GDP growth forecast was raised to 6.8%. Let's listen in.
To reduce the cost of infrastructure financing by NBFCs, it is proposed to reduce the risk weights applicable to lending by NBFCs to operational, high-quality infrastructure projects. This should give a boost to funding for infrastructure in the country. The recently implemented GST rate rationalization would also lead to a reduction in prices of several items in the CPI basket. Overall, the inflation outcome is likely to be softer than what was projected in August, primarily on account of the GST rate cuts and benign food prices. Considering all these factors, CPI inflation for this year is now projected at 2.6%, with Q2 and Q3 at 1.8%, Q4 at 4%, and Q1 next year at 4.5%. The risks are evenly balanced.
Let's go across to our banking editor, Vishwanath Nair, for the other key takeaways from the RBI's monetary policy meet. Vishwanath, over to you.
What monetary policy? Well, that's exactly the sort of emotion that I had after I heard the RBI governor speak at 10 a.m. today, announcing the October monetary policy announcements. Of course, while the rate decisions were where they were, the RBI and the MPC did not tinker with the rates this time around. Repo rate is maintained at 5.5%. Inflation and growth expectations have been lowered. At least inflation has been lowered and growth actually has been increased from 3.1% to 2.6% on the the CPI inflation for the whole year, versus growth, which was at 6.5% for this year, has been raised, the expectation has been raised to 6.8%. Now, let's keep that bit aside. The more interesting announcements came towards the end of the speech, where the RBI governor went with additional measures, which are specifically regulatory measures that the RBI announces with every monetary policy. In this, there are 5 key ones which I thought were important for everybody who was watching this. The first one is the ECL framework, or the expected credit loss framework. This was a framework that was supposed to be introduced pre-COVID. Since then, banks have been pushing back. Of course, COVID hit and then it was pushed back some more. Now we have a date of implementation, which is the 1st of April 2027. That's when these laws or these regulations will come into place. ECL framework also will give banks a glide path till 2031 to fully implement it, so that any one-time impact can be spread over multiple years. That aside, the second more important thing, which was about the large exposure framework, or the LEF that the RBI has. Essentially, this framework curtailed the amount of exposure that a bank could have towards a single entity, or the banking system could have towards a simple entity. Under these guidelines, 10,000 crore was the upper limit. Now the RBI is saying that we will review it, because currently in the current ecosystem, you need to look at more measures to boost that credit flow. The third important one is risk-based insurance premium. Well, banks currently pay an insurance premium on their deposits to the DICGC. This is the entity that ensures a payout to depositors in case a bank fails. So in this current framework, what the RBI is proposing is bringing in a risk-based pricing. Essentially, banks which are doing well, which have a very strong sort of deposit franchise, need to pay less of an insurance premium, versus banks which are slightly weaker will need to pay a higher insurance premium. So that is going to solve a lot of complaints that the banks had about this DICG framework, because currently there is a flat premium that applies. The fourth more interesting one, according to me at least, was with regard to the draft guidelines on overlapping businesses. This guideline had thrown the entire system into a tizzy because it limited how much banks could own in an NBFC that does the same business as them. So this framework has now been withdrawn, or these draft guidelines have now been withdrawn. So now banks can start breathing easy. The fourth and the fifth most interesting one that I found from this entire speech was with regard to bank lending towards listed securities as well as acquisition financing. This was a key ask from the banking sector. In fact, the SBI Chairman has been repeatedly talking about acquisition financing, that banks should be allowed to finance Indian corporates to acquire other companies. So now, of course, the RBI will bring in a framework to allow banks to do that, and that's something that we'll watch out for. Stay tuned for more news updates.
Thanks so much for that, Vishwanath. Now let's take a look at how the markets fared today. The Nifty finally snapped its 8-day losing streak as the RBI kept the repo rate unchanged at 5.5%. All sectors barring PSU Bank ended in the green, with Nifty Media gaining over 3.5% for the day, emerging as the top gaining sector. For more, let's go to Anushi for a detailed wrap of all of the market action today. Anushi, over to you.
Well, it's a day, that we are looking at Nifty trading above the 24,800 mark, and this is after RBI has kept its repo rates unchanged at the levels of 5.5%. In fact, with this, Nifty has also snapped its 8-day of losing streak, closing above the 24,800 mark is what we are looking. Now, if you are looking at the top gainers in terms of sectors, Nifty Media up over 4% for the day, emerging as the top sector. In fact, Nifty Financials also led the rally in Nifty. Individual stock-wise action, if you are looking at Tata Motors and Shriram Finance were in the spotlight, gaining over 5% in trade, emerging the top gainers in the space that we are seeing. In fact, Shriram Finance and Kotak Mahindra Bank gained the most in the Nifty Financial pack as well. Talking about Nifty Bank and Financial, they gained as RBI did ease curbs in terms of where the banking related norms were concerned. Benchmarks, however, slightly underperformed broader market indices. Nifty Midcap 150 gains for the third consecutive day. Nifty Small Cap 250 gains for the second consecutive day. All sectors were gaining in trade. This is barring the Nifty PSU Bank is what we are looking at. So that's the overall picture that we are seeing for markets today.
Thanks for that, Anushi. Meanwhile, the auto sales numbers for the month of September are out. Puneet now joining in with details of what the picture is looking like so far. Puneet, over to you.
Well, the auto sector is in focus, and because it's the first of the month, we've seen all companies come out with their auto sales numbers for the month of September. Now, this month was very key because we saw the GST reduction from September 22nd, and that's helped a lot of the vehicles move from 28 to 18%, while the larger ones in the SUV space has gone to 40% now versus 45 to 50% earlier. But because of the extended short period between September 6th and 21st, we've seen only roughly 8 to 9 days of that benefit come in. But despite that, we've seen a stellar performance from most of the automakers today. Let's start first with Mahindra and Mahindra. In the passenger vehicle space, they've reported a 10% growth, coming in at roughly about 56,000 units, which is bang in line with estimates. The export growth has also been very strong in this particular time frame, up over 43%. In the tractor space as well, it was a bigger story for Mahindra and Mahindra. Over 66,000 units that sold, and it's a jump of over 50% on a YOY basis for the company. We also spoke to the management, did highlight that it's important to look at September as well as October because of the festive period, but it was much above the estimates of about 50,000 units for M&M. It's definitely a stock to watch going into Friday's session as well. When you look at the other ones like Escorts, another surprise honestly, because it's been a stellar growth performance, over a 48% growth, similar to Mahindra's tractor division. They reported roughly about 18,267 units versus estimates of 13,800. So another key one here. In the passenger vehicle space, Hyundai reported roughly 70,000 units. It's a growth that they reported of 10%, but largely the export growth is propelling the company's growth. So the domestic ones will be something to watch. While Bajaj Auto reported a 9% jump of roughly about 5.1 lakh units is what they sold, while the two-wheeler business is up 8% at 4.3 lakh units. It's the exports that's driving the momentum. So this will need a lot more white spaces to be addressed in the domestic market. When you look at finally some of the other ones like Eicher Motors coming in at 1.24 lakh units, it's a 43% jump, but it's actually coming below the estimates in this particular time frame, which was roughly at 1.33 lakh units. So while today we had some minimal reaction, Friday will be the session to watch for Eicher Motors. While the commercial vehicle side, 7,619 units is also below estimates of 8,200 units as well. Ashok Leyland, a 9% jump, 18,000 units sold. They've also just a tad bit increased from the estimates of about 5 to 7% growth, which was estimated. So watch out for this one. While Tata Motors is the final one on the list, they have reported roughly 35,800 units in the commercial vehicle space. It's a jump of over 19%, much higher than the 5 to 7% growth estimated for the commercial vehicle industry. While on the passenger vehicle side as well, 60,000 units is what they've sold, which was much higher than the estimates of about 45,000 as well. So overall, Mahindra, Escorts as well as something like a Tata Motors has been the big beneficiary, while Eicher did have a decent performance but missed estimates as well. So watch out for the other ones. We're still awaiting numbers for Maruti as well as Hero MotoCorp as the big ones to watch into the next, as well as TVS actually going into Friday's session, but a very strong number across the auto industry.
Thanks for that, Puneet. And it's time for an NDTV Profit exclusive. My colleague Aishwarya Patil traveled down to Southeast Asia's largest integrated oil refinery at the Indian Oil's Panipat unit, where she caught up with Chairman A.S. Sani. Now, he spoke to us about the future of fuel, sustainability, and what lies ahead for India's energy ambitions. Let's take a look.
Consumers have time and again brought this up and said E20 is not good for our engine. What's your response to that? Because our oil minister has time and again said it is been applied in many other countries across the world as well. Why not India?
No, there's no question of why not India. India can always take lead also, given that all the stakeholders are in confidence. The equipment manufacturers, in case the automotive manufacturers, the laboratories, all CSR laboratories, all the experimental people who are the stakeholders in this whole business, they are all on board and they are all confident. They are all very much aligned to the target given by government of 20% ethanol, and they are all confident that no damage is going to happen to any automotive while running with E20.
Higher blends in the next 1 or 2 years?
Decision is yet to be taken all the stakeholders are being taken into confidence. They are reviewing it. They are doing experiments in the laboratories. Once we are confident, then only we can think of going forward. And this refinery will add to the capability of Panipat refinery, and it will make it even a bigger hub of northern India, from 15 million to 25 million tons. And there are some unique features of this this expansion that we are calling. It is, of course, 34,800 crores, 34,800 crores, and plus pipeline expansion. Plus, we can always see that there are some unique features. One Resid hydrocracker is coming up. Resid hydrocracker is coming up, which is going to be only the second plant in India. First plant is still under commissioning at Vizag, and this will be the second one which will be coming up. And this is going to add a lot of value to whatever crude we are going to process here.
Meanwhile, gross GST collections for September grew by 9% at 1.89 lakh crore. While the monthly collection remains volatile, they have consistently remained above 1.8 lakh crore. Let's go over to Shrimi for more on this.
Well, absolutely. The GST collection, the gross collection remained robust for September month to 1.89 lakh crore, which is a growth of 9.1%. And in fact, after adjusting refund as well, the net collection is at 1.6 lakh crore, which is moderated to 5%. But however, if you see the GST collection trend, from past 9 months since January onwards, the trend has been volatile, especially in last 3-4 months. But the range of the GST collection remains steady, and it's above 1.8 lakh crore. And if you see actually the August number, it was at 1.86 lakh crore, and in July it was around 1.96 lakh crore. So clearly volatility in the number, but momentum continues. Now what is pertinent to note here is that the September number actually reflect the all the activity, all the billing which happened actually in August. So remember, there was anticipation around after the Prime Minister announced the GST cut on August 15th, where he hinted at a massive cut. And despite that, there were anticipation around that this will reflect on the GST collection number. But however, the number showing buoyancy clearly, and there is no such impact seen. However, the October number, when it comes, because the actual effective rate cut is there after September 22nd. So that will reflect the final impact on the GST cut. But so far, the number clearly showing the robust collection, and what the expert here underlining the fact that this shows the resilience in the tax revenue, and they are hoping to continue this momentum in the remaining quarter as well.
Thanks for that, Shrimi. And let's move on to some international but also national news coming in. Russian President Vladimir Putin is likely to visit India later this year. Sources tell NDTV that he's expected to come to India on the 5th and 6th of December for a summit with the Prime Minister. Now, this visit comes against the backdrop of rising tensions between New Delhi and Washington over India's Russian oil imports. Let's go across to NDTV's Disha Bagchi for more details.
Russian President Vladimir Putin is all set to visit New Delhi on the 5th and 6th of December. A very important visit in the India-Russia relationship. This is going to be the first visit by Russian President Vladimir Putin to India since the Russia-Ukraine war began almost 3 years ago. And this is going to be a very important visit in terms of signaling and messaging as well, because this comes at the heels of Washington's constant pressure campaign against New Delhi to stop buying Russian oil, even saying that India is a laundromat of Russian oil, and all of these baseless allegations, even accusing New Delhi of funding the Russian war machinery and actually being behind the Russia-Ukraine war. And now this visit is going to make it very clear that India's relationship with Russia and its foreign policy cannot be bullied or dictated by Washington and by these baseless allegations. So what can we expect really from this visit of President Putin? Well, of course, some of the key highlights of the agenda agenda will be Russian oil, the Ukraine war, but also defense deals. India has been boosting its defense expenditure over the past couple of months since Operation Sindoor. So we can expect that India and Russia will sign key defense deals in this visit. So very, very important visit to look forward to, and a very important visit to boost the India-Russia strategic relationship.
Meanwhile, the US government has shut down after a vote in the Senate to extend federal funding past the September 30th deadline fell short. Now, the 55 to 45 vote failed to reach the 60 vote threshold that was needed to advance the legislation, making it all but certain that US agencies will now have to suspend non-essential operations from the 1st of October. Let's take a look at this report from NDTV's Kate Fisher for more details.
Shutting down the government means hundreds of thousands of government workers are set to be furloughed, that is, sent home without pay, only to be back paid once the government reopens. But US President Trump has threatened to make permanent cuts to the federal workforce, saying of the Democrats that his administration could do irreversible things during a shutdown, quote, like cutting vast numbers of people out, cutting things that they like, cutting programs that they like. Now, two unions have already sued the Trump administration over its plans to fire federal workers. And Democrats have brushed off the ultimatum, accusing Republicans of lying about what they are seeking from this legislation. Democrats say they want the bill to include provisions to roll back healthcare cuts that Republicans made over the summer, as well as to extend Obamacare subsidies. But Republicans say those issues can be dealt with after the government has been funded again.
And that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
Nikhil, first of all, thank you for coming in and answering to shareholders and investors. I think that's very, very positive because management doesn't usually want to come and talk about when these things happen. So I'm glad that you're doing that.
This was a legacy issue. It's been overhanging over the company for the last 10 years. And we are glad that it is, in whichever way it is completed and disposed of. Though there is no financial impact on the company, the shareholders it concerns, and that's why we are here to clarify and to give a clarification that it doesn't impact the company's day-to-day workings. It doesn't impact our growth plans. It is of the past of 2015 to 21. The compliance since then we have been up to date. We haven't got any compliance issues since 2021 till date.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
और रहमान
सोनू निगम के लिए जोरदार तालियां।
presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Real estate has been the talk of the town, and the southern market especially taking into consideration what's happening with the IT sector, because the southern market, especially Bangalore, IT sector accounts for nearly 60% of the real estate sales. Welcome to KYC. Today we're going to talk about Brigade Enterprises. I'm Hiral Dadia and with me is Anushi Vakharia, and a happy Dussehra to all the viewers as well. First up, why are we talking to a Brigade Enterprises? Now this is because it's coming in at a time where they're signing GDVs in the city of Bangalore, and what is that impact of the macro headwinds of the IT business going to be on their business? That's the first question that we ask the management. This other things that we want to know from them is the guidance that the company has given, which is around 15 to 20% in terms of the pre-sales growth in FY26. Will that be met, taking all of these hindrances into consideration? And the downside risks that you're talking about in FY26, if the guidance will not be met, if there are any risks that the management will be looking at.
Well, Hiral, real estate, residential has always been the focus, but let's also understand what's the kind of leasing trends that we are seeing in the commercial business, because that's one area that the company is also expanding strongly on. So that is another area that we are focusing on. Other than that, a plan for a potential REIT is something that we should be watching out for to monetize its commercial portfolio. So commercial is also the play that we are watching out for Brigade Enterprises. Apart from that, what we should be also seeing is how the new launches, collection growth and the new geographic forays are also going for the business. Now Bengaluru is the stronger market, but the company is also expanding its presence in other markets like Hyderabad as well. So that also remains as a key question.
Absolutely. Now let's understand all about the company. Brigade Enterprises, they are developers who have been established since 1986. They've actually constructed more than 300 plus buildings and 100 plus million square feet of space that has been delivered. In terms of the business segments as well, they are into multiple segments over here. We're talking about residential, commercial,
hospitality and retail. Commercial is something which is really picking up in a strong way, Anushi, for the company.
Absolutely. In fact, if you look at about hospitality also, they just came out with an IPO a few months back. So that is another area of focus. But let's talk about the project pipeline, which is there. 26 million square feet is kind of the ongoing projects that are on the cards for Brigade Enterprises. This also includes about 16 million of upcoming launches as well. And the main key land bank, if you look at that, adds to about 587 acres of land bank, with Bengaluru having about 3/4 of it, about 363 acres is from Bengaluru that we are seeing. The next other destinations which are in focus includes the likes of Chennai, Hyderabad, Kochi as well. So, these are particular areas wherein we are seeing Brigade Enterprises focusing on more.
Right. Now, let's move on to the project area, which is the product mix that we're talking about. Between residential, commercial, hospitality and the mixed development, 75% of the revenue is coming from residential. Commercial is 18%. Probably that is something that could pick up, but taking the headwinds into consideration when you talk about IT as a sector, whether that will expand or not at this current juncture is what we have to see. Hospitality and mixed development is in that range of almost around 4% and 3%, so less than 10% exposure to both these aspects. So that's what the project area and the product mix is looking like. But let's shift focus in terms of the rating parameters that we're going to talk about today. First up, the income statement check is what we will do. Balance sheet, cash flow, return ratios, the shareholding pattern, street credentials, valuation picture, and the street coverage along with the outlook is what NDTV Profit will be dissecting on KYC for a Brigade Enterprises. But first up, let's look at the income statement. Now, it's very interesting to see the kind of numbers that the company has posted and the kind of growth that they've seen in the key operational matrix as well. Let's start with the pre-sales number. You're talking about 4,100 odd crores, which did come in FY23. From there, it's nearly doubled to around 4,850 odd crores in FY25. So the pre-sales number is very strong. If you talk about growth, slight moderation in FY26 as compared to the previous 2 years. And if you talk about the first quarter, that is also slightly lower. Collections also have been very strong. The trajectory has been upwards. And if you talk about the overall growth in the collections aspect as well, it was down in FY24, but again it started to pick up in FY25, where we've seen a growth of around 23% that has come in there. If you talk about the operational trends as well, now in overall your realizations have been flat in the first year, which is FY23. But a 40% growth on realizations is what the company has seen in FY25. So that is very positive from a realizations aspect. Moving on, if you talk about the other matrix, from the net area sales to your net sales, your net area sales actually on a sequential basis did see a degrowth of 17%. Net sales was absolutely kind of flat. Realizations saw good growth. In fact, the management has been very confident to maintain their average realization trend as well. And collection was decent at around 8%. Overall, if you talk about the income statement from FY24-25 and the 3-year CAGR, a 20 to 26% CAGR on revenue and EBITDA is pretty good. Margins, I mean, you don't really want to look at it, but 26-30 to 30% is the kind of range that you're looking at. So overall, the numbers are very strong in terms of past data. It was mainly the first quarter which did show a blip, and usually the trend is that the first quarter for a real estate company does come out to be slightly weak, and hence a thumbs up.
Right, it's the second half which is in focus in terms of how the upcoming launches are going to shape up for the business, and even in terms of income statement for most of these real estate companies. If you're looking at it, it's a longer term picture that you need to have in mind, considering the lumpiness of the business and recognizing their revenue, since the real estate businesses project their revenue in terms of percentage completion or project completion method. So do keep that on your mind as well. But moving to the second metric, balance sheet is something that you should be seeing. Now, if you are looking at the book value, now that has seen a significant uptick in terms of whether FY25 numbers are concerned. 5,638 crore is the kind of value that we are looking at, while borrowings in the last 2 fiscals have remained in the similar lines of around 5,000 crore or so. Cash in bank, a significant uptick in FY25 is what we are seeing in comparison with borrowing. That provides comfortable levels for the business going forward as well. Even the debt to equity levels, if we are seeing, has more or less remained and the company's guidance level that they have given so far. So we've given this one a thumbs up as well. But Hiral, cash flows.
Interesting numbers when you talk about where the cash flows go. Now, if you have to look at the cash flow from operations, clearly from a 966 crores, it's remained stable at 995 crores. There was a blip in FY24, but it's come up. EBITDA has seen a steady growth, and that is what is a positive. On the back of which, if you see in terms of the net cash flows, from a 1 crore number in FY23, it's actually gone to 4 digits, 1,265 odd crores. So that positioning with regards to the net cash flow is concerned is very positive, and that's the reason why we give it a thumbs up here.
Okay, now coming to the fourth metric is return ratios that we are looking at. Return on equity and ROC, if we see significant improvement in terms of where the numbers were from FY22 to FY25, from what was a 4% of a mark from in FY22 with both of these ratios that we are looking at. We've seen this moving to double digit for ROE in FY25. 13% is the kind of mark that we are looking at, while for ROC we are seeing this at 9% in comparison with FY22. From 24-25 also we've seen similar levels, not much of an uptick over here, but this is something that we should continue to keep a track of. So hence for now we have given this one a neutral rating, if considering that this does see above 15% of a weightage or so is something that we should be watching out for Brigade Enterprises. But shareholding pattern next.
Okay, so that's with regards to where the shareholding pattern goes. Now let's look at the promoters. Now promoters have slightly gone down. The public shareholding has gone down, but it's the FIs which have actually increased stake. Your DIIs have also seen a marginal blip, but on the back of that FI increase, which is nearly around 5 to 6% uptick that has come in, it's a thumbs up there because everything else has kind of remained pretty stable.
While for street cred, if you are looking at, after the shareholding, it's not done so well in terms of how the 1 year stock performance is concerned. In fact, we've seen correction of more than 37% or also in just this 1 year period. Even in the last 6 months, 1 month, if we take the investor performance in consideration, about 4 to 7% is the kind of downtick that we are looking at. Now, this is against the 5 year performance wherein the stock has seen about a 5 times of growth. But, in terms of what's happening with the real estate sector, last year also FY25, there were approval challenges, there were regulatory issues, launch pipeline slowing down is something that has weighed in investors' mind is also that is something that we are seeing. So in terms of stock performance, we have given this a thumbs down. But coming to the analyst recommendation, here is a positive view that we are looking at, right, Hiral? Considering that there are about 13 buy calls in this particular counter, while 0 hold and 1 sell rating now, which brings the overall return potential to about 45%. So despite the kind of correction that we've seen for this particular stock, analysts continue to remain bullish and are seeing a 45% of an uptick. So a thumbs up is something that we've given for this one.
And that's really encouraging, right? 13 buys, 45% upside from the current market price, and that probably tells you the story of what analysts are waiting out for. So let's look at the outlook from here on. A pretty neutral one, because if you're talking about FY26, the management is actually targeting a double-digit pre-sales growth. Yes, there could be hiccups that could be coming in the second part of the year or from the third quarter onwards as well. And if that happens, the guidance that they've given for pre-sales could be delayed. That's the concerning area that we should watch out for. Realizations are expected to stay at around 10,000 rupees per square feet. So that will be a slight downtick from the previous year if you have to actually look at what they got in FY25. In terms of upcoming launches, 13 million square feet is what they're planning to launch in the next 4 quarters. They have multiple projects in Bangalore, Chennai, Hyderabad and Mysore. And if you're talking about their capex plan, capex balance of 800 odd crores is what they're sitting on as of June 2025. So pretty neutral outlook is what we're looking at right now, and hence a neutral rating. So let's quickly look at the final performance. If you have to rate the company on 8, 3 parameters which are a thumbs up over here. Your return ratios is neutral. On the other side, if you have to look at shareholding valuations, again, it's a thumbs up. It's the street credentials, which is a down, and the coverage and outlook is neutral, which comes up to a 6 on 8, which is a very good rating, on a KYC for a Brigade Enterprises so far. But on the back of this, let's welcome in the management as well, who will be talking to us, what is in store from here on. We have Mr. Jaishankar, who joins in. Welcome to the show, Mr. Jaishankar. Always a pleasure. Who is the executive chairman at Brigade Group. First up, you've signed 2, joint development agreements in Bangalore. This is worth nearly 3,600 odd crores. What are the kind of timelines and other details that you have for us?
See, the first one is in Banashankari, Bangalore South, is in a very prime residential area. So where we intend building about 1 million square feet of residential space, somewhere in the range of anywhere between 12 to 13,000 or even more per square foot. And it should, right now, it should happen in FY27. FY27 it should happen. The other one is another joint development for about 10.5 acres in Bangalore East, which is again a prime area sought after by IT professionals. There we will be building up to 2.5 to 2.7 million square feet. So which will also have a GDV of 2,500 crores and upwards.
So Jaishankar, also want to understand, the timing is interesting across the top cities. Now, Bengaluru is one of the key cities which has seen highest dips in terms of whether units sold are there in H1. In Q1, you also recorded about a 17% dip. What is leading to this? Just want to understand that.
It is a combination of 2-3 reasons, I would say. A lot was to do with project launches, not just for Brigade, for across the sector. There was substantial delay in launch of new projects based on approvals due to a variety of reasons, change of government and the restructuring of Bangalore Bruhat Mahanagara Palike, what is equivalent to BMC, and now it has been divided into 5 corporations under a new name called Greater Bangalore Authority. So with the result, there has been a disruption in approval status, and at the same time, FY25 saw a very good growth in real estate. In FY26, there is, I think, it is more of stability than for further growth. Primarily because the geopolitical situation is not that great. Particularly the last 7-8 months after the change of government change of president in United States, there is a lot of uncertainty, disruption, change of policies. With all that had some uncertainty and a bit of negativity.
Okay, so taking this aspect into consideration, is the is the headwind behind us? Because you're talking about headwinds that are coming in from IT companies as well, with the various macro issues they're facing. How are you looking at that aspect, and are you seeing concerns, or is there resilience?
No, it is certainly resilient, but probably clients may take little bit longer for decision making. There is the situation is, as you rightly mentioned, it is a bit fluid. But there are various schools of thought on the impact of H1B, policy changes or visa policy changes. So some people feel it can ultimately have a positive impact on Bangalore. In fact, every time there is a global crisis, the IT sector in India has always been the beneficiary. Whether it is Y2K, whether it is global financial crisis, or subsequently also the global capability centers, what is generally referred to as the GCCs. There are more of them are entering India and Bangalore in particular. And as far as AI is concerned, I think there is some amount of disruption can be expected. At the same time, the low cost work has like call centers, etc., have almost disappeared from Bangalore and many parts of India. It is the shared services which are still there, but they are also more in the nature of GCCs in a lot of cases. So I don't expect, because of availability of huge talent, and also they're so well established here, it is impossible to think of any major impact.
Okay, management also targets a 15 to 20% of a pre-sales growth. Now, do you plan to sustain the sales guidance? Along with that, how realizations are expected to be?
So I think all I can say at this point is our team is working hard. If some projects are launched as expected, if all the projects are launched as expected, we should reach. But if there is some delay, I think it can get into Q1 of next year. But the pricing should be fine. Pricing realization should be fine.
Everything should be fine. But if there are any risks, what should be the downside one should look at?
As I said, the team is always working hard. By and large, as a matter of policy, we don't give forward-looking statements, but that is the intention, I can say.
Jaishankar, can you also elaborate on your land bank strategy? Now, what are the key areas of new acquisitions and what is the target gross development value that you have in mind?
See, we have recently added about GDV of about 10,000 crores in the last 6 to 8 months, and we will be adding another GDV in somewhat in the similar size in the next 6 to 9 months is what I expect. So we would like to, I would say, have this growth of 20 to 25% ideally.
Moving on, if you have to look at the leasing and the co-working space as well, this is something which is really picking up. How is the demand looking like, for a Brigade Enterprises?
So, see, our co-working business is quite small, nothing much to talk about now, but it is growing year on year, and maybe in 3 to 4 years time it will reach some considerable size. And we have currently about 10 million square feet of annuity income yielding assets, where we are finalized properties, and in the process of approval, we intend adding another 8 to 10 million square feet of annuity assets before 2030.
Also want to understand, your strategy for exploring a potential REIT, and this is to monetize a commercial portfolio. I want to understand on that.
So as I mentioned a few minutes back, I think only when we reach about 20 million square feet of area, if not more, we will explore that, and at least in the next 4 years or so, we don't have immediate plans of, going for a REIT.
Okay. Any new geographic forays that you're looking at? Because we're seeing a lot of new entrants that are coming in the MMR region. What is your strategy going to be with regards to geographical expansion from here on?
So currently we are in the 3 metropolitan cities of Bangalore, Chennai, Hyderabad, and 2 to 3 tier 2 cities in Kochi, Mysore, Gift City, and bit of Trivandrum we are entering. So we would like to currently focus on these cities, and I'm sure and I hope the opportunities in MMR and NCR will always be there.
Okay, your pre-sales growth of 3% is lower than the overall guidance of double digit for FY26. More launches are they expected in the second half? Key launches plan, if you can help us with that.
We are expecting about, I would say, about nearly 5.5 to 6 billion square feet of new launches. of which in Hyderabad we are launching the second phase of Brigade Gateway Hyderabad mixed use development. That should happen by Diwali or so, and we are also expecting one large project what I talked about earlier in Bangalore East, and also another large project of a high-end project in Chennai. These are the three larger size projects which will have a I would say GDV, gross development value of maybe nearly 3,500 to 4,000 crores. 4,000 crores.
Mr. Jaishankar, my last question coming to you is with collection growth. What is expected going forward? Any guidance for FY26?
I don't have the full ready figure, but collections are on track. There is no reduction in the collections projected earlier.
Okay. Thank you so much, Mr. Jaishankar, for joining us on Know Your Company, a company that is rated almost 6 on 8, which is a very strong rating on the back of the performance. But very quickly, Anushi, the top takeaways from this conversation.
Well, while the management did say FY25 was marked with uncertainties related approval challenges, FY26 is expected to be stable. Now, if all the launches are launched, we should see, the company maintaining a double-digit growth guidance, or there might be some spillover in the first quarter that we are looking at. A 20 to 25% of growth in GDP is something also that we should be watching out for.
I think lots to watch out for, but completely out of time. That's all, folks. Thanks for tuning in to KYC only on NDTV Profit. For your profit. Lots more lined up on the other side. Please stay tuned.
Nikhil, first of all, thank you for coming in and answering to shareholders and investors. I think that's very, very positive because management doesn't usually want to come and talk about when these things happen. So I'm glad that you're doing that.
This was a legacy issue. It's been overhanging over the company for the last 10 years. And we are glad that it is, in whichever way it is completed and disposed of. Though there is no financial impact on the company, the shareholders it concerns, and that's why we are here to clarify and to give a clarification that it doesn't impact the company's day-to-day workings. It doesn't impact our growth plans. It is of the past of 2015 to 21. The compliance since then we have been up to date. We haven't got any compliance issues since 2021 till date.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
और रहमान
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं द बेस्ट ऐप टू यूज इज द एनडीटीवी ऐप।
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Hi, thanks so much for joining in. You're watching Your Money Matters on NDTV Profit, and my name is Alex Matthew. At the onset, from everybody here at NDTV Profit, let me wish you and your families a very, very happy Dussehra in advance. And I hope that this ushers in great prosperity in the remainder of this year. To talk about the first topic today, I've got Nisreen Mamaji, who's the founder of MoneyWorks, and Navneet Damani is a Group Senior Vice President, Head Commodities Research at Motilal Oswal. Thank you so much to the both of you for joining in, and wish you and your families and your teams season's greetings. I wanted to talk about gold with a bit of a twist this time around because of everything that we're seeing with gold and silver prices. It's traditional to go out and buy a little bit of gold on Dussehra, and I want to give my viewers a bit of a sense of what to do and how to plan their finances. So at the onset, the question that we're asking is it a good idea to buy the minimum possible amount this time and maybe push your purchase to the next possible festival and not too far away? So Navneet, let me first come to you on gold prices. We've spoken over the course of the last several months, and you've commented on it as it has risen to this point. And the last time we spoke, which is not too long back, you said that perhaps it might be hitting a level where it's getting a little unsustainable. Does that hold right now?
Well, absolutely. It's kind of rallied by about 18.5% or maybe 19% as we speak in the matter of last 18 trading days. So such kind of exuberance or such kind of rally that you're seeing into gold prices is little discomforting for many retail market participants, but central banks are still comfortable with these levels. They keep on continue to adding gold as and when their comfort level is being seen over the last 3 months. So they are price insensitive at this point in time. And given that we are almost inching towards $4,000 and the buying looks relentless, it looks like maybe this time retail participants are going to have a hard time purchasing a bulk of gold this Diwali.
Oh, well, I won't underestimate them at all, because people are buying luxury apartments in Mumbai and other places in the country left, right and center. So there should be appetite nonetheless. But Nisreen, I'll come to you. Generally, when people buy gold, and often when they go out and buy gold in jewelry form, they're not really looking to sell it again. It's just the act of buying gold. It's what their grandparents and their grandparents before that have done. Do you see anything not wrong, but faulty from the perspective of pure personal finance? The rules, of course, sometimes the rules have to go out of the window.
Yeah, you know, very rightly said, Alex. Let me begin by, wishing both of you and your families and teams a very happy Dussehra. I think that you've, talked about a very important point here. So typically, on festivals like Dussehra, Dhanteras, we do buy gold, as a ritual and also for gifting. But, from the sentimental point of view, it makes a lot of sense for us to buy the physical gold. But the only issue is that, you can't, it's kind of, you can't break it up. If you have a fixed amount, you want to buy, say, 10,000 rupees of, a particular gold coin. So in the physical gold, it's half a gram, a quarter of a coin, or, 1 coin. You can't really break it up. So it's indivisible to that extent. But definitely from the personal finance point of view, what we advise our investors is that this is more for sentiment to buy the physical gold. But if you're buying it, as a commodity, if you're buying it from the investment point of view, then digital gold would be a much better option via sovereign gold bonds or gold ETFs and gold mutual funds. So that would be a better choice if you're really thinking of making money, investing, saving for the future. But from the festivity point of view, obviously people do go out and buy a bit of gold or more gold or make jewelry and, flaunt it. That's from the sentimental point of view. Alex.
Got it. So you've actually hit on a subject that I wanted to broach, and I'm glad that you have, the idea of buying physical versus digital. And here I'm talking about bullion. I'm not talking about jewelry. Navneet, recently I've heard and I've had conversations with a number of people who've said, maybe I should not buy an ETF. Maybe I should just go and buy physical gold. I anyway have a locker lying unutilized. And from that perspective, I know that it's actual gold. I don't have to worry that the ETF is not buying gold as an underlying, even though the rules state that you have to have underlying gold. What do you think about that, and what is the advice that you normally give your clients?
Well, there are two sets to it. One, if you want to convert into jewelry eventually, then physical gold is something that you could look at as an investment point of view. But typically as Indian households, and we've seen over the last few years that, or many, not years, but decades, that whatever comes in form of physical gold in the household, it doesn't goes out to the secondary market and comes into a sale. So even if it's a tactical investment, it converts into a long-term holding, or probably the period is not elongated. Though as a male, I have the right to buy gold, I have the authority to buy gold, but I don't have the liberty to sell it again. Okay, that decision will be taken by my wife, my daughter, or my mother. So that typically is the Indian household scenario in most cases. So my investment is parked into gold, and it will not come out even if the prices go 1x, 2x, 3x from here as well. So that is how digital gold to a certain extent is now picking up, where you have access to sell it without any say the attachment of selling a physical gold or going it back into the market. It's in a paper format, it comes in a paper format, you played the move, you don't have that kind of attachment, emotional connect, and then you kind of dispose it as and when you're convinced. So it's more of an investment avenue. Then you look for a digital asset. If you want to use it in future, then it makes more sense to buy it in the physical format.
Got it. Okay. That's an interesting perspective. You're removing the emotional attachment. Nisreen, do you concur? And what is it that you advise people when they say to you, Nisreen, I want to go out and buy a coin or a biscuit?
So, typically on the festival days, I do encourage, the families to buy a bit of gold just from the festival point of view, But from the long-term planning, obviously, I do discourage that because, it's difficult to store. There's, people do have lockers, but you still have to go to the locker, check it. You have to pay the locker charges, etc. So from the, investment point of view, definitely encourage digital form of investment for gold, either through the ETFs, mutual funds, or the sovereign gold bonds. The SGBs are also offering a 2.5% annual interest, plus capital appreciation and tax-free maturity gains. And on the ETF side also, it's very convenient. There's no paperwork. It's completely digital. You sell it when you have met a goal or you require the funds. Because with physical gold, as already said before me, once it's in the house, even for me, once I buy a piece of jewelry, I'm really not going to want to sell it because I get attached to the look and beauty and feel of it. I want to wear it, as a woman investor and buyer of gold, obviously me, my daughter, my mother, we will enjoy wearing it. So from that point of view, maybe just a little bit to keep in touch with the festivities. But typically, from the investment point of view, I definitely discourage the physical gold aspect and encourage digital gold because, there is exposure to the pure gold prices, safe storage, easy liquidity, and, there's no emotional attachment to anyone in the family when you want to sell it. When you have the requirement of funds, you can easily do it. And it doesn't require, demat, digital account access. It's very simple to hold.
Yeah, I just want to follow up with that because if you're talking about jewelry, and we've, I think, spoken about investment, so I just want to make this point. A lot of people now, and this is established fact, a lot of the jewelry companies, the established ones at least, seem to be moving away from the traditional jewelry and towards the studded jewelry. That mix is increasing. From their perspective, it's also something that they're going towards because it makes more business sense. The margins are better from their perspective. It's also customer profile and desires are changing. Nisreen, do you have any advice for people that are going out and buying, say, lab-grown diamonds, of course with the gold attached, but not a lot of gold if you're buying stones with them, right? Do you have any advice?
So, typically if you're buying the stones in the gold, then what happens is you're looking at the stone aspect, And from the CVD, which is the lab-grown diamond, of course, it's a very good choice because what you're looking at, and these days, younger investors and, women are only looking from the glamour point of view. They just want to look beautiful. So they're not really looking at it from the investment point of view. So you can look at, say, a 14 karat, gold rather than 22 karat that we used to buy gold earlier. And in the studded jewelry, a lot of people are going in for lab-grown stones, which, it could be diamonds, it could be emeralds. Various categories of stones are lab-grown now. And they look equally beautiful, very difficult to tell with the naked eye whether you're wearing a real natural stone or a lab-grown one. So since you're only doing it for the beautification point of view, it's perfectly acceptable to go in for a lab-grown stone and for going in for a lower weightage of, making the jewelry in, say, 14 karat. And as I said earlier, from the investment point of view, to rely on hard times, it's always better to go in for the digital form of the gold. So for women, some shringhar will be, completely required and acceptable. So make it as low cost as you can.
Okay, Akshaya Tritiya is next year on the 19th of April, Navneet. And so the question to you is, would you avoid buying or buy the bare minimum just to fit the festive theme and the tradition this time on Dussehra and save your purchase for April next year?
Well, Dussehra and Dhanteras too, these are two major festivities where a lot of gold has been bought across the country, and third being Akshaya Tritiya. So I think it's in a staggered manner because gold has rallied by about 18-19% in a matter of no time. And if we see year to date, it's up about 50%. If we see for the last 2.5 years, it's up about 102%. So this kind of move has already built into the prices, and I don't see a reason that a 5-10% cannot correction cannot be ruled out. Now, will it happen overnight? Will it happen 3 months from now? Will it happen 6 months from now? That is anybody's guess. If you want to buy as a festivity or maybe as a token of this event, what is underlying, buy a minimal amount of gold and you can stagger it in the next few months on a staggered mean. Don't wait for particular dates and events. Now the kind of momentum that gold is into and the kind of world order is changing, it is better to have it in a staggered when any major decline, any major dip about 5, 7, 10% would be an opportunity. Now if it comes before Akshaya Tritiya, if it is even if it's Christmas, don't wait for it, just go and buy it.
Okay, so let's close this out then. Nisreen, since you have the option to buy ETFs and you've already spoken about the various options available, would you say that you can have a monthly approach if you've got a long-term horizon, which you should have, even with gold? Ultimately, it should be a portion of your portfolio because it affords you quite a bit in terms of diversification, purely because it does not generally move in tandem with the other asset classes. But then the last 4 years has, I think, thrown a lot of those theories out of whack. So how would you approach buying on a consistent basis? What percentage of your overall portfolio would you keep for digital gold? And should you account for your physical gold as part of your overall portfolio, or should that purely be something like you treat as maybe a suit or a tuxedo or a lovely dress? You don't count that as part of your wealth.
Sure. So, that entirely depends, the last part of the question, on how much you have of it.
Sure.
But since, Naveen has already mentioned that gold will not move by festival dates. It depends on the global dollar strength, inflation, central bank buying, etc. So it's typically, if you want to be exposed to this asset class, it's better to buy it systematically. Like you can register an SIP in a gold ETF or a gold fund. And you can buy SGBs whenever the opportunity arises and when the tranche is open, that time you can buy the SGBs. So typically, you are only buying for sentimental or ritual reasons if you're buying on Akshaya Tritiya, Dhanteras, Dasera, etc. But it would be much better for you to register into maybe into a commodity ETF or a multi-asset ETF, wherein, you're exposed to all the asset classes, equity, gold, as well as the commodities. And you can select one where the percentage of gold and silver is higher, because a lot of the multi-asset funds are, highly exposed towards equity and maybe less in the commodities. So a little bit of research there where you look for a fund where the fund manager himself or herself will do the asset allocation between equity, debt, and the gold and silver commodities from the investment point of view, so you don't have to keep on rebalancing your portfolio. But typically, if you are taking that stance and you are, wanting to have a fixed allocation, I think about 5 to 7% of gold in your portfolio would be justified. In the recent times, it would be a good purchase, but wait and review your portfolio to make sure that, you don't cross those limits in terms of percentages. And your personal, wealth that you have in terms of jewelry, I think you need not, add that to the portfolio, because you're not going to really sell your gold jewelry. Most Indian investors will only sell their gold jewelry in very, very hard times.
Yes.
And it depends on the kind of investor you are.
All right, just to close things out, since we talked about taxability as well, let's finish that up. Navneet, I want to come to you on the different treatment ultimately between physical and ETF, because there is this fallacy, I think, that a lot of people have, that they don't pay tax on physical gold. That's not true, right?
Well, they pay taxes on physical gold. There is a long-term capital gain with indexation if you hold it above 3 years in the physical format. However, that is what led to a lot of people buying sovereign gold bond, because the gains were tax-free, 2.5% free interest-free rate, and the holding period was 10 years. Without any indexation benefit also, you kind of make whatever gains is there, those are all tax-free for you.
On ETFs, after the latest change in the capital gains tax rules, you have a 2-year threshold for treatment of long-term capital gains, after which 12.5% is the rate, which I think a lot of people find attractive based on the kind of taxes that they would have paid otherwise. So I think that that pretty much closes the conversation. Nisreen, Navneet, thanks so much for joining me today and for putting all of this in perspective. Pleasure having you.
Thank you.
Thank you so much for having us.
All right, let's talk about a very interesting subject, because I think a lot of people head outside, out of the country to find work and employment or otherwise, and they tend to come back. A lot of people tend to come back. So if you're looking to retire and moving from an NRI back to India, what you need to bear in mind? How is it different from an Indian who has always worked in India and earned in India and retires here? to talk about this, I'm joined by Varun Fatehpuria. Varun, thanks so much for taking the time and pleasure having you. So I think it's an interesting question to ask. What were your first thoughts?
No, absolutely, Alex. Firstly, thank you for having me back on the show. Right, and this is a concept that we are seeing increasingly becoming familiar with a lot of NRIs who had gone back outside for work and intending to come back to their home country for retirement. But there are obviously things that they need to keep in mind when they want to retire back to India from a return perspective, investments perspective, taxation perspective. So we can come to each one of them over the course of this show as to why each of them is important and what NRIs need to keep in mind if they are planning to retire in India in the next 10, 15, 20 years.
Okay, so let's start with the first thesis. Why would somebody come back to India? Of course, it's to a large extent to take care of family or because they're attached to their hometown for certain reasons like that. And we're assuming at this point, Varun, that they've earned more money outside India and they're coming back with a significant amount of money. So there's a repatriation that needs to take place of a lot of assets. So the first question is, how do you ensure that all of those assets come back, or do you continue to keep some assets where you were initially domiciled?
No, absolutely, Alex. I think keeping aside the personal reasons, I think there could be a multitude of reasons why anyone would want to come back to India. Firstly, obviously being closer to their parents and a familiar social structure that they would be more comfortable with compared to their current country. Second would be relating to more about the cost of living expenses, right? So I think once people have accumulated an enough amount of corpus over their working years of 20 years, 30 years working outside, obviously they've built a certain amount of safety net, which would probably in most circumstances more than suffice for having a comfortable life back in India during the retirement phase of the next 20, 25 years compared to, let's say, in a high income country where the retirement basket may or may not suffice, right? So that could be one of the reasons also why someone who has worked outside may want to come back to India. The third, as you talked about repatriation, yes, there are certain technicalities that investors need to keep in mind when they want to repatriate their entire corpus back to India, because it has taxation implications. So let's say, for example, if you're already continuing to hold foreign currency deposits in an FCNR account, right? I think once that matures, then that needs to get converted into a resident savings account, and you need to repatriate it back completely once your taxation status also changes from a non-resident to resident. So there are obviously a lot of things that you need to keep in mind from a taxation perspective, the kind of investments that you are continuing to hold in your either an NRE account or an FCNR account, and transfer that back to your resident savings account, depending on what your taxation status is at the time of repatriation.
And this is something that is generally advisable if you're making the move permanently to complete over a period of 2 to 3 years, Varun?
Yes, absolutely. I think, let's say, Alex, just to point out, I think when you're planning to come back to India, your taxation status changes from a non-resident to something which is called as an RNOR, resident but not ordinarily resident. It sounds a bit paradoxical, but it has implications from a taxation perspective, because any of the income now which will accrue in India from this point in time will only be taxable in India, but any of your foreign income would not be taxable. But let's say you have made that move, you have continued to stay here for the next 2 to 3 years, then your taxation status again changes from RNOR to ROR, resident and ordinarily resident. In that case, your entire worldwide income will now be taxable in India. So this is a key point that you need to keep in mind, depending on when you are moving and the various phases that you have once you relocate, depending on what your taxation is at that specific point in time.
Okay. Now, the other aspects, couple of them that you have to bear in mind, and they're actually interlinked, is currency depreciation, which has continued to take place around 3.2% or thereabouts over the last 2 decades or so against the US dollar. The expectation is that that is likely to continue to take place, and that feeds into inflation as well. So inflation in India, because it's a growing economy and it's in a phase of rapid growth, relative to other economies, will continue to have higher inflation. You have to account for both of them if you're talking about 20-25 years of retirement.
Yes, Alex. See, you have to keep in mind that when you're planning for a period of 20-25 years, right, at the time of your accumulation phases, you need to at least invest in instruments which can beat the nominal rate of return in India. Let's say if you're outside working in Singapore or in US, where the inflation rate is closer to 2 to 3%, your return expectations from your investments would not be so high. But let's say you're moving back to your country, inflation rate, as you pointed out, is 6 to 7%. You need to really think about where you're parking your money, because you cannot continue to grow either your USD fund or an SGD fund at 5-6%. You need to significantly increase that to 10-12% to just match with the pace of inflation that we have in our country. So that is with respect to how inflation actually makes you think about the kind of investments that you want to do, and it is important that you start planning for it today rather than leaving it at the closer to the date. And second is with respect to the depreciation. As you correctly pointed out, when we are thinking of repatriating our capital back to our country, the depreciation actually works in our favor. So instead of actually completely moving it at one go, if you can spread that over a 2 to 3 year period, then the depreciation of 3.5% will actually give you a slightly higher number compared to shifting it on day one completely. So both of things actually work in your favor that way.
Okay, to close out, how do you plan your investments? Because you're essentially going to be buying fresh, one would assume. Would you actually suggest buying in beforehand so that you don't have to do the heavy lifting when you do make the move? And once you do make the move, how do you structure your overall investment portfolio, because you have to beat inflation?
So our suggestion always is once you have some clarity on when you want to make that move, ideally that would be 7 to 10 years prior to your retirement, start aggressively investing at least in developed market equities. That could be India, that could be China, so that you are getting a nominal rate of return of 10 to 12%, which would be more than enough to actually beat the inflation. Continue to have some developed market exposure in the form of ETFs, whether in US, Europe, Singapore, to provide that international diversification, and keep that split anywhere between 60-40, 60 going towards developed market equities to get you that higher nominal rate of return. So over a 7 to 10 year period, assuming that you want to get that capital back in INR form, you have a certain amount of money that you could play around over a period of time. Second thing that you need to keep in mind is the withdrawal rate during the time of retirement. Because the inflation is higher, I think a safe withdrawal rate in the West is anywhere considered 3.5%. But given that you need to continue to meet your expenses over the 20-25 year period retirement, that inflation number, that withdrawal rate obviously goes higher to, let's say, 4.5-5%, just to keep up with the cost of purchases in our country. So that also needs to be accounted for, the withdrawal and the amount of money that you have at the time of retirement, so that you can glide through over your retirement period.
You know what we'll do next week is we'll have a targeted how to build a portfolio for retirement if you're an NRI. And this, I think, should hold you in good stead even if you're not, and if you're a resident Indian. And maybe Varun will be amenable to coming back to discussing this. Varun, thanks so much for taking the time and for speaking to us.
Thanks, Alex.
All right, that brings us to the end of this edition of Your Money Matters. Tell us what you think, give us ideas about what you'd like to hear about, and do stay tuned. Lots more coming up on NDTV Profit.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी होगी।
NDTV World Summit 2025 Edge of the Unknown. 17th to 18th October. Only on NDTV.
Nikhil, first of all, thank you for coming in and answering to shareholders and investors. I think that's very, very positive because management doesn't usually want to come and talk about when these things happen. So I'm glad that you're doing that.
This was a legacy issue. It's been overhanging over the company for the last 10 years. And we are glad that it is, in whichever way it is completed and disposed of. Though there is no financial impact on the company, the shareholders it concerns, and that's why we are here to clarify and to give a clarification that it doesn't impact the company's day-to-day workings. It doesn't impact our growth plans. It is of the past of 2015 to 21. The compliance since then we have been up to date. We haven't got any compliance issues since 2021 till date.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
और रहमान
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं the best app to use is the NDTV app.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome to NDTV Profit. Joining us on a special broadcast where we are actually sitting here a little over 7 hours since the Reserve Bank of India Governor announced the October monetary policy announcement, where he said that, of course, the decision on the rates was a status quo. Interest rates remain where they are. But that was a bit of a sideshow. What actually happened was a whole host of announcements that came from the regulator on the banking sector, as well as the allied lending sector, and the many changes. About 22 new changes have been introduced into the banking system. These will be rolled out over the next few weeks, of course, and we will see a completely different regulatory piece for the banking industry. And I have with me none other than C.S. Setty, the chairman of State Bank of India, this evening to discuss a lot of what has actually happened and what is this likely to mean for the sector. Mr. Setty, welcome to this conversation, sir.
Thank you, Vishwanath, for having me on your show.
Sir, let me start first with the rate side of the story, because that's less relevant, but of course that's also the focus of the monetary policy. So the decision to maintain a repo rate at 5.5% now, at a time when we're just entering the festive season, do you think that this was timely, this was necessary?
No, as Governor mentioned in his speech also, I think a lot of, things which they've undertaken both on the monetary side and also the fiscal measures like GST, rationalization. These things have to play out. If you remember, the monetary policy side, there was front loading of the rate, as well as, the cut on the CRR, which will be playing out till December. And the GST, which has, modification kicked in from 22nd of this September. All these have to be, playing out. And that probably is one of the compelling reasons for RBI to maintain this rate at this level. I think is a right decision. By December, we will have better clarity, and also the stance being neutral, which, again, we'll have to see what kind of rate cut is likely to happen in December or going forward.
Understood, sir. Let me come to the broader growth impulses and the inflation side of the story. Specifically on inflation, the RBI has actually brought down its inflation expectations for FY26, even though second half it looks like it's inching up a little bit. Similarly, on the growth front, they've actually raised their expectations on growth from 6.5% to 6.8% for this financial year. However, the second half of this financial year, it looks like the growth might be tapering down a little bit because they have revised it lower for those last 2 quarters of this year. As the preeminent banker of this country, I'm trying to gauge from you, what are you seeing in terms of inflation and growth impulses going ahead for this fiscal?
The inflation number was anticipated to come down anyway, but I think a substantial reduction in the inflation number, almost by 1%, definitely is a surprise. While they're saying that, going forward, 26, 27, the inflation is expected to go beyond 4%. That also probably one of the reasons why they wanted to be a little cautious on the rate cuts. But we see that there is a moderation of inflation across the economy, particularly in the financial sector, where whomever we are talking to, we are given an impression that there is a moderation in the inflation trend. As far as growth is concerned, yes, I think as acknowledged by the governor, the issues related to tariffs, geopolitical uncertainties, definitely have some impact on the expected growth rates. While the Q2 number seems to be good at 6.8, overall 6.8 growth rate for the year. But the moderation in the subsequent quarter from Q3, Q4 indicates that the impact of tariffs has to play out clearly going forward. We'll have to see how it is going to impact.
Let me come to a topic that you have mentioned in recent interactions, which was about acquisition financing. That's something that the RBI has actually opened the door to. We don't know what the final guidelines are going to look like, but clearly this is a step forward in making banks more competitive in the global scenario. I'm trying to understand from a lender's point of view why acquisition financing is so important for a bank in India.
It's not the question of being important. I think the M&A activity has been robust in Indian context. For almost 2 decades, Indian banks have not been allowed to be participating in the M&A financing activity. If you see the opportunities in calendar year 24 itself, the total M&A activity aggregated to about $120 billion, the way the Indian corporates acquired Indian entities themselves. So while foreign banks are permitted to fund these acquisitions, Indian banks were kept away from this. And this is a level playing field which Indian banks have been asking. And banking sector in India is much robust now. The balance sheets are repaid and capital ratios are comfortable. So I think it's time, appropriate time. And I think it's a best time in my view to have a review of this 2-decade-old norm of keeping away the Indian banks from the M&A activity. From that angle, I think both from an opportunity side as well as providing the level playing field to the Indian banks, I must compliment the RBI and the governor for taking this important step, which we have been requesting for quite some time.
Understood. I want to dig a little bit deeper in this question. Now, there is a lot of competition that's coming in from the private credit front as well, because they are able to provide that acquisition financing, which promoters are maybe not able to access through banks or traditional financing routes. Is this a consideration for you? Because this competition is unchecked and relatively under-regulated. Is that also an issue in consideration?
See, one thing, as you mentioned, Vishwanath, we have to see what kind of framework is going to be put in place. What are the guardrails which they're looking for? So while we keep that aside for a moment, I don't think we are looking at reducing or replacing the private credit. The private credit is highly structured credit. I don't think banks will be able to get into that kind of transactions, even if we have to look at it. That has to be pursued separately. Even if we have to do, I think we have to do private credit through a vehicle, maybe through asset management companies or any of the venture capital funds, what banks have. But otherwise, the replacement of private credit by M&A financing is not the objective. But obviously, some of the transactions which are plain, straightforward M&A transactions are also not being funded by the banks, Indian banks now, is something definitely we can start with.
And the concerns around, say, underwriting or maybe checking the value of that deal and appropriately backing it, that's not something that concerns you at this point in time.
See, there's a lot of maturity has come in the banking sector in terms of underwriting, and the robust data is available. And even, assuming that either the acquiring company or the target company are listed, there's much more scrutiny of those transactions from the shareholders' point of view. And the valuation methodology is broadly, is stabilized. I believe at least some major banks in India are capable of funding this transaction. And mind you, most of us also do M&A financing abroad, where the target as well as acquirer is a non-Indian company. Our Indian company acquiring a non-Indian target is still permitted to be funded by Indian banks through their foreign offices, which means that we have adequate understanding about this M&A activity.
Mr. Sethi, thank you so much. Let me come to the other part of the regulatory announcements that the RBI has made, specifically around the large exposure framework. Now, they're talking about the banking system level limits that they had originally introduced, 10,000 crore being the upper limit of how much banks can lend as a group to one single corporate. While they're continuing with the internal limits of banks, these external limits are likely to be done away with, and we will probably see a new framework come into place. I'm trying to understand from a lender's point of view, how much of a leeway is this for you?
It is definitely a leeway, Vishwanath. I'll tell you in simple terms what happens if SBI is taking an exposure on a corporate. We have our own internal limits, both on the group exposure limit as well as individual borrower limit. These are to avoid the concentration risk at the bank level. But this exposure framework also mentioned that if any of this corporate entity has an aggregate credit facilities of 10,000 crores, they are necessarily have to borrow from the market. This is to avoid the concentration risk from the banking system, because such market mechanism, whenever the corporate is accessing the market by through way of NCDs or any other bonds or CPs, we are not supposed to be participating in that. Even if we participate, that also get counted in 10,000 crores, current limit of aggregate limit of credit facility. Which means that these are the norms which have come in 2016, almost 10-year-old, and the requirement of corporates, particularly on the capex side, has gone up. We have seen even, and there are no exemptions. For example, even a central PSU is undertaking the large-scale investment in the capital expenditure, and they're along with their working capital limit, if they exceed 10,000 from the banking system, they're mandated to go to the corporate bond market. While it also helped the corporate bond market to develop, but the restriction placed on the banking system to not to exceed 10,000, even if you exceed and you make an additional provision, was, I think, kind of archaic in our view. And it's a bold decision by RBI to do away with the specified borrower category, while the individual concentration risks at the bank levels are avoided by continuing the large exposure framework at the bank level.
I also want to ask you about the time when these guidelines came into play, right? Back in 2016, the situation in the banking system was quite different. More often than not, 10,000 crore was a very, very large sum. It may not be now. You know, over the last 9 years, that capital base has gone up so much that 10,000 crore doesn't seem that much money now. But have those worries of the concentration risk, have the worries of banks taking on excessive exposure towards a single company, have they gone?
No, they still are valid. They still are valid in terms of the individual bank exposure norms, which are linked to the capital of a bank. They still are going to be monitored. And as the monetary policy announcement also says that if they see that any undue concentration risk is emerging, they would definitely address through the macroprudential norms. That is what the announcement which is made. But more importantly, if you see, the credit markets also have enhanced. In 2016, the overall credit given by the banks is around 75 lakh crore. Today, we are 185 lakh crore, which means the market size has grown and coupled with what you mentioned, Isanath, in terms of 10,000 crore limit itself has become small in investment terms from a banking system perspective. So I think there are ways of managing the banking sector concentration in a particular group, but that can be better achieved by having an individual limit in the bank level.
I want to ask you last few questions now. As far as the ECL framework is concerned, now you have a date of implementation, 1st of April 2027. The ECL framework comes into play, and you have time till 2031 to fully implement it. So cumulatively, about 5 years from now is when the ECL framework will be fully at play. Do you estimate any large hit to come in this initial period, or do you think that maybe the sector is more or less set, especially SBI?
We haven't had any number in mind, but I think one is if you look at 1/4/27 implementation, I think the transition is going to be smooth, because ECL is a complex system. We need to understand. We have to have fine-tune our internal models. SBI is much better positioned in terms of implementation of these ECL guidelines. But the transition time, as well as the glide path which is given, will ensure that none of us will be exposed to any undue pressure on our capital ratios. So I don't think any matter of concern there. And the fact that when look back period is changed from maybe 3 years ago, if ECL had come, we would have had a higher ECL provisioning requirement than what we have today, because the look back period is changed. So I believe banking system will be able to absorb this easily.
So some of the measures that were announced today were focused on improving the credit flow. It was focused on making banks more competitive in the current environment that we are operating in. Do you think that we will adequately address these objectives and maybe push the RBI to do a little bit more than what they've already done?
These measures, what were announced, almost about 22, covering various aspects of banking. I call them banking reforms in a way. And some of them are have been asked by the industry for quite some time, and we are very glad that RBI had taken the initiative of clarifying some of these positions. One is these measures were overdue in a way, and the clarity had to emerge. These will definitely make things easier for the banking system, not only for banks themselves. It is for the corporate world, it's for the borrowers. For example, Basel III norms, as mentioned by the governor, will bring down the capital allocation which is required currently for MSMEs and real estate sector, residential particularly. These are the sectors which are witnessing a good growth, and they are very critical for the Indian economy. So I think from that angle, they're value accretive, both from a credit growth perspective, ease of doing business perspective. There's a host of measures what governor has announced in terms of exporters, the way the export proceeds are managed in the gift city. I think the far-reaching, they may sound as small measures, but have a very big, impactful outcomes.
I want to ask you one last question, and this was one of the measures that was announced, and I think this is also something that banks have been asking for a very long time, which was a risk-based premium setting of this deposit insurance. Banks have constantly said that why am I paying, if I'm running a very successful franchise, why am I paying the same insurance premium that somebody who's not running a very successful franchise is paying? Do you think that this is the lens that we should look at it from, or is there another viewpoint here?
No, I think it's a plain view. What we have been asking is that, and the risk-based premium is not new. Globally, many countries, risk-based insurance premium is charged for the deposit insurance. So this is something what we've been asking, and we'll have to see how the model is going to be, framework is going to be announced by them. But I think this will ensure that one is the risk management itself gets strengthened. And the number two is that today the DICGC, our insurance, deposit insurance premium, is one of the most, the largest item in my overheads. A bank like SBI last year had paid 5,400 crores DICGC premium. Whereas, there's no differentiation, SBI being a large bank, state-owned bank, robust risk management in place. But we pay the same premium what all other banks pay. So this is definitely a good measure, number one. Number two, it is not impacting the customer in any manner, in the sense that the customers will continue to be protected to the extent what is now currently covered. So this is a very important development in the overall 22 measures. If I have to, take out two important ones, one is on the M&A financing, the other one is DICC premium, moving to a risk-based premium structure.
So much for being patient and staying with us through this entire conversation. And thank you so much for sharing your views, sir.
Thank you. Thank you, Shina.
All right. So that was C.S. Sethi, the chairman of State Bank of India, telling us what he thought of the 22 different measures that the Reserve Bank of India had announced earlier today as part of the developmental and regulatory measures that the RBI took as part of the monetary policy announcement. Thank you so much for watching NDTV Profit. Stay tuned.
Lalit Tyagi, Executive Director, Bank of Baroda, joining us on the conversation. Ashwini Agarwal, founder and partner at Demeter Advisors, with us to break down what the RBI has said. Radhika Rao, Senior Economist and Executive Director at DBS Bank, joining in as well. Welcome to all of you. Let me get the banker's view first. Lalit Tyagi, how do you see this? Do you see this as a directionally a fairer system that the RBI is talking about? Mr. Tyagi, can you hear me, sir? No, I don't think he can hear.
Unfortunately, I'm not able to hear.
Okay. We can hear you, but you can't hear us. So let me try and get that fixed before I come back to you. Radhika Rao, let me come to you on your first thoughts. The governor also very clear about the headwinds that we're seeing to the economy, the impact that we'll have on exports. But the point that he's making about high frequency indicators, looking at a positive Q2, did that give some heart?
Hi. So certainly, I think what had happened going into this meeting is that markets were anticipating two things. That they expect the growth trajectory or the growth outlook of the central bank to turn a bit negative, and that they would take action which is very bond yield specific, which is that they will sound dovish, they might cut rates just because yields have gone up, and the communication kind of broke down after the previous meeting. So I think both of that didn't happen. I do think that the central bank has still a fairly sanguine view on growth. Like you mentioned, the second quarter growth is expected to be again 7% plus, thanks to some deflator impact. First quarter was almost 1 percentage point more than where the consensus was. So in a situation where you're dialing up growth forecasts, it's hard to justify a cut to go along with it. So we are of the view that there's going to be a pause. I think there is still a lot of uncertainty, at least on the growth front. I think many of these risks might not show immediately. At the same time, fiscal levers are already being used. The governor did mention about the GST cut being a positive move. That's kind of another tailwind for growth. And we're heading into a festive season, which again is usually a seasonally positive period as well. So to their mind, they don't really see any urgency to cut rate. And I think that's being prudent. That's been, kind of feet on the ground. And the third factor I want to highlight is the rupee, right? The rupee being under pressure, I think a cut at this point might not particularly be very, very beneficial for it. So given this macro backdrop, I would certainly think that the move was a lot more balanced. We didn't get that dovish guidance, to my mind. It wasn't very clear. But just to say that, yes, we did think about it, but we didn't find the need or see the need to do it. But there wasn't any particular dovish guidance in our view, at least.
Yeah, no guidance. Okay, and Jayesh Mehta also joining in. But Ashwini, I'll first come to you. Actually, I thought that he kind of explicitly laid it out in there, and just to make the policy commentary sound a bit dovish, that the GDP is revised upwards and the inflation is lower, so that leaves room. But also that a lot of measures being taken, Ashwini, because I think the common complaint has been that the rate cut transmission has not been very effective. So in order to improve transmission, a bunch of factors done. Is that one key standout in the policy?
So, from my perspective, I think the policy was broadly neutral. So growth revised up, inflation forecast revised down, outlook for domestic demand quite positive, but uncertainties on the export front. And that kind of, tells me that equal number of levers going up, equal numbers of levers pulling down, and, no significant change in stance. I think transmission of rates that you speak about, they've tried to address, and they've tried to sort of press ahead with the ease of doing business with, several proposals for the way banks can operate and how their subsidiaries need to be treated, which I think is all positive, and so as well on the ECL front. But honestly, I don't see any significant market impact arising from this credit policy at this point in time. I think it's broadly in line with expectations, and I think it's very, very neutral on all fronts.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
Nikhil, first of all, thank you for coming in and answering to shareholders and investors. I think that's very, very positive because management doesn't usually want to come and talk about when these things happen. So I'm glad that you're doing that.
This was a legacy issue. It's been overhanging over the company for the last 10 years. And we are glad that it is, in whichever way it is completed and disposed of. Though there is no financial impact on the company, the shareholders it concerns, and that's why we are here to clarify and to give a clarification that it doesn't impact the company's day-to-day workings. It doesn't impact our growth plans. It is of the past of 2015 to 21. The compliance since then we have been up to date. We haven't got any compliance issues since 2021 till date.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं the best app to use is the NDTV app.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and a very warm welcome to NDTV Profit. It's a Dasera Dhamaka. Here we are at the Notanpalli Sarbojanin Durgo Pandal. That is where we are at. It's in Bandra West in Mumbai. This time of the year, the festivities are all about the Garba season and the pandals that dot the city's landscape in Mumbai, of course, and across the country as well. And we are here at one of them enjoying the festivities. This one has been around for the last 53 years. But here we are looking at the festive season. We are trying to figure out if the demand that we are seeing all around us, whether it's about the auto sector, whether it's about the groceries that we buy, is it actually translating? Is this consumption story going to be the growth story that India can bank upon and the markets can count on for the next round of rise that we are talking about? And indeed, to be able to do that, I have great guests, market experts who've been trawling the markets very, very closely. Mayuresh Joshi is with us and Amrish Baliga as well. Great to have you with us. And greetings of the season.
Thank you.
Have you been celebrating in a big way? You need to...
thank you. And wishing all of you a very happy Dussehra.
Thank you.
Yes, we've been celebrating. This is the festive season. And we have been celebrating. But unfortunately, the markets were not last few days.
What's the reason, Amrish?
I don't know what the reason was. Because if you see the last couple of months, there has been so much of adverse news. Right from tariffs to the issue with Indo-Pak. And then you had the Iran port issue.
Yes.
Then you had the Saudi-Pak understanding. All this has been negative, and the H1B visa. But despite that, if the markets have not cracked, they have only corrected.
Correct.
I think
that says something about resilience.
That says a lot about resilience.
Correct.
That says a lot about the sort of fund flow which is happening from the retail.
Right.
I'm not saying the markets are cheap. But I think the fund flow is something which will keep the markets going.
But Mayuresh, why do we keep talking about valuations being so high? And this is not just an Indian story, right, about valuations. It's across the world.
Absolutely.
No, first of all, I think beautiful venue.
Yes, it's lovely pandal.
Absolutely. So I'm praying that Ma Durga showers health, wealth and prosperity for you and all your viewers at NDTV Profit as well. So earnings remains the 4-point, right? I think everybody of us agrees that earnings is something that the markets remain slave to. And therefore, I think earnings had definitely slowed down. It was very, very evident over the last few quarters. With GST rationalization expected to start coming in, specifically from Q3, your question, whether consumption comes back very, very strongly.
Correct.
You're actually seeing a lot of festive fervor out here, right? And it's just started. So Diwali is around the corner and all the festivities will start coming in. And whatever I've been seeing on ground, whenever I visit consumer durable shops as an example, or even discretionary shops as an example, I think a lot of customers were waiting for that September 22 deadline when the rates will actually come down.
Correct.
And you've actually seen that. You mentioned autos. And there has been a significant kind of footfalls that we've been hearing from dealers and distributors. So whether that translates into second half earnings actually coming back very, very strongly.
Yes.
And as Amrish said, I think flows remain strong and resilient. And if earnings come back, do the GORAs or the FIs, FPIs come back very, very strongly as well following strong earnings is a question to be answered. But yes, I think the consumption story, which is the backbone of the Indian economy, if that starts throwing up surprises, which I hope it should, I think markets...
The upsides in the markets.
Absolutely. Because
Really?
As Amrish said, I think the valuations are fair.
Right.
But if earnings start coming back, you again got a premium tag given to the Indian markets.
So we're looking at another big bull run is what you seem to be suggesting, Mayuresh. Of course, whether or not that happens, it's something that we are tracking. But, right now, as far as GST is concerned, the entire rollout, and perhaps that was the reason, despite the global headwinds, you have some positive news coming in on the tax slabs, on the GST front, the revised rates. They have provided an impetus to the markets. There's no taking away from the fact that it has. But if you look at the ground realities, some of that pass-through not exactly happening right from the word go, not from the 22nd of September. And that's what we've realized. But is it actually happening when it comes to gold and silver? Because that's another story. Look at the way the gold prices have been zooming up, right? Now, if you look at these gold prices and still see demand, because people are anticipating prices to go up even further, and that's why they are buying. Whether or not that is the case is something that we are tracking. In fact, my colleague Charu Singh has been out there in Jhaveri Bazaar today trying to give us a sense of where the demand situation now lies when it comes to jewelry, which has turned to be so expensive. This is the report she's filed.
On the auspicious occasion of Dashera, NDTV Profit is here in Zaveri Bazaar at Umaid Tilokchand Zaveri shop. And this is a shop that is 100 years old. In fact, if you look towards my left, you can see how the prices of gold have changed over the past 100 years, starting from 18.75 rupees in 1925 to about 1,03,000 in 2025. And it continues to increase as time passes. And we have with us someone from the shop itself to speak to us about how these sales have been impacted and what is to be expected in the festive season. So namaskar, thank you so much for speaking to Profit. So सबसे पहले मैं आपसे ये जानना चाहती हूँ कि जब कोई फेस्टिवल नहीं चल रहा होता है, फेस्टिव सीजन नहीं, जैसे गणेश चतुर्थी से पहले का टाइम, और अब अगर आप कंपेयर करें तो कितना प्रतिशत सेल्स बढ़ जाती है?
डिपेंड्स ऑन द कस्टमर्स. यूजुअली अभी शादियों का सीजन है, इसमें फुल काम है, हमारे पास ज़बरदस्त काम है. ये रेट में भी बुलियन की बाइंग है, ज्वेलरी बाइंग है, सब बाइंग है. एक बहुत अच्छा काम है.
सर फुटफॉल कितना बढ़ जाता है, कितने कस्टमर ज़्यादा आने लग जाते हैं?
यूजुअली हमेशा नॉर्मल इतने रेट बढ़ने के बावजूद भी 60 से 70% ज़्यादा ग्राहकी है.
गोल्ड हमारे में शुभ माना जाता है दशहरे के दिन खरीदने के लिए. उसके लिए हम गोल्ड खरीदते हैं, भले 1 ग्राम खरीदे 2 ग्राम खरीदे, लेकिन गोल्ड खरीदना शुभ माना जाता है.
हम लोग ने जब देखा था, एक्चुअली लेने का विचार किया था, तभी 90-95,000 चल रहा था. अभी सडनली महीना भर में बहुत इंक्रीज हो गया रेट, तो उसके हिसाब से थोड़ा इफेक्ट तो हुआ ही है, हमारे पॉकेट पे इफेक्ट तो हुआ है, बट फिर भी ठीक है.
सर पहले मैं आपसे ये जानना चाहती हूँ कि किस तरह के ऑर्नामेंट्स या मूर्तियाँ सबसे ज़्यादा बिकती हैं इस सीजन में?
इस सीज़न में दुर्गा माँ, नवरात्रि के पहले दुर्गा माँ चलते हैं और राम दरबार चलते हैं, और जैसे ही नवरात्रि पूरी होने आए तब लक्ष्मी, गणेश, कुबेर ये मूर्तियाँ ज़्यादा चलने लगती है, क्योंकि अब ये लक्ष्मी पूजन के हिसाब से ये चलती है. और धन्वंतरी ये मूर्तियाँ चलती है, छोटी से बड़ी सभी साइज़ की मूर्तियाँ चलती है.
सर अभी ब्रास का और कॉपर का रेट क्या चल रहा है, और ये पिछले 1 महीने में बढ़ा है क्या?
पिछले साल ब्रास का रेट था 400 के आसपास, 380 से 400, और इस बार ये जो 550 से 600 रुपया ब्रास का रेट हो गया, यानी 1.5 हो गया है रेट. और कॉपर में भी यही हाल है, पिछले साल 600 के आसपास चल रहा था, इस साल 900 रुपया हो गया है कॉपर. और कांसे की बात करें तो कांसे में भी 1.5 रेट हो गया है.
सर इससे डिमांड पे कोई फ़र्क पड़ा है?
नहीं, डिमांड पे इससे कोई ज़्यादा फ़र्क नहीं पड़ा है, 5-7% का फ़र्क नहीं है, क्योंकि देखा जाए तो जिसको लेना है वो लेके ही रहता है.
सर जीएसटी के भी रेट कट्स अभी सितंबर 22 से आए, उसके बाद क्या चेंज देखा आपने?
थोड़ा बहुत 10% मिला है, क्योंकि 22 तारीख से लेकर अभी तक ज़्यादा डिफरेंस नहीं है, पर मुझे लगता है और 8 दिन में और ज़्यादा 25% का बढ़ोतरी होनी चाहिए कस्टमर्स में.
और ये फुटफॉल कब तक इंक्रीज़ होता रहेगा? अभी
ये होना ज़रूरी है, अगर होगा तो बहुत बेटर है, ताकि लोगों को भी और भी फ़ायदा हो जाए. हम भी चाहते हैं कि हमारे पास रिटेल ऑनलाइन से ज़्यादा हमारे पास जाके कस्टमर्स रिटेल में जो देख के उनको पसंद आए और हमारे पास परचेस करें तो हमको भी अच्छा लगता है.
So there is demand. That's what we're finding out from people in Jhaveri Bazaar. That's the ground report. But when we spoke to the Bullion Association chief, he had another story to tell as well, that because of the high prices of gold, so you're finding a dichotomous view. Just listen to what he said as well.
We are here with IPJA National Secretary Mr. Surendra Mehta to understand what kind of a demand are we seeing in the jewelry market as the festive season builds up. How is it? Has it been bad? Has it been good? What do jewelers across Mumbai tell you?
As we all know, the jewelry prices have been surging high, and they are almost 67% up in comparison to the last year prices. So naturally the demand has to fall, and we are seeing a drastic fall in the demand mostly in the metropolitan city, but in the 2-tier and 3-tier cities the demand is reasonably okay, as compared to the last year. But what we are seeing in the market is that lightweight jewelry are being sold more, and low caratage jewelry like 18 carat instead of 22 carat, 14 carat, and even 9 carat jewelry are being available for sale, and people are opting to buy those jewelry. As far as silver is concerned, the demand for silver is quite surprisingly very good, and I think we will be matching it with the last year demand.
Right. So, if I were to summarize that in a few words, would you agree that festive volumes will not be picking up as we go ahead through the season?
Yeah, I personally feel that we would be lower by about 27 to 28% in respect of volume as compared to the last year. But value-wise, of course, it would be much higher as the gold prices have gone up by more than 65%.
So there you have it from the chief of the Bullion Association as well. You're getting a sense of gold and silver and the kind of demand that's panning out over there, despite the kind of rise that we've seen on those prices. But then when you compare what's happened over the last, considerable period of time in the equity markets, and then you see certain asset classes having done remarkably better than what the equities have delivered, at least in recent times, then you stop and question. Then you have the RBI taking a decision on rates today. And Madhvi is here. She's joining us. Madhvi Arora, of course, is lead economist at MK Global. It's great to have you, Madhvi. What did you make of the RBI's decision as far as interest rates are concerned? There is the consumption story and there is economic growth. Now, the balancing act is what the RBI needs to do. Where are we at and this latest decision where projections on growth, on GDP have been made and on inflation? So how much of a demon is inflation right now, according to you, that the RBI is tackling?
See, at this point in time, if I look at the growth matrix, right, RBI seems to be sort of comfortable in the near term. We've actually have seen surprises on growth front because a lot of front loading has happened in terms of exports to the US. Policy front loading also has happened in terms of government spending, both from center and states. And there's been a deflator effect, which I'm not going to get into. It's very technical, but you probably are going to be seeing a 7% plus growth in second quarter as well. But the underlying dynamics are quite weak. So statistical anomalies have made it look very fancy. But we all know that the consumption dynamics have actually evolved, especially in the urban segment, not in a very favorable fashion. Last 1.5 years, what you've seen is that the income effect has been so dominating, especially in urban economy, that you are seeing a consistent slowdown in urban consumption.
Right.
On the contrary, the rural semi-urban actually has done pretty well in the last 1.5 years after being MIA for the last 7 years. So there's been a macro rotation within the consumption matrix away from urban to semi-urban and rural side. But unfortunately, on a value added point of view, 70% of the consumption story is driven by urban, 30% by rural in terms of value add. I'm not sort of making any segregation. So consumption on net is still weak because urban segment has come down, especially because of the weakening income effect.
Right.
And that would not change with, the kind of policy cuts that you've seen in the by the RBI. Of course, that will help ensure that it doesn't fall from here on. But, in the end, the dominating factor is going to be the income effect. So, Reserve Bank cuts, policy transmissions, the GST cuts or the income tax cuts that they have, laid out in the budget, all of that would definitely be the incremental levers which could ensure that consumption doesn't fall from here on.
So
but
talk about
are we looking at a V-shaped story? I'm not very sure on that.
Oh, I see. So consumption generally has a multiplier effect.
Correct.
Mayuresh, weigh in on this. As far as the markets are concerned, how do they see it? How do markets look at the consumption story right now and how much it kind of builds into the sentiment that currently exists in the market? How much have we factored in? How much of growth are you expecting because of it?
So first of all, what Madhavi said, MIA, I was a little bit relieved because she didn't say KIA, right? So taking that into account, I think if you look at the two aspects, urban and rural consumption, urban consumption should see signs of pickup as we head into the third quarter. Are you seeing some exponential growth coming through in terms of consumer durables, as an example? I think the initial feelers that we are getting when we are doing a lot of dealer checks is that there is footfall, there are footfalls and there is expected demand coming back. Rural had also shown signs of recovery.
But this pickup that you're talking about, sorry to interject, but is it in places where they matter most? Auto sector for one. Because you're talking about big ticket kind of numbers.
Oh, absolutely,
Right?
absolutely.
So it's happening over there is what
Yes,
you're picking up.
Yes, yes. And in fact, the more surprising aspect was the ticket size of auto sector is not small, right? And our hope was that with the GST cut, how much of incremental demand will come back? But we're actually seeing demand come back very, very strongly for the autos as a space, as an example, right? The more interesting aspect is the discretionary spending, both in terms of urban and rural, is expected to make a very strong comeback, as Madhvi also mentioned. Rural had already started showing signs of green shoots. How does that come back strongly in terms of volumes? Whether it's FMCG companies, whether it's footwear players, whether it's apparel players, whether it's your QSR players as an example, will play out very, very strongly in Q3, Q4. But the bigger question is, does that sustain after that?
Correct.
And the sustainability then depends on a lot of other factors, including income level sustainability, employment, global risk off. And therefore, I think the next 2 quarters, the earnings might come back strongly with GST rationalization. Whether it's sustainable at that level is something we need to ponder.
So what's the expectation on the earnings front, Amrish? It's going to be a key factor to watch out for. It's going to determine whether FIIs are going to return in a big way or not. What's your sense?
See, if you're talking of Q2, don't really have any expectations. I don't think it will be very different than what we have seen in Q1. And in some cases, it could be worse. And mind you, it could be worse for some of the consumer companies.
Why do you say that?
That's
and
because
which are the pockets in the consumption sector you're seeing that pain come
That's because, number one, post-August 15th, a lot of people had deferred their purchases.
Right.
Because of expectation of GST
cuts.
And despite some of the companies really offering you discounts earlier, what's happened is on the supply chain part of it, there has been an issue as far as GST is concerned. So a lot of adjustments will happen in the September quarter, which could mean a hit on margin for the manufacturing companies.
Right.
So I think...
And for the manufacturers, is it more of difficulty when you talk about the tariff pressures as well? Is that going to build that much more of a chance that there's going to be some kind of dumping? Because where does all this go? And I was talking to Mayuresh just on the offline about this possibility as well. So if America as a market doesn't take as much as it used to, where do all those goods go? And if some of that actually turns into dumping, does that put pressure on the pricing, on manufacturers in the long term?
No, see, I mean, here we need to be very sector specific, we need to be company specific. Those sectors or companies which are very dependent on US, I think they are done.
Right.
At least for the time being. And I think it's going to take a lot of time for them to look for new buyers, new geographies.
Right.
But in a way, I think what has happened is good for India in the longer run, because US somewhere in your comfort zone, you'll be pushed now to move out of the comfort zone. So even if there is a U-turn on tariffs going ahead, I think it's very clear that India needs to look at other geographies, especially exporters.
Right.
Now, if you're talking of consumption space, I think that's the best space to be in right now, because that's where we are seeing a huge sort of a move up. And I think that should be seen from the Q3, Q4 onwards.
Right.
And overall, actually I see the earnings improving. If you're talking of Q3, Q4 onwards, the earnings should start seeing an uptick.
Right.
And as and when that happens, all these FIIs who are staying out, I think we'll have to finally come back.
You agree with that, Mayuresh?
No, absolutely. In fact, as I mentioned offline, right, the valuation matrix that we are working with, and I completely subscribe to Amrish's point that earnings will make a strong comeback. They should sustain reasonably.
Correct.
We've just pegged in a very nominal earnings growth of 8.5-9% as a base case scenario on an FY27 exit, with assumptions of large banks, metal companies, actually not doing exponential growth, but a higher single-digit growth. Even if you peg that in, the base case scenario where the Nifty levels are right now, or 5% from the current levels, I think that should become a base case scenario.
Right.
Now, if earnings improve for all these factors put together, and Trump reversing for some reason or the other, the additional 25%.
That's being very optimistic.
A little realistic, because I think he will need to adjust at some point of time. Let's not forget what Amrish was saying, right? We are having an FTA with the Eurozone as well.
Right.
So if that goes through in the next 2 or 3 months, I think that compensates some element of loss that can come through the next financial year.
Yes.
Having said that, I think if that probably happens, and if you are able to grow at 10-11%, I think the upside for the market relatively opens up,
right,
with a downside risk of 8 to 10%. So I think we are better off from a risk reward perspective.
Correct. But Madhvi, one factor that came through from what Amrish was saying is that you know, people have to have money in their wallets to be able to
Correct.
spend. If you're not going to have the kind of wage hikes that an economy of our growth projections needs to have, then what? Employment needs to keep pace with the kind of growth projections that even the RBI is making. How do you balance that out? What are your thoughts on employment and wage hikes?
So as I said, you know, the income effect is the most dominating factor when it comes to spending. You know, you cannot push me to buy something just because you've reduced the prices of it. I need to be able to have sustainable ways to sort of fund my big ticket purchases like a house or car and stuff like that. And a lot of thinking gets into it, right?
Or there is the risk of a credit bubble building.
Yeah,
and that's
but
not good
that's
ever.
not the case at this point. I wouldn't be putting too much of because RBI had tightened the norms a lot post 2023, and that actually played out against consumption to some extent, especially urban consumption. So, in fact, between 2021, 23, 24, we actually saw the incomes, you know, sort of peaking for the sectors like IT and BFSI,
right,
which is almost 50% of the listed space, right? And that actually had helped the urban income story, urban consumption story, and since then it has only been trending down. In fact, if you look at the last 2 years, net headcount addition from the IT sector has been negative consistently each quarter. It's not going to improve any sooner, as I understand, because not only is there a relatively slower growth that you're seeing in the world dynamic, especially in the US, but also there's now, you know, the service sector which is getting sort of impacted by the trade noise, right?
Correct.
Which was not the case earlier. We've been even told that a lot of IT companies need to now renegotiate their their projects that they had actually priced in earlier. So a lot of things are happening in the IT segment.
So does that kind of suggest that the services sector growth and the contribution it makes to the GDP is something that we have to kind of be rational about, and now we need to build that much more into our consumption uptick?
No, I think services was still, because it's software service and not overall services is still a big chunk, right? Of course, this segment is important for the urban consumption story. There is a slower growth, but I'll be very honest that, you know, if you look at the past cycles of IT segment, right, they've been very agile and very adaptable to whatever tensions come their way. I think they will sail through this one. There will be short-term disruption that will happen, but I think over the medium term, I don't think that the segment as a whole would be disrupted beyond a point.
So if you have to identify, and we are wrapping it up now, if we have to identify the demons that we need to slay, this Dussehra, for sustained long economic growth of the country, which ones would you identify them? I'll start with Mayuresh.
So I think two basic elements to be put forth, that everybody's expecting earnings to come back very, very strongly. Earnings should come back for some reason or the other, as
yes.
They don't come back. And second is the global factor. What happens globally in terms of tariff impositions? Does that have an implied effect in terms of demand dynamics, not just in the US, for a lot of global markets?
Yes.
What does that do to inflation globally as well? And does that take the global risk factor onto our shores as well? I think that is the risk that might still probably persist. Outside that, I think I remain optimistic on the market. एक जो dialogue है, बाकी का market सब जगह, भारत एक जगह और.
Amrish, very quickly if I can.
See, I mean, one point which you raised just some time back.
Yes.
Employment.
Yes.
I think that has to be the focus
be a
area
key factor.
for the
we
government.
Need to peg it.
Yes, because that's a catch-22. You're talking about employment, but where can there be employment without proper skill sets? So both these need to go together.
Right.
Otherwise, the demographic advantage which we've been talking about can actually turn out to be a disadvantage.
Do you think it's got accentuated with the H-1B visa fee hike? That's not going to be too relevant.
That's too small.
Yeah. Right.
And here we're talking of crores of people.
Right. Yes.
Yeah. Because a Ola driver or a Swiggy delivery boy is not employment.
Correct.
Yeah.
Yes.
So
absolutely.
it has to be a proper employment.
Right.
Yeah.
And Madhvi, very quickly.
I'll just pick it up from both the gentlemen, and I would also agree that we need to get out this broken window policy wherein we think that we are adding value to the economy by, you know, breaking things and remaking them when it comes to assets. That is not how we build. I agree with both of them that it's important to invest in R&D. That is the next big lever.
Right.
We need to invest on human capital. That's the next big lever. You know, we can talk about employment. The quality employment is much more important, right? Look at the way China has evolved from being a manufacturing economy to now focusing on tech-driven, now even services for that matter.
Right.
We should have been doing what China is doing right now because we were much ahead of China in terms of tech. right? They were more a manufacturing joint. So they've invested massively on R&D. We've really lagged behind that.
Right.
I think those should be the policy levers, and policymakers, I think, have realized that they need to pick up on those. But
There's a lot
so
of
many,
catch up to do, though.
yeah, there's so much, again, the broken pieces around that they need to fix at the same
Correct.
time. So it'll be a difficult thing for them because we are a democracy, we're not what
Yes,
China is.
yes,
So there
yes.
are other nuances that we need to take care of. Policy making is a very difficult task. We
Yes.
can blame the policymakers. It's very difficult to actually execute
But still
a lot of things.
But it's still the positive takeaway as far as this festive spirit, and we'd like to keep it positive. We do see the potential of the stock markets, and perhaps that's the real story that we track on a day-to-day basis. What happens on the ground, of course, is going to be a tough one. It does have a lag effect. Of course, it takes a bit of time, but we are seeing that bit of catch-up on the policy front as well. Madhvi, Mayuresh, Amrish, thank you very much for joining us on this special show.
Thank you so much.
Dasera Dhamaka. I'm Vikram Oza from me and the team. Thank you so much for making the time and joining us here on NDTV Profit. Have a very happy Dasera.